Anushi and I will take you through the next 45 minutes to an hour of trade. And this show, of course, Anushi, is aimed at getting answers to all of the queries that come through. You want to tell them how to write in?
Yeah, you can just write in to all the WhatsApp queries on the numbers which are flashing on the screen. So do tune in and yeah, drop us those queries.
And you can call us as well on the number at the bottom of the screen. We'd love to speak to you. Let's very quickly take you through where the markets are right now. And it's another day of very listless trade, about 0.25% lower for the benchmark Nifty 50, trading with a narrow range, and seemingly that movement lower, barring yesterday's up move, which was not very much to speak about in any case. And you have the broader markets that are also a little bit listless, just about 0.1% higher, or less than 0.2% for the mid-cap index, about 1/10 higher for the small-cap index as well. Let's very quickly take a look at the market breadth as well, just to see where it is right now. I won't be surprised if there's not too much to speak of. There you go. There are more advances on the screen than declines, but not too many very big movers. There are a few stocks in the news, of course, and among them you have the likes of Dixon Tech, which has announced a collaboration. It's up about 3% or so. Centrum on the back of fundraising. You have Biocon, which has a new drug that it has gotten approval for, insulin related drug, which is going to be a big positive for the company going forward. You have ICICI Lombard that's reacting to numbers, or it was at least at the start of trade, and a few other stocks as well. But let's jump straight into things. We've got Rajesh Agarwal of Om Capital actually, I should say, and Vaishali Parekh of Prabhudas Lilladher joining us this morning. Thank you so much as always for taking the time. A very good morning to the both of you. We have our first caller in, so let's listen into what Dheeraj has to say. Dheeraj, very good morning to you. How can we help you today?
Good morning, sir. My query is regarding ABB. I purchased 25 shares of ABB at 5510, sir.
Okay.
And the stock touched an all-time high like 1 month ago, like around 6,080 rupees. So should I hold it for the short term? Should I add more at lower levels is my query, sir.
And how do you define that short term?
Like for next 4 to 6 months, sir.
Okay. We will answer your question. I do want to draw your attention, by the way, to the news flashing on the bottom of the screen. Sources talking about a QIP from State Bank of India. This was on the cards. Remember, 25,000 crore rupees is what they are planning to raise. And we spoke about it when they got that board approval for the raising of those funds. We will get in Vishwanath Nair in just a bit, just to get you a sense of where the pricing is going to be, some of those details on your screen. So we'll talk about that in just a bit. I wonder if the stock is reacting. It's up about 1/3% or so, and not doing too much. State Bank of India. I wonder if it's recovered though. Okay, so it's more or less where it was, 1/3%. I guess to a certain extent this was anticipated, so I wonder if the pricing is going to have any bearing on the share price. We'll talk about that in a bit. But on ABB, where Dheeraj has bought 25 shares at a price of 5,510, Vaishali, I'll come to you on the chart. Short term, he's defined. What would you say? Should he hold on? Should he add more?
Very good morning, Alex and Rajesh. Yes, so ABP, I think overall it has just been consolidating at these levels. So with keeping in mind shorter term view, 5,400 should be taken as a stop loss. And I think if 3 to 4 months is the horizon that he's looking at, I think the stock can bounce towards 5,800 to 6,000 levels. But 5,400 should act as a near-term strong support. So keeping that in mind, continue holding.
Okay, so that's the view that we are seeing for ABB India. But next we have a query with us, and this is from we are seeing that it's bought about 1,000 shares of Inox Wind, and this is at a price of 186 that we are seeing. Wants to see that the stock has been under pressure, and it is currently Satyanarayan is facing a loss of 22,000 on the counter. Vaishali, let me come to you on this one. What should be your view for Inox Wind? It's been under pressure. It's down about 12% as well if you look at the year-to-date levels.
Hi, so yes, the stock has broken its near-term support levels. So I think right now it is definitely showing signs of weakness. But now that he's held on for so long, continue holding with 150 as the next support. Because once we see a bounce coming in, and if this stock goes above 180 levels, it calls for a further upside move. Till then, I would say the bias is corrective, but keep a stop loss of 150.
Okay. All right. We've got our next caller. Rachit is calling us from Mumbai. And I believe, Rachit, your question is on Star Health. Very good morning to you. How can we help you today?
Yes, sir. Very good morning. I'm from. So I want to ask you the question about the Star Health. So, can I hold it for more 6 months, or should I invest my money somewhere else, like in Amara Raja Batteries or somewhere else?
Why 6 months though? Are you just looking for a trading view?
Yeah, I'm just looking for a trading view.
Okay.
Like if I can get some more profits in it.
Understood. All right. And why Amara Raja? Why have you identified it? What stood out to you?
Because the growth potential is good in Amara Raja Batteries for a perspective of 1 to 2 years. That's why.
Okay. All right. You know what? I'm going to go to Rajesh on this one. Rajesh, Star Health or Amara Raja play in completely different categories. Star Health, he's bought at levels of 425.7 rupees or thereabouts. And the stock is doing particularly well in trade today. Should he hold for a period of at least 6 months? And if not, should he move to Amara Raja?
Good morning, Alex. Good morning, Anushri. Good morning, Vaishali. As far as Star Health is concerned, first let me take one by one. Star Health is a good company, no doubt on that. And with the kind of numbers which we have seen, ICICI Lombard or HDFC Life coming in, I have a feeling that somehow the insurance pack is going to give satisfactory numbers as such, although not that great, but still on a satisfactory note. But coming to valuation, I think almost 450, 460 odd levels is the optimum which we would think in the near future. So it's better to book profit in Star Health since you are setting on a good amount of profit. Amara Raja, yes, of course, it's a very good long-term play, not only because of the fact that it has got a lot of OEM tie-ups with them, the auto industry is going better day by day with new launches and all. They are moving into EV batteries too, and they have a very good replacement market. Valuations are also comforting, I would say. So from these levels, in the next 1 year or so, we expect a 15% kind of move in Amara Raja. So one can switch from Star Health to Amara Raja.
Does that bear out on the charts as well? Very quickly, Vaishali, would you say that that makes sense?
I would say actually one can, keep in both stocks. There is no rigidity that just gets stuck to one stock. So as far as Star Health is concerned, chartically, it's quite appealing. I mean, it is showing in the process of it's got into a trend. We've seen a little bit of a consolidation, and today's candle shows quite a bit of hope. So I would say keep 420 as stop loss, because once we see this range of 400 and 480 range breaking out, it confirms a further strength. So according to me, distribute your money in both these stocks, because overall this should do well as well.
All right, on to an NDTV Profit exclusive. I drew your attention to the State Bank of India update that was flashing at the bottom of the screen. And sources tell us that that issue of 25,000 crore rupees QIP is around the corner. And Subhana Sheikh is joining in with the details on the pricing and everything that you need to know. Subhana, what are you picking up? Morning.
Good morning. So the SBI's QIP, which is the biggest QIP in the country so far that we're seeing in the Indian market, is going to be priced at a 2 to 3% discount to SBI's current market price. Now, currently, shares of SBI are trading around 819 rupees. What sources are telling us that the QIP is expected to be priced at a 3% discount, which is going to be a potential discount. LIC is going to be a major investor. Apart from that, mutual funds are also going to seek their bids for this 25,000 crore QIP issue. Now, it's important to understand that the last time when SBI had come with a QIP, which was back in June 2017, they had raised 15,000 crores, and back then also it was issued at 1% discount. So the price that they had issued it was at 287.25 rupees, but obviously that was back in 2017. So the current and sources are also telling us that the issue could be launched any time from here on.
Okay, so that's the update that we are looking for SBI, particularly big size of the QIP that we are seeing. But with that, let's move to the next caller, and this is Rahul calling us from Chennai. Hi Rahul, how can we help you on the show today?
Hi, good morning, madam.
Good morning.
I just want to check on TCS, madam. Like I'm holding 40 share at 3300. My horizon is for 9 to 12 months. I'm expecting around 18 to 20%. So if I should add now further, like at what price I should add, or is it whether we will be able to get 18 to 20%? So that's my query.
Okay, and Rahul, just a little bit on this. Can you just give us an outlook in terms of when you had marked an entry into this stock? What was your recent?
Recently only, madam.
Oh, recently only.
After
Okay. Okay, so let me take this across to Rajesh. Rajesh, we just seen a couple of these IT names coming out with their Q1 results, and the trend that we are looking so far, it is on the weaker side of guidance that we are looking at. Considering that, what is your view for TCS since it's a recent entry that he's made into the stock?
See, there are two aspects to this. One, the numbers were not that good. I would rather say disappointing for both of them, whether it was TCS or HCL Tech. Both gave disappointing numbers, and the street punished them for that. And I don't think there would be any kind of change in the way the results are there in the next 1 or 2 quarters because of the fact that tariff-led inflation would be there in US, and that would be curtailing the discretionary spend. And for that matter, and the entire IT pack will be under pressure. So 18 to 20% in the next 1 year or so is a long call to take. That I can say. But otherwise, if you look at the companies, be it TCS or Infosys, they are strong companies with strong balance sheet. They give out good dividends. And the best part is even the new orders in the new territories like machine learning, AI, and all are coming into all of them. So don't keep that expectation of 18 to 20%. If you can hold for maybe 18 to 24 months, maybe you can get that kind of return. But there are better opportunities in market at this point of time. Maybe a PSU banking space or a NBFC would be a better bet than going for IT.
A quick couple of names that you would suggest in that?
See, in NBFC would be the first choice would be Bajaj Finserv in the large cap space, no doubt on that. And the mid cap space, I would go for Poonawalla or Jio Finance.
Got it. All right. Our next question is on United Spirits for a period of 1 year. Peter's got this next question. And Vaishali, coming to you, is this a good time to buy for a period of 1 year? What's the view?
Well, I think overall these stocks have been doing very well, and right now also I think there is still scope of good upside coming in it. The current market price is around 1368, and it's shown decent type of correction. So even if it was to witness still some more corrective move, I would say accumulate with support of 1320, and if 1 year is the horizon, look for a target of 1550 to 1600 levels.
Okay, all right. So that's a view on United Spirits. Chandu is calling us from Hyderabad. Chandu, very good morning to you. How can we help you today?
Hello.
Chandu, hi. Morning. How can we help you?
Hi, very good morning. Good morning all. Yeah, actually I bought Shriram Finance around quantity 443. Average price of 679.
Yes.
I bought from long-term purpose.
Yes.
Really?
Yeah.
So I just following like a buy and dip strategy. So is the right stock to hold on for long term?
Yeah. I got your question.
At what price I need to I need to add it.
Yeah. So I'm just wondering, Chandu, did you watch the opening show, if at all? Because we were discussing Shriram Finance in the context of HDB Financial and the commentary that they gave on commercial vehicles. Did you catch that?
Yes, yes.
You watched that?
That's the reason I bought it actually.
Okay, that's the reason. Okay, fine. All right. So let me go across to Rajesh. Rajesh, so the stock's under a little bit of pressure. So is Chola in trade today, seemingly because of HDB Financial's commentary on the fact that vehicle loan volume or disbursements are not taking place, and the pace has slowed. And also there seems to be a little bit of concern about a few delinquencies cropping up. Is this a short-term phenomenon? Would you buy on dips? He's already bought at levels of 679.
See, that's a fact that some delinquencies have cropped up and the pace is not there. But I believe that this is a short-term phenomenon, maybe next 1 or 2 quarters that would be there. But going forward in the longer term, these companies are going to do well, be it Shriram Finance or Chola or HDB. As far as Shriram Finance is concerned, they are moving into non-vehicle loan business too, and the valuation at this point of time looks great. So if somebody is looking for a time horizon of maybe 12 to 18 months, I think these are buying opportunities when the environment is very negative. So if by any chance it falls to around 625, 630 odd levels, that would be a good entry point. Somebody holding can continue to hold if somebody is ready to hold for maybe that 12 to 18 months period. I won't be surprised if around 15-20% upside from these levels are there.
Yes, so despite the commentary that we are looking at, it's an overall optimistic outlook for the future that we are seeing for these couple of counters, Shriram Finance being in particular focus over here. But next we have a question, and this is from Jitesh. He's writing us from Bangalore, and he has a question regarding SAN DLM. He's bought 100 shares, and this is at a price of 704. From there on, we've seen a significant downtick in terms of where the stock performance has been, and it's currently facing a loss of 22,000 on the counter. The question is whether he should continue to hold or sell this. Vaishali, coming to you for this one.
I think the stock, nothing much is happening. I mean, we have seen the recent high of 750 levels. And from there on, we are seeing a gradual up move, and it's into a consolidation. So I would say continue holding, because this stock in times to come should do well. It is currently at a support level. So 460 acts as a very good support. If these support levels break, then it negates my view. But till then, I think at least wait for a bounce up to 540, 550. Then we can have a relook.
Got it. All right. So hold for now is a view on silent DLM. We have to slip into a very quick break. We'll be back on the other side to take a lot more queries. So do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Welcome back. You're watching Ask Profit, and we'll come to your queries in just a bit. But before we do, let me tell you about what comes up at 11:30. A lot of you know this already, but for those of you that don't, we have a show called Know Your Company, and the idea is to help you understand fundamentally and valuation-wise what a company is all about. And today on the program, the team has pulled up VIP Industries. And why are we talking about VIP Industries on KYC? You will recall that there's a transaction that took place just a short while back, earlier this week in fact. So the question is, can the new promoters, who are private equity, turn the business around? It's had problems with regard to inventory, with regard to losing market share, margins have been scrimped, all of those issues have come up. So will the strategy change? How quickly will that inventory that I spoke about unwind? Will the pricing challenges turn a corner? All of that is going to be discussed on the show. And we've got Jinesh Joshi, who's a research analyst from PL Capital, to talk about what he thinks about that stock and the company going forward. Remember, earlier in the week, we also caught up with the management of VIP Industries, and we spoke, not management, actually the promoter, and we talked about why the sale of that stake took place. 32%, if I remember correctly, was the amount that was sold. It was a 15% discount to the closing price of the previous day, and the stock, in fact, ended higher on the day when that deal was announced, about 5% or thereabouts. All right, the next question is coming all the way from Ireland, and we've got Tej Reddy, who's writing in, asking about Marksans Pharma. He's got 100 shares. I do not know what level he's bought at, but he's considering adding more at these levels for the next 5 years. Rajesh, this question is specifically directed at you. What do you think about Marksans Pharma?
No doubt it's a good company, doing very well. The product profile is good. But for a 5-year long period, I would say go for large cap names which are trading at a good valuations at this point of time. Maybe a Cipla or a Dr. Reddy can be a good company, or specific CDMO players that are going to do well in the next 2-3 years, like the likes of Laurus Lab, which has been giving good numbers from the last quarter. Q4 numbers were very good. They have moved into big time into CDMO. 3,400 odd crore capex has already been done. So it's better to go for either large cap names or something like, say, CDMO players which are doing well and are likely to do well in the near future.
Okay, so that's the view that we are seeing for Marksans Pharma. But with that, let's go to our next caller, and this is Kaushik calling us from Hyderabad. Hi Kaushik, how can we help you on the show today?
Hi, thanks for taking the call. So I have 57 shares of HDB Financial Services, which I got from IPO, and yesterday there were QM results that got released, and I think there was some, the profit has been declined. So I would like to know the outlook for 6 to 9 months.
Okay, I'm sure that you have tracked the results, and I think your concerns are related to the delinquencies that we are seeing, and also on the CV commentary side of the business. Is that why you want to know a detailed outlook on the same?
Yeah. So I would like to know if I can hold a stock or not.
Okay.
But
yeah, please go on.
Depending on the other results that we may get in the future.
Okay, so let me take this, since your time horizon is for 6 to 9 months, let me take this with Vaishali first. Vaishali.
So
I'll take it with Rajesh first, on considering that we just had the result update on this. Rajesh, what is your view with HDB Financial? You earlier spoke about it, but more detail about your overall outlook on this.
See, it's a very good long-term play, no doubt on that. Strong parentage, with interest rates going down, the NIMs are going to improve. Yes, this quarter was bad. Bottom line went down. But these are things which can happen 1 or 2 quarters, but that doesn't mean that the fundamentals have gone wrong. So I think if somebody is looking for a time horizon of 6 to 9 months, one can continue to hold. And if by any chance it goes around to 750 odd levels where the IPO price was, if I'm not wrong, 740, 750, then again that would be a very good entry point. Continue to hold.
Hold is a view on HDB. Very, very quick follow-up. Would you buy these levels or wait, Rajesh?
HDB?
Yes.
I would wait for some more corrections.
Okay. Federal Bank is the name of the next counter that we're talking about, and John is writing in from Dubai. He's bought at levels of 215.8 rupees per share. He's got 5,000 shares, and so he's incurring a loss right now. He's wondering whether to hold for a period of the short term. So, Vaishali, on the charts, what's the view?
Short term, it still continues to be in an uptrend, and if depending on your time horizon, but the nearest support is 210. So I would say keep a stop loss of 210, and if the trend continues, you can look for a target of 220. So that's how I'm looking at this stock at this level.
Okay, so those are the levels that you should be watching out for Federal Bank. Next question is from Sundarajan from Chennai. He has about 100 shares of PSC and is currently locked in about a 10% of a profit over here. Should he accumulate further? That's the question. Let me take this with Rajesh. Rajesh, your view?
Depending on time horizon, I would say. It's one of the stock which we have been recommending since very long period of time. And if I'm not wrong, it was 500 come bonus. That means 160, 170 or whatever. So somebody sitting at those levels is on a comfortable level. But somebody bought at a higher levels, the risk reward ratio is not in the favor. But going forward, considering the fact that the business of BSE is going to be there, equity culture is going up. So balance sheet is very strong. They have 15% holding in CDSL, Star Mutual Fund, Gift City, and the Sensex futures has been taken very well. The market share has gone up in index options also. So I think if somebody is ready to hold for a long period of time, maybe 12 to 18 months or even higher, it's a good hold at these levels. But for short term, I would say keep some stop loss. This stocks gives very wide correction in the last 1 or 2 years. If you have seen, sometimes it have given a correction of 30 to 40% of those levels. But for a long-term horizon, very strong company, continue to hold.
Okay, strong company, BSE. Let's talk about the next one. Azad Engineering is the name of the counter we're talking about next, and Dinesh from Vizag wants to know about this. He's bought levels of 1,733 and he's got a total holding of 2,58,000 if I'm not mistaken, or current value is that. I do not know the exact quantity. I'm not that good at mental math. But the question is, should you do, what are the long-term and the short-term prospects? So I'm going to go across to you, Vaishali, because you're not stipulated whether he wants to hold for the long-term or short-term. What is the view? What is the view on the charts?
Well, I'm looking at the chart of like from the weekly time frame, also from the daily. I think currently it's sitting at a cluster of moving average, which implies, well, the stock is at good support levels, make or break levels. But I would say continue holding, because long term, if I'm looking at it, it's in a good trend. And I think it's a good buying opportunity also, 1,500 as a support. And once we see the stock picking up momentum, I think gradually for a shorter term time frame, look at a target of 1,650 to 1,700. If we see the stock sustaining about that, in all probability, this can go towards 1,900 levels too. So I think it's a good buy at these levels.
Okay, a good buy with the target price being of 1,900. So next question is from SM Reddy from Hyderabad. Now he's bought about 2,000 shares of Adani Wilmar, and this is at a price of 265 that we are seeing. The stock price, if we see, is AWL Agri that you're seeing on the screen now. Rajesh, let me take this with you. What is your view on this counter?
See, long term seems to be very good. But in the shorter term, I don't think anything would happen in the stock price in the near future. Maybe in the next 1 or 2 quarters, it will take a long time to give some meaningful returns. So it's better to switch from this company to maybe some other FMCG names which are doing well. The best of the lot at this point of time is the market leader, HUL, with a whole lot of brands under their belt. And the second would be Imami, I would say. Switch from AWL to either HUL or Imam.
Yeah, Priya Nair just being announced as the new Chief Executive Officer. She will take charge in just a few days, and a lot of investors now excited about the prospects for HUL going forward. We've got our next caller. Neeraj is calling us from Kolkata. Neeraj, very good morning. How can we help you today?
Yeah, Alex, very good afternoon. So I'm holding 6,000 shares of KPR Mill.
Okay.
Since last 10 years.
All right.
At the rate, yeah. But this is after splits and all that.
Yeah.
So at the rate of 70.
Wow.
So, and I've already sold 1,700 shares out of that. So now I am left with 4,300.
Okay, so your original price. Okay, fine. All right. So 4,300 shares is what you have. You originally had 6,000. So I think the numbers on the screen will have to be updated. This is what I'm showing on the screen is what your original holding was, which is 6,000. So what's the view that you're seeking, Neeraj?
So I wanted to know that should I sell some more or should I continue to hold them
So,
like, 4,300 shares. Yeah.
help me understand, as a portion of your portfolio, is this a very substantial portion? For example, is it more than 10%, 20%? Is that it? Or is it relatively smaller?
Yes. You can say it is 20%. I'm holding many other shares.
Sure.
Like,
But
yeah,
because
like
of the kind of
Voltamp,
run-up that you've seen in the price, it has become a 20% share. So let me go across from that perspective to Rajesh and give you some perspective on how to manage this. Because Rajesh, the trade-off is he's making healthy gains, but as a result of that, it's caused a bit of a situation with his portfolio, and concentration risk exists. So should he take money off the table? How much should he book?
First of all, congratulations on the kind of return you have generated, and this speaks volumes about the kind of long-term investment in good companies do. As far as your investment is concerned, first, the company is very good, doing very well, and with the kind of noise, global noise, I would say, regarding Mr. Trump is going on, I think textile as a sector is looking very promising for India as such. KPR Mill is one of them, doing very well. So what I would suggest is at least book 25% of your profits in this stock, maybe 25% quantity you can sell and switch to some other company. And the rest of that you continue to hold. So that way what will happen is your investment will come with some return, and your entire remaining stock will become free. So that you can continue to hold even if some correction is there. So ultimately you will be a gainer, and long term looks good. We have a target of around 1,280 rupees in the next 6 months.
So continue to hold on this one is what we are saying for KPR Mills. Now next question is from Anil from Mysore, and he has shares of Voltamp Transformers. Wants to understand whether he should continue holding this for the next 3 months. Vaishali, let me take this one with you.
So I think all these stocks, transformer stocks are doing very well. Voltamp also has done its rally substantially right from the recent low of 6,500. So in my opinion, one should always keep these stocks because fundamentally also they have a lot of strength. So I would say if 3 months is the horizon, then I think one should expect a range of 850, because if the stock retraces, 850 would be the immediate support. And once you see a pickup coming in, I think this stock can go towards 11,500 as a trading strategy. And if you are not in a hurry, please do hold. Look for a target of 14,000 as well.
Okay. All right. We've got our next caller. Arvind is calling us. Arvind, namaskar. मैं Alex Matthew बोल रहा हूँ. आपका सवाल क्या है?
सर मेरा सवाल है कि मुझे इलेक्ट्रा ग्रीन टेक एक जो कंपनी है जिसका अभी रिसेंटली ऑर्डर भी कैंसिल हुआ था 300 बसों का महाराष्ट्र गवर्नमेंट से मई में, हाँ, इसमें एक्चुअली बहुत ज्यादा करेक्ट हो गया है. मुझे 3 लाख रुपए इसमें इन्वेस्ट करना था सर.
ओके.
मगर तो मैं फंडामेंटली 3 साल के लिए इन्वेस्ट करना चाह रहा हूँ और कंपनी का फंडामेंटली जानना चाह रहा हूँ, क्योंकि जैसा मुझे मतलब जितनी चीजें मैं जान पाया हूँ तो मुझे वन ऑफ द बेस्ट बस बनाने वाली कंपनी लगती है ये, और मैं चीजें जानना चाह रहा हूँ. और कितनी बस कंपनीज आपने स्टडी की हैं? कमर्शियल व्हीकल स्पेस में आपने किसी और कंपनी का रिकॉर्ड्स देखा है? सर इलेक्ट्रा ग्रीन तो ये है कि इसलिए क्योंकि ये टोटली ईवी में ही डील करती है, मतलब इलेक्ट्रॉनिक बसेस में ही डील करती है, और टाटा भी है. तो टाटा के साथ अभी कुछ इश्यूज चल रहे हैं, उसके फॉरेन की गाड़ियों वगैरह का, वहाँ से कुछ सेल्स आ नहीं रही है. तो वो तो नेक्स्ट ईयर में ही कुछ बाइंग की जाए, तो नेक्स्ट ईयर के लिए ही बाइंग की जाए. अभी तो कुछ दिखेगा नहीं, टाटा में भी कुछ नहीं दिखेगा सेल्स. और आपका अशोक लेलैंड एक मैंने देखा है, पर अशोक लेलैंड काफी ज्यादा महंगा लग रहा है मुझे एट प्रेजेंट.
जी, मैं राजेश जी से सवाल ले लेता हूँ. राजेश, ये जो सवाल है इलेक्ट्रा ग्रीन पे, and you don't need to laugh so much about me asking a question in Hindi, okay? All right, but let me ask you this, and you can give him an answer in Hindi instead of me struggling so much. So the question is obviously on the prospects, because you had a situation where certain orders got cancelled, and whether or not it's going to be able to execute a lot of these orders that it has gotten. So would you suggest buying a large quantity? 3 lakh rupees is what he wants to invest.
See, Alex, as you said, let me speak in Hindi. देखिए, ऐसा है, इलेक्ट्रो ग्रीन नो डाउट अच्छी कंपनी है, बस के अच्छे ऑर्डर्स मिले हुए हैं. कुछ ऑर्डर अभी कैंसिल भी हुए हैं, बट कोई भी कंपनी में आप जब ऑर्डर बुक देखते हो और ऑर्डर नहीं आ रहे हैं तो उसमें एग्जीक्यूशन कैपेसिटीज भी देखनी पड़ती है कि उनकी एग्जीक्यूशन कैपेबिलिटीज कितनी है, कितना वो एग्जीक्यूट कर पाएंगे, और वैल्यूएशन क्या है। कोई चीज बहुत अच्छी है लेकिन बहुत महंगी है तो फिर वो लेने लायक नहीं होती है। आज आप इलेक्ट्रा ग्रीन को भी देखोगे तो 3 डिजिट के पी पे ये ट्रेड करती है। तो मुझे यहाँ पे वैल्यूएशन कंफर्ट बिल्कुल भी नहीं आता है। इससे बेहतर मैं समझता हूँ कि अगर आपको ऑटो पैक में ही करना है तो आप हुंडई में जा सकते हैं, जहाँ की वैल्यूएशन बहुत अच्छे हैं। हाँ, वो पूरी तरीके से इलेक्ट्रिक व्हीकल में नहीं है, बट उनका एक पार्ट, जैसे भी क्रेटा भी इलेक्ट्रिक व्हीकल, इलेक्ट्रिक ईवी क्रेटा लॉन्च की गई है, वो भी बाजार ने अच्छी तरीके से लिया है, वैल्यूएशन अच्छे हैं, एक्सपेंशन हो रहा है। तो मुझे लगता है कि इलेक्ट्रा से बेटर वैल्यूएशन कंफर्ट को देखते हुए इस वक्त हुंडई मोटर या टू व्हीलर्स में देखेंगे तो बजाज ऑटो रहेगा।
ओके, तो इलेक्ट्रा ग्रीन का ये व्यू था हमने जो देखा, बट विद दैट नेक्स्ट मूव टू द नेक्स्ट क्वेरी. दिस इज Hari writing us from Chennai, and he's bought 100 shares of Waaree Energies, and this is at a price of 3,290 that we are looking. This he had made this entry 6 months back that we are looking at. Wants to understand the short-term view on this counter. Vaishali, what's your view for Waaree Energies?
Also, as a disclaimer, we have recommended this stock, and I think technically this looks quite upbeat. Look for a target. It's already gone high, so right from a low of 2,200 levels to now 32. So depending on your time period, I would say now from here on, keep a range of 2,900 as your support. But if you are not in a hurry, look for a target of 3,800 levels from here on. So we are positive with we have recommended at lower levels. So I suggest to keep a trading stop loss. And if he needs to buy, then I would say accumulate with 2,900 as support levels.
Okay, so that's the levels that we are looking for Waaree Energies. Overall, a positive stance on this one. But next we have a caller joining us, and this is Raj calling to us from Delhi. Hi Raj, how can we help you?
Good morning. I have Tata Technologies that I've bought at 980 rupees. I have 200 shares. The stock seems to be bottoming out at the moment. Just want to check, should one average here? Is it the right point? What's the my purview is about a year and a half from here.
Okay, Raj, what's the
should I hold this, liquidate this?
Okay, sorry, what's the time horizon that you just specified?
Not more than a year to year and a half.
Okay, so fundamental outlook is what you're looking for this one. Rajesh, let me come to you on this one. What's your view for Tata Tech?
Despite being a very good company, it has not done anything for the investors. At the listing time, it was around 1,400 odd rupees. Now it's 700 odd rupees. So it's almost 50% correction from the top. But fundamentally, it's a very strong company. Previously, they were catering only to Tata Motors. Now they have developed new products and moved to new territories, gained new customers too. Fundamentally, I think one can go long for 1.5 year with a target of maybe 830, 840 odd rupees. This quarter numbers were not that good, but that's one of, I think, because the entire IT pack is struggling. Long term looks very good, belonging to Tata stable. One can go long on this with a target of 840.
Okay, all right. So go long on Tata Tech is the view, and things might just look better. Ranjan Karkera is writing in from Bengaluru, and he's saying, hope, Alex, you booked a Tesla yesterday. And well, I wish that I could. Unfortunately, I don't have the money, and I invest most of it. That's a good answer, right? All right. So Varun Beverages is the name of the counter that he wants to know about. 466 rupees is the buy price, and he wants to know about the short-term targets. He's making a small gain at this point because the stock price is not too far away from his buy price. Vaishali, on the charts, what's the view?
I think it qualifies a good buy at these levels. Short term is the horizon, then 500 is the hurdle where one can book profit. But if you are still ready to hold above 500, ready for 540 as well. So risk reward ratio from here on is pretty favorable.
Okay, all right. Murli is calling us from Bengaluru as he normally does. Murli, very good morning to you. How can we help you today?
Good morning, Mr. Alex.
Good morning.
This query is on Just Dial, whose results have come yesterday, the first quarter. I bought 1,100 shares at a high price of 12.35.
Okay.
And I bought last October 24.
Right.
So almost close to 8-9 months. And the results are last quarter was excellent result. This is moderate result. It shows a decent performance, no dividend yet, and 5,400 crores cash on hand, and some connection with Reliance Group.
Right.
And second, it is not performing as per my expectation. Rather, I am incurring a significant loss.
Yes.
So what shall I am willing to wait for long term. If they promise dividend probably next year, and they are sitting on a huge pile of cash of 5,400 crores.
Yes.
It is a huge book value,
right,
and low PE also, around 13-14 times.
So you want to know whether
So
to
all
hold.
these things in mind, what shall I do?
Yeah, I got it. Rajesh, you've heard the question, very detailed. So it is losing about 3.5% in trade today. Would you hold?
No. Rather, I would try to switch from Just Dial to some other company because I don't think the long-term prospects look that exciting to be in this stock at this point of time. The gentleman is having losses. So what I would suggest is today the stock is in the correction mode, maybe 13.5% correction. Wait for a uptake, maybe a bounce back would be a good level. 950, 980 odd levels would be a good level to exit. Unfortunately, you have to book losses.
Okay, so that's the view that we are seeing for Just Dial, take an exit in this counter. But with that, let's shift the focus to the next query, which is there. This is Nikhat from Bangalore writing to us, and he's holding 50 shares of BHEL, and this is at a price of 324. Horizon being 1 year, wants to understand whether he should hold or sell this one. Rajesh, coming back to you for BHEL.
See, power in the sector is looking very good, and with kind of order book BHEL is having, I think the long term looks good. But the kind of entry price Nikhat has, I think that would be a very long call to take. For the next 1 year or so, maybe 280, 290 or levels would be a decent target to have. So at this point of time, it's a hold.
Yeah, all right. Pradeep from Bengaluru is calling in. Pradeep, very good morning. How can we help you today?
Very good morning, Alex. See, I'm having 100 shares of Goldiam International.
Yes.
Bought at 144 rupees.
Okay.
So the stock has gone high, but recently it has been just consolidating.
Right.
So I just wanted to know whether I should hold or whether I should book profits at this stage.
Okay. And
I'm a long-term investor.
Okay. Thanks for clarifying that. Rajesh, I'll go to you on the fundamentals. If you've got a view on Goldiam, would you say a hold is recommended?
Book profit, I would say. You are setting on a good amount of profit. Diamond jewelry and all, the numbers are not that exciting last quarter at least. So at this point of time, why not book profit and switch to some other better names like a Titan or a Trend that would be in a better position and a better name.
Got it. All right. So it's time, I believe, for the rapid fire. Yes, it is. Rajesh and Vaishali, I'm going to come to you on questions over the course of the next 2 minutes. The first one is KFin Tech, and Chandan Jain from Hubli wants to know whether it can be bought at the current price. 1284 is the price. Vaishali, what's the view?
I'd say yes, buy with a stop loss of 1220 for a target of 1350, 1400.
Okay, a number of people want to know about HCL Tech and whether it should be bought at the current market price. Ravi Chandran specifically from Bengaluru is asking. Vaishali, coming back.
Well, so I think it's 1567. Do buy it with a stop loss of 1500 just for a bounce back. There is no reversal in trend, but bounce back for 1650 target.
Anantraj, I'm coming back to you, Vaishali, on this one. Anantraj is the name of the counter. We've got Shailaja, who's bought at levels of 559, and she's wondering whether to add today. What's the view?
Wait for a little bit of a retracement because it's currently at a resistance of 620. So I think 570, 580 would be a good level to add again.
Rajesh, Polyplex bought 3 years back at an average price, I believe, of 1,316 rupees. Would you hold, and what are the prospects? Jaya wants to know.
Seen very bad days, but now the things are looking good. One can continue to hold.
Okay, GMR Airport bought at levels of 85. This is Soumya. 85 is the buy price. What is the target in the short to medium term, and what is the recommended holding period, Vaishali?
So GMR Airport 92 right now. Continue holding. I think this can go towards 100 plus and keep a stop loss of 88. Holding period could be 2 to 3 weeks also.
Okay. SBI bought at levels of 490, attractive price. Venkat Ramani wants to know, holding period is 15 months. Should he add more at the current price? Rajesh, what's the view?
Add.
Ramya from Chennai wants to know about Wipro. For a period of 3 years, she's been holding at a price of, okay, I don't know the price, but would you hold for another 2 years, accumulate more, Rajesh?
Hold.
Hold. All right, well, we've done 29 queries. There seems to be a little bit of a barrier at that point. We're going to try and break that tomorrow and take more than 29 and maybe hit 35. Let's see if we can do that. But on that note, Rajesh, as well as Vaishali, thanks so much for joining in and for answering all the questions that you did. Always a pleasure speaking with you.
Sure.
All right, that brings us to the end of this edition of Ask Profit from the team that put this show together. Thank you so much for watching. As we pointed out to you, Know Your Company is up next, and we're talking about VIP industries. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the Hello and welcome. We're all looking to make good investments, smart investments, and one space where you can do that is by looking at turnarounds. Here's a business where we've seen a couple of years where cash flow has been a drag, margins have been a drag, inventory has ballooned, and in order to try and retain or capture market share, they've let go of pricing in a big fashion, and therefore discounts have been large. All of that likely to unwind, plus there is a change in promoters. So you've got a lot of things happening. You have a private equity firm coming in and buying stake, and we're talking about VIP Industries now, if it's not already very obvious. And you also have the promoter who's come out and spoken to us as well as plenty of others to talk about what he feels to be a business which will take time to turn around. But then you have a private equity player coming in and buying large stake, and therefore is of interest to us. Can new promoters turn the business around? How easy is that going to be? Well, the current promoter certainly doesn't feel so, and we'll pull out what he said. But what I'd want to understand better is that there has been some commentary which has come through as well at the end of Q4, where they've said that we'll see a bottoming in terms of inventory in Q2 FY26. How reliable is that, is what I'd want to know. Whether that is even doable. Double-digit top-line growth and maybe a 15% aspirational margin. Can they really do that? And if they do, then the numbers will turn around very, very quickly. Otherwise too, it will, but maybe it'll take a year or two. So we'll have to play that well. The third piece is with regard to growth and margins, and I spoke about that just right now. Double-digit growth and margins coming through. E-commerce is hurting offline. What's the play therefore? Is Bangladesh dependency a problem given all the issues that are happening there? Will pricing challenges turn a corner? And this is a big one, because this will likely also lead to gross margins expanding. So want to wait and watch on that one. So can the following happen? And I've spelt it out. Double-digit top-line growth, gross margins of 50%, and EBITDA margins of 15%. And if this happens, you'll likely start to see a bit of a turnaround where the business is concerned, and valuations on the basis of all of this, how does it stack up? Let's look today at VIP Industries, and I'll start off with what the company is all about. This is no small one. It's the #1 organized luggage maker in the country. It was founded in 1968. Well, not just the country, it's probably one of the largest in the world. It's in fact the second largest in the world. And when I spell out the brands, you'll probably get better context of it. It's selling products in 45 plus countries, has 14,000 plus sales points in India alone. And it's Asia's largest, but the world's second largest luggage maker and travel gear company. Let's talk about some of the products that it has and what it does. Typically hard luggage, soft luggage, duffel bags, backpacks, ladies' handbags, travel accessories. In terms of brands, VIP of course is the marquee brand, but outside of that it does Sky Bags, Carlton, Aristocrat and Caprice. All of those are solid brands by their own standing. So really you have here a company with all of these brands, one of the top companies in the luggage space in the world, trading at around 6,000 crore in terms of market cap. And that's where it starts to maybe become interesting. Let's look at the value chain now. First, you have in-house designs, which thereafter is taken to manufacturing. Manufacturing happens in India and Bangladesh, and thereafter distribution happens. There are e-tailers, EBOs, as well as e-commerce. The distribution happens across all types of retail. Now, you're looking at the business model. One, you manufacture in India, Bangladesh, outsource the selected products. The India-Bangladesh combined has around 10 factories. 8 factories are sitting in Bangladesh. They sell through own stores, multi-brand shops, e-commerce and dealers. And the main markets are India, and it exports to over 45 countries. Raw materials, well, they use polymers aluminium, fabric, zippers, trolley parts and hardware. Some of that, of course, core commodities as well, and therefore something to be kept in mind. Suppliers, they are largely reputable vendors, both Indian as well as international. Raw materials, of course, face pricing pressure and volatility. They're managed via contracts and inventory. And of course, the finished product also, at least in recent years, has faced pressure with regard to inventory. So that is something to contextualize and keep in mind. Let's quickly look at the metrics that we'll track today when it comes to our VIP industries. I'll start off with the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, street coverage and valuations. So the typical 8 metrics that we take, we'll stick to those today on a VIP industries. I'll start off with the income statement. You've got revenue which has grown at a 3-year CAGR of 19%, so not bad on that top line growth, but that has, when you're looking at FY24 versus FY25, which is on your screen, you can see the shrink in terms of top line. So there has been pressure with regard to growth. They, in order to avoid giving up market share, what they've done is they've done large discounting, which is impacting their margins. So while top line is held up as a result of that, margins have been sacrificed. Look at margins, they've come down from 9% to 4%. And look at the margin trajectory, FY23, 24, 25. From 15% plus, it's fallen to just 4%. Can this recover will be the question. I've given this a neutral because they've been able to hold up on the top line in a difficult environment. So that's the one point which I'm liking here. Of course, at the cost of margins massively, and therefore that's a thumbs down, that part of it, and therefore profitability is taken a knock. But given all of this, you also have to contextualize it going forward. Will inventory unwind happen? If that happens, you could likely start to see the top line also go up. You will also likely see margins pick up and profitability pick up. How much is the question, but the repair work could well start very quickly. So you want to keep your eye out on that one. So we've given this a neutral for the moment. Let's look at the balance sheet now. You look at equity of around 500 odd crore, nearly 600 crore of equity is what this one has. When you're looking at the market cap, I did mention this, the market cap is around 7,000 crore. So the price to book is for you to look at, just about 11 times price to book. That is expensive. When you're looking at borrowing, again, this is important. Borrowing has gone up, so has inventory. So, and this is no surprise. We spoke about this, that inventory and borrowing, both of those have risen. And I'll give you a little bit of a glimpse on what has happened. Inventory, which used to sit at around 300 crore in FY21, or between 300 to 500 crore between FY19 and FY21, rose to nearly 600 crore in FY23, so 100 crore increase, and 900 crore in FY24. Even FY25, the inventory is at 700 crore, which is elevated in terms of their levels. So some of those have actually contributed to the increased short-term debt in the company. So the short-term debt has gone up in the same line as inventory has inched up. So that is something you want to keep in mind. The second is your trade receivables have also inched up in similar fashion. So from the 200 crore number in FY22, trade receivables went up to 250, then 320 in FY24, and now at 370 in FY25. So some of those pieces need to unwind themselves in the balance sheet. So while the debt has risen, it's not 1:1 in terms of debt to equity, and it's risen because of some of these factors. So you want to keep all of that in mind. But that's with regard to the balance sheet. We've given that one a neutral as well. And unwind on those parameters could likely lead to balance sheet cleaning up well. So we're waiting and watching on that one. Let's look at cash flow now. And the cash flow from operating activities, there you go, some of the numbers on your screen, saw a huge jump in FY25 as a result of that inventory unwind. Mind you, I clearly said it, 900 crore inventory down to 700, so that 200 crore unwind reflecting on the cash flow of FY25. Clearly visible, that 200 crore differential. And what you're also likely to see is that continuing to unwind. So your cash flow will improve, but it's erratic, right? FY23, look at the cash flow to EBITDA. FY24, look at that number. So you want more stability to that. Can that happen? That's where we're keeping this again on neutral. But otherwise, if you looked at the FY23 and FY24 numbers, a clear thumbs down. It's just that we can see the unwind happening in FY25. That's pushed me to give this one a neutral. So again, something you want to keep in mind. Return ratios. And this becomes important because you've seen margin headwind come through, you've seen profitability slip into losses, and therefore your ROCE numbers are bound to take a knock, and that's exactly what's happened when it comes to the ROCE number. It's taken a bit of a knock. We're currently sitting in negative. They've not given us an ROCE guidance either. So when guidance was sought, it wasn't given as part of the con call. So we'll really have to wait and watch as to where the ROCE goes as those numbers come back. We've given this a firm thumbs down with regard to the way in which the ROCE metrics have moved. Now let's look at shareholding, and this is where it becomes critical, because what's happening with regard to shareholding is you currently have 52% promoter ownership, and promoter ownership largely driven by Mr. Dilip Piramal, who is the chairman, and he will remain the chairman, but in a non-executive role. And he currently owns around 52% of the company. 32% of that will go to a consortium of investors, including a multiples private equity, which has a track record of turning around businesses. So it's not like they've sold a 32% stake to an investor or a community which doesn't have a track record of turning around businesses. You have an investor coming in which has a track record of turning around businesses. We had an Investec note which also suggested that multiples not only has a track record, but along with some of these other investors might get diluted, but will still command enough say in management matters, and therefore you might well see a multiples private equity lead this turnaround if it were to happen. And how quickly will it happen is really the question, but it will likely be driven by multiples private equity, is what even analysts, one or two, are suggesting, and we'll obviously have a conversation with one of them as well, so that'll give us a better perspective. So those are some lines for you on what exactly is transpiring with regard to the shareholding pattern. 20% will continue to be held by promoters, even existing promoters, even going forward, but 32% will be held by multiples private equity. They've also done an open offer for 26%, as is mandatory. They might well succeed in that open offer, in which case their shareholding goes up. So again, something to keep your eye out on. A lot of moving parts here, but surely thumbs up with regard to the shareholding pattern, because you have a large investor coming in and validating this. Let's look at street cred. 1 month stock price 13% up, 6 months 18%, so good returns over the last 6 months. But 1 year stock price is flat, year to date also flat, and 5 years a 78% return. We've given this a neutral as a result of that. Let's also zoom into valuations now. When you're looking at the FY26 and 27 valuations on Bloomberg, those are the numbers you're seeing in terms of price to earnings. So certainly not cheap, but if a turnaround is at play, there could be an upward bias to profitability, and you could see those valuations correct quicker, right? So in case of a double-digit top-line growth along with a 13% margin, you would likely see the price to earnings multiple shrink to 56, not 75 in FY26, if that were to play out. But we'll obviously have to wait and watch whether that does. H1 continues to be, or rather the expectation is H1 will likely continue to be weak, but we'll again have to wait and watch as to what happens at the end of Q1. But that's something you want to look out for. The last one is analyst recommendations. 4 buy calls, 3 hold calls, 4 sell calls, return potential negative 21%. So we've given this a thumbs down as well, not looking good from a return potential perspective. But does that change given the fact that we're seeing a change of ownership? Plenty of moving parts here, and therefore we'll have to continue to monitor this. So those probably watching this maybe a week or two later, you might want to factor some of these issues in. Let's quickly also look at all of the ratings. Let's see how those stack up. Income statement neutral, balance sheet neutral, cash flow neutral, return ratios too neutral, and all of those are your parameters. And what it ends up doing is giving it a 3.5 on 8 on our KYC rating. Now let's go across. We spoke with Mr. Dilip Piramal, Chairman. Listen in to what he had to say to us.
In all our existence of 53 years, we have been the market leaders.
Correct.
And in the last 5 years, however, we have been losing market share. We are yet market leaders, but very close. The other two companies are very close to us. But more than that, we have, like last year, in the year ending March 25, we made losses in all the 4 quarters, which is a disaster.
Correct.
As far as my company goes. And also, we are a family-owned company. And my next generation is not much interested in running the business. So for me to take care of the shareholders' interest, and I am the major shareholder, so it is my interest also, our management is not in very good shape. So it will take some time,
But it will come there.
Of course, of course. The overall fundamentals are very good. Markets are, tourism is the largest growing industry in the world for the last 10 years. We are a very, very minute part of the tourism industry. Luggage is a very small category. And our fundamentals are very good. Luggage is the same product everywhere. There is no special luggage for America or Germany or Indonesia for that matter. It's the same product everywhere. So it depends what is, like, we have not gone into that area at all. We sold a little bit of exports in some Gulf and a little bit in Europe and all.
Well, that's very candid words coming in from Mr. Piramal, but let's go across. We have Jinesh Joshi joining us from Prabhudas Leeladhar Capital to talk to us about what he believes and he tracks VIP Industries closely. Jinesh, welcome. I want to first start off with this entire promoter change. How significant, and does it change the way you view the counter yourself? Do you think that there is a significant turnaround possible and likely?
Sure. See, a turnaround possibility is definitely there. We need to understand that the existing promoters had some succession planning issues, right? And there was this news that some kind of exit was planned. And this was in the news for quite some time. And finally, we have had the exit come through. Also, if you look at their top management over the last, say, about 2 to 3 years, we have seen quite a bit of instability over there. Now, what will happen with this a new P guy coming in is that you might see a change happen at the top management level. And that is where you will see perhaps the turnaround come through, at least in terms of earnings. So I think definitely, yes, a change in management at the top level can lead to a turnaround for sure.
And how quickly can this happen, Jinesh? They had spoken about a turnaround as early as H2 FY26. Is that likely? Because some of these things take time. It's taken 1 year to unwind 200 crore of inventory. Can they quickly unwind the balance in the first half?
See, I think it's a slightly wishful thinking to assume that maybe in second half that could come through, because we need to understand the problem area of VIP. See, the problem began with the balance sheet. I mean, as you pointed out, that in FY24, the inventory was at about 900 crores. They were able to liquidate that slow-moving inventory in FY25 by about 200 crores, and the current inventory on balance sheet is approximately 700 crores. So what will happen is that perhaps in 1Q, you may not see that old inventory get liquidated, because typically 1Q is a peak wedding season and you may want to have a fresh stock in the market. So maybe the liquidation perhaps could be slightly back-ended is what I believe. And then what happens is that once this happens and you are fully out of that old stock, you may start perhaps fresh in FY27. So I think 26 will be a year of reorganization where you will see the balance sheet strength improve, right, with the inventory liquidation happening. And see, your entire P&L mess, we need to understand, is linked to high inventory on balance sheet. Because of high inventory, what happens is that your warehousing cost is high, your freight cost is high, your working capital gets elevated, and to that extent, the debt on the balance sheet is also high. So once the liquidation happens, the cost reset will happen on an autopilot mode. But I think that will take some time. So I think, to sum it up, 26 perhaps will be the year of reorganization, and you can expect normalcy to come through from FY27 is what I believe.
So do you expect a double-digit growth likely in FY26? Let's go away from balance sheet cash flow. Let's look at P&L core. What do you expect on the top line as this unwind happens, and what do you expect on margins in FY26?
See, 26, I don't think they'll be able to report a double-digit top-line growth. Because if I talk first about 1Q, what happens is that we need to understand that 1Q is impacted by Operation Sindoor. So to that extent, obviously, you will see some softness come through in 1Q. And whatever recovery perhaps one expects will be slightly back-ended in 3Q onwards. So I think in FY26, double-digit growth to my mind will be very challenging. Even on the margin side, see what will happen is that while in FY25, their EBITDA margin was at about 4%, what we need to understand is how the gross margin trajectory has moved over the last 4 quarters. I mean, if I remember right, in 1Q, their gross margin was 44%, but the exit gross margin was 47%. So if some bit of a recovery comes through on the margin side, at least in say FY26, given the cost reset thing that I just mentioned, the recovery on the margin side could be slightly better, is what I believe. So we are expecting about 11% EBITDA margin to come through in FY26.
11% EBITDA margin, okay, and 15% realistic, Jinesh, eventually maybe FY27, 28?
See, could be. See, why one may think that the journey from 4 to 15 optically is like quite a big one to kind of execute. But if you look at the numbers of the past, I mean, FY23 and all the prior years, if you look at it, VIP was a 50% plus gross margin business with an EBITDA margin of 15% odd. So, I mean, what we are expecting by 27 is that once the normalcy comes in and this entire pile up of soft luggage gets liquidated and you are back to normal pricing. See, right now, what is also happening is that due to excessive discounting and the price war that is there in the market because of high liquidity, you are seeing the top line growth also remain under some pressure. So once in 27, you are having to work on a normal base. I think a slightly higher growth with a 14-15% margin may not be a wishful thinking.
And Jinesh, if someone were to take up VIP, do you believe multiples is well placed to drive this turnaround?
See, I mean, if you look at their history, I mean, some of the consumption names that I can recollect is PVR. Another one is Arvind Fashions, even Delivery for that matter. So they have had this history, and I think if we go by that, perhaps we are in for some kind of a turnaround in VIP as well, with some level of changes happening at the top level, which will drive this turnaround.
Okay, point taken. Jinesh, last question is with regard to return ratios. So FY27, right, balance sheet shrink will be sharp FY26, and therefore the base of FY27 will be lower. With margins recovering likely, what should the realistic return ratio be on a business like this?
See, I mean, if you look at the past history, excluding the last 2 years where they were into mess because of all the issues that I spoke of, VIP has been a business with ROE, ROC of about 20% plus. So even in FY23, the numbers were like quite decent. So I think that is a steady state number which one should be aiming at in a year which is FY27, which can be expected to bring in some stability into the business.
Point taken. Thank you so much, Jinesh Joshi, for joining us, giving us all of that perspective. So, viewers, we've broken this down the best we can. We've looked at the business itself. We've looked at the metrics. We've looked at what the management had to say and acknowledge that maybe it's not the best time to be at a place where they are. And we've also analyzed this with Jinesh Joshi of Prabhudas Leeladhar. But with that, completely out of time on this edition of KYC from me and everyone who puts this show together. Thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Right now across the world, even in Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट, कोई
Markets trade in a tight range. Nifty trades near 25,150 and Sensex above 82,400. Nifty Media continues the up move for the second straight day. Nifty Auto and Metal top losers. Meanwhile, ICICI Lombard up over 2% despite a mixed set of numbers in the first quarter. HDFC Life reports an inline set in the first quarter as well. Expects FY26 growth estimates to be lower. HDB Financial's first quarter profit falls 2%, revenue rises 15%. And it's Dixon Tech that is a buzz on the back of a bullish brokerage note. CLSA maintains high conviction outperform, sees growth engines revving. And India's largest state lender, SBI, likely to launch a 25,000 crore rupees QIP. Sources tell NDTV Profit QIP to be at 2 to 3% discount to market price. Hi there, you're watching Markets at 12 with me, Shriyansi Singh. This is the show where we get you a highlight of everything that is happening in the market. So let's begin by doing just that. Let's take a look at the markets first. Not much that you're seeing in terms of the Nifty as well as the Sensex, in terms of the moves that you have, the number of points that you're seeing for them, because 25,100 is the kind of level that you've seen the Nifty manage to maintain at this point in time. When you take a look at the top sectoral laggards, you have autos that are in the slow lane, followed by metal, defense, pharma, finance as well, not holding up quite well. On the flip side, there's media, there's PSU Bank, FMCG as well as IT that are doing quite well for themselves. On the flip side, let's also take a quick look at some of the counters that are buzzing away in trade. Before that, let's take a look at some of the counters that are on the back foot from within the Nifty 50 packs, with Shriram Finance that's down about 2.5%, Eternal, Hero MotoCorp, Sun Pharma, M&M as well as GSW Steel, making it to the list of top losers from within the Nifty 50 pack. On the flip side, there's a Nestle India holding up quite well, Wipro, Adani Ports, Tech Mahindra as well as SBI. We'll get you some more details on some of these counters, but tell you what, let's also take a look at Dixon Tech, because that is the one counter that is buzzing away on the back of the CLSA note. In fact, Puneet is standing by with the update on that.
Well, thank you for that. So there are two key updates that are happening because the company has formed joint ventures in the component space, which is driving the stock performance. The first one is that it's entered into a binding term sheet with Zhongjing UI Precision Manufacturing Company that's visible on your screen. This is scope for the joint ventures, essentially manufacturing and supply of precision components. It will entail the company to manufacture components for laptops, mobile phones, IoT services, automotive, and any other products. So with this, it's a key update and something that Dixon has mentioned to client investors before as well. The second one is actually an acquisition. They've acquired a 51% shareholding in QTech India. What this will do and what does QTech India do is essentially collaborate in terms of manufacturing, sales and distribution of camera as well as fingerprint modules for phones. So it's essentially a company which will give Dixon the access to these components. This has also applications in mobile handsets amongst others, and automotive applications as well. So because of these two key updates, CLSA came out with a note on that. They maintained the high conviction outperform rating on Dixon Tech with a target price of 19,000 per share. They've said that this has significant steps in backward integration for the company and mentions that it could raise Dixon's value addition to 45 to 55% from the current 17%, and this is a high margin business, so it will be beneficial on both revenue as well as margins going forward. They also say that even if Dixon's market share saturates because of other EMS players coming in, which is a challenge currently in the market, this will continue to post strong bottom line because of these key updates. So it's a twofold update, both in terms of new acquisitions as well as joint ventures in the backward integration of the components, and CLSA maintaining the high performance, high conviction outperformance for the same.
Well, absolutely. And currently, you do have that growth engines revving commentary being quite positive for the stock as well. The stock is also revving up in trade, 2% uptick coming in as far as Dixon Tech is concerned. But let's move on. Let's take a look at some other counters. You do also have ICICI Pru that's also not doing quite well for itself despite a largely inline set of numbers. Let's also take a look at ICICI Lombard, because that is the counter that is in focus after the company reported a mixed set of numbers in the first quarter. In fact, we caught up with the management. Let's go across and listen in to what they had to say when it comes to the company's growth roadmap.
The industry has kind of grown at roughly at about 8.8%, which I would say is reasonable insofar as given where we are in terms of the overall scheme of things. But if you were to break down in terms of categories, most of the segments have grown almost at similar levels, particularly when you look at motor and health at an industry level. And commercial lines, if you recollect, last year did see stress in pricing. Now that's come back, which is a good news. And therefore, the expectation is pretty much similar, I think, as what we have maintained. I think the second half of the year will obviously be out of the 1/n prescription. So hence, to that extent, one should logically start seeing normalized growth coming in. If you look at the long-term averages, I would continue to say that general insurance industry should continue to exhibit growth in that range of 15 to 20% from a structurally long-term perspective. In this year, I think there are both headwinds and tailwinds, and therefore to that extent it will be reasonable to expect the industry to grow in a high single digit to maybe early double digit numbers.
All right, then let's move on. Let's take a look at some other earnings buzzers. You do have HDFC Life, in fact, that is in focus after the company announced its Q1 numbers. Numbers are largely in line with estimates, but Harsh is standing by with the earnings fine print.
Yes, so maybe, if at all, a slight positive bias really to numbers, but otherwise largely in line. So what we're seeing is a margin at around 25.1% versus the 25% number that the NDTV Profit estimates had projected. Largely in line, just about a 10 crore or a 1% difference between the actual value of new business and our estimates. That's how it's played out. In terms of what can we expect in FY26, the growth isn't going to be 18% is what the management has indicated. That's the soft guidance which has come through. Also, margins will be extremely range bound is what they said. So you can expect around 25-26% margins is what they've said all through the year. So you'll continue to see some bit of margin pressure, but they're expecting an uptick going forward. They've said value of new business will continue to double every 4 years. That's the one crucial piece. But FY26 likely to be a muted year. Par versus non-par, they're starting to see a bit of a shift, and they're seeing that pressure with regard to pricing on the non-par side is increasing. Competition is intensifying. They're waiting for some of those trends also to start to ebb. So all of those factors is what they've spoken about.
Well, absolutely. So all of those factors is something that they've spoken about. But tell you what, let's take a look at the pharma segment, the pharma pack, because we've talked about this earlier. Trump has announced that he will be levying tariffs on pharma by the end of this month. So how are Indian players then going to get affected? Varsha is standing by with the answer.
The 200% point, I mean, few days back, he just said that the tariff would be, at 200%. But now he's saying that he'll start off with a low tariff and he'll give a companies a year to build on that. But, as you rightly said, the pharma stocks, which has highest exposure to US generics, you have Glen Pharma, you have Aurobindo Pharma, Dr. Reddy's, ranging from the revenue contribution from US ranging from 45 to 50%. You have Lupin, which has a revenue contribution of almost 38%. The Torrent Pharma would be least affected as the revenue contribution from US generics is only 9%. Just to give you a context, how much India exports to US, the pharmaceutical goods export value, if you see, it's almost $10 billion US dollars, which contributes 6% of US pharma imports, and the generics provide more than $400 billion in annual savings to US healthcare sector.
Well, absolutely. So some of those counters are buzzing away in trade. Gland Pharma is up 4% thereabout. But let's also take a look at some other earnings buzzers at this point in time. Just Style is the one that is taking it on the chin at this point. Geojit Financials as well is something to look at. Vansh is joining in with the update. Vansh, looks like Just Style is not taking the highest other income in the last 8 quarters very well.
Right. So the company reported its earnings post-market hours yesterday. So let's understand the takeaways from the results. There has been a healthy growth in the gross service value for the company, and the net profit has been aided by other income. Now it's important to note that the other income is the highest that the company has reported in the last 8 quarters. And if we talk about the cash on the books for the company stands at around 5,400 crores. That accounts for almost 68% of the company's market cap. And if we talk about the quarterly unique visitors, the company reported 193.2 million quarterly visitors in Q1 FY26. Now, if we talk about the financials, the revenue is up 6% at 298 crores versus 281 crores. EBITDA is up 7% at 86 crores versus 80 crores. And net profit is up 13% at 160 crores versus 140 crores. And the margins are up at 29% versus 28.5%. And now the other income is at 127 crores versus the 86.8 crores in the previous year. Citi has also maintained buy on Just Dial, but they have cut their target price to 1100 from earlier 1200. And they expect the FY25-27 sales CAGR at 7%, which was earlier estimated at 11%, which is driven by the lower paid campaigns that the company has reported. And the brokerage also awaits for the clarity on the 5,400 crores cash that sits on the company's books as of FY25. And they expect user traffic to be critical for the pricing power going forward. Now let's talk about the Geojit financials. Now the company also reported its results post-market hours yesterday. The numbers have been muted. The stock is already down 5%, and the revenue has declined from the wealth segment, and there has been an uptick from the other services segment. And there has been a sharp margin erosion in the company, and there has been a significant decline in the profitability. If we talk about the numbers, the revenue is down 15% at 153 crores versus 181 odd crores. And the EBITDA is down 38% at 36 crores versus 60 crores. And the margins are down 900 basis points at 24% versus 33%. And finally, at the net profit, it is down 37% at 28 odd crores versus 46 odd crores. So these are the stocks that are buzzing in trade today.
Well, absolutely. So those are some of the counters that are buzzing away in trade. Let's also take a look at some other buzzers. But before we do that, let's also focus in on Vishal Mega Mart, because that is in focus after Motilal Oswal initiated a buy coverage rating. In fact, Varsha is standing by with the update on that.
The target price has been set at 165. Let's find out the reasons why Motilal has initiated this coverage. They say that company has a vast market opportunity targeting millions of market, and they also have a strong footprint of 696 stores across 458 cities with 72% in tier 2 plus regions, and they offer well diversified exposure across apparel, general merchandise and FMCG. They boast one of the leanest cost structures that enables competitive pricing to the company, and Motilal is forecasting 19 and 20% of revenue EBITDA CAGR and 24% PAT CAGR over FY25 and 28, and company also maintained debt-free balance sheet, robust cost control and tight working capital management. Lastly, despite strong performance since listing, risk reward remains favorable according to Motilal, and this is also one of the reasons why they have initiated a buy rating.
All right, then thanks, Varsha, for that update. As promised, it's time to look at the stocks that you should be keeping on your radar at this point in the afternoon. Anushi, in fact, is standing by with an update on that. Anushi, Godavari Biorefineries, that's the counter that's buzzing away. Lots of other counters to look at.
Right. Yes, Shanti. As we are seeing for Godavari Biorefineries, it's a big update that we are looking at. They've secured a Chinese patent, and this is for the cancer treatment compound that we are looking at. The name of the compound on the screen over there. Now, this patent covers novel class of compounds which are there, and they demonstrate strong inhibitory effects on cancer-related and cancer stem cells which are there. So it's a big update that we are seeing for Godavari Biorefineries. Other than that, Biocon is the other stock in focus. It's Biocon's Kirsty has got US FDA approval. Now this is the first interchangeable biosimilar for Novolog that we are looking at. Now it's a big market considering that Novolog's annual sales were $1.2 billion in 2024. So indicative to this, if you look at how this would pan out for Biocon, this is interesting one to watch out for. Considering that the drug is currently under shortage at Novo Nordisk has now shifted its focus to other products. Now as per analyst expectations, they're seeing a 80 to 100 million of an annual sales for Kirsty over there. So a big update that we are seeing for Biocon as well. Apart from that, other couple of names in focus on back of their fundraising plans includes Jtech India. Now here they've proposed a right issue worth about 250 crore, and this pertains to construction of infrastructure for setting up a production facility in Gujarat. Along with that, capex for buying additional machinery and repayment of borrowings. Spandana Spurti was buzzing in trade yesterday, and this was after the company has approved issuance of shares worth about 400 crore via the right issue route that we are looking at. Board set to meet on July 18 to discuss key details regarding this rights issue. And Yes Bank, the last stock in focus, and here the board will be meeting on July 19 to consider fundraising via equity or the debt route. So these are a handful of names in focus on the back of these various developments that are taking place.
Well, absolutely. Thanks, Anushi, for getting us a roundup of all of those counters. So out of that entire pack, Godavari Biorefineries is the one that is buzzing away in trade. 5% uptick on that one. But tell you what, on that note, here's an NDTV Profit exclusive. Robert Rosenkrantz of Delphi Capital Management spoke to my colleague Neeraj about how a stoic view and invests in the market. This conversation was based on Robert's new book, The Stoic Capitalist, in which he gives advice for the ambitious investor on how to generate wealth long term.
How do you look at equity markets in the current context? We'll come to the Stoic principles in a bit, because I believe everybody needs a veneer of stoicism to bear the uncertainty of living by a tweet every single day.
Well, I think as a Stoic, there are a couple of principles that you need to apply. One is the idea that you need to think critically about everything. So don't just accept the wisdom of crowds. Don't just go with the mood of the moment. Almost by definition, the crowd is wrong or the consensus is wrong at key turning points in markets. You can go along with the crowd most of the time, but what makes market tops is that everybody is bullish. What makes market bottoms is that everybody is bearish. And at those key moments, you really have to have that critical thinking and that self-confidence to go against the crowd. So that's kind of one of the Stoic principles. The other one I would say that's quite important is to understand that things change, that things are always in flux. Expect impermanence, expect change. And, if you can be an agent to create change, great. If you can react to change, that's okay. But if you're fighting change, you're fighting a losing battle.
Okay. You spoke about people need to be careful about being bullish at everybody at the same time. Everybody seems to be bullish on almost everything. US markets, Indian markets, gold, silver, Bitcoin. Does this mark the turning point therefore?
Well, I would say that the bullishness on equities is to some degree justified by the sense that we may be on the verge of a kind of explosion of productivity. The combination of AI and robotics could really have a very positive effect on productivity, and that would be a very good thing economically and a very good thing for stocks. I think the enthusiasm for bonds, though, to me is much more doubtful, particularly in the United States, where you have historically high deficits, 6-7% of GNP at this stage of the economy. One of the great beneficiaries or not beneficiaries, but causes of economic prosperity over the last 10 or 15 years was a trend toward globalization. We're now seeing a trend toward deglobalization, which is kind of a bad thing. Free movement of talented people around the world is being challenged or slowed down, maybe even stopped, and I think that's a bad thing. So I think at the end of the day, you're going to probably have higher inflation and higher interest rates than the markets are anticipating. So I'm more bearish about bonds than I am about stocks.
But Robert, when people are thinking about turning points or risk reward, I'm just trying to understand stocks in particular. What do you think? Are they expensive or do they give an adequate risk reward?
I mean, stocks generally are pretty expensive, and the market is expressing I think, an overly sanguine view of the economic outlook. However, there are only a couple of classes of financial assets. There's stocks and bonds, and derivatives of those. So if that's your choice, I think stocks are a better choice.
And Robert, do you reckon Asian markets or Indian markets also give that kind of a choice to investors at the valuations that they are trading at?
Well, I'm thinking mostly in terms of the U.S. stock market, which is correct. I think, stocks in India are very expensive. I worry about that. Although, as a Stoic, and one of the chapters in the book deals with this, don't be that much of an absolutist about value. It's not necessarily true that stocks gravitate toward, quote, some notion of fair value. You have to look at the behavior of market participants. And I almost approach it like a man from Mars. What are the earthlings doing? And if the earthlings are disregarding value, well, that's that's what they're doing. So you have to just be a neutral observer of what's going on and not get in the way.
But when you are thinking of it like a neutral observer, you are thinking of higher multiples. And therefore, my question to you would be, when we scan the landscape, let's say 2020, 2024, the multiples are pretty much the same multiples at which the markets are trading right now. So they might be expensive, but they are trading at average multiples for this decade. Would you reckon higher multiples remain a possibility and a certainty for the remainder of the future as well, of this decade at least, or the current cycle?
Things change, people's attitudes change, people's behavior patterns change, and I just don't think you should be glued to historic concepts of value. You have to just observe what the markets are doing, and just sort of think about that. I mean, historically, people who have tried to time markets, professional firms that have scores of analysts and economists, basically fail to do it. Human beings are simply not good at timing markets. And that's just an observable fact. So to think that you're going to somehow marshal facts that eluded other people and you're going to be smarter than the market, probably not.
Or most certainly not. Okay. Now, again, coming back to your book, right, The Stoic Capitalist, you highlight that finance capitalism is far more rewarding than industrial capitalism. But you later on also mentioned that it is wiser to plan to get rich slowly. How do you connect the two, especially when a lot of young investors easily find themselves swayed by the prospect of get-rich-quick schemes?
Well, getting rich quickly can happen. It does happen, and that's what everybody wants to do. The reason I like the idea of getting rich slowly is it gives you're operating in a time horizon which is much less competitive. Everybody's thinking about how to make money in the next 3 months or 2 months or year, but not that many people are thinking about how to create value over 20-year period or 30-year period. So it's a lot less competitive, and there are certain approaches that will work over the long run. I give stories in the book about what I tried to do with Delphi, which is simply very patiently try to generate somewhat better rates of return than is typical in the markets by focusing on putting the investment side of the company first, which is at the time was a real innovation in the insurance industry, but I thought would add 3 or 4 or 5% a year to our returns on capital. And then if you can compound that over long periods of time, it makes a huge difference. We invested $20 million in the company when we bought it. We sold it at 150x valuation. It took 23 years to do it, but still pretty good result. And in the book, I tell the story about J. Paul Getty, who was the richest man in America when he died. And he basically was implementing a strategy that if you analyzed it, you knew was going to take 20 or 30 years to come to fruition. But back to your question about finance capitalism versus industrial capitalism, it was true for most of my lifetime that finance capitalism was better rewarded. I don't think that that's true right now. I think now the big rewards are really going to the tech entrepreneurs, and they deserve it because I think they're doing more for society than folks running hedge funds or private equity shops do.
All right, then, so there's value in not looking at just value. A Stoic's view of the markets is what you heard excerpts from. But with that, out of time on this edition of Markets at 12, from me, Shriyansi Singh, as well as the team that put this show together, thank you so much for tuning in.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है. ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है. बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए. इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी. मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Bazaars. I'm Hiral Datia and with me is Vaisha Chandani. Good afternoon. Clearly, if you see in terms of where markets are concerned, pretty somber day of trade, Vaisha, and clearly 82,500 is what you're tracking in terms of the Sensex. But if you have to look at Nifty 50, it has managed to move up from the day's lowest levels, but still trading pretty much on the borderline. 25,180 is what you're tracking on that front. Let's quickly look at the sectoral heat map because that will give you the trends. What is standing out is the PSU Bank Index, Media, Realty, IT. That's where the gains are. FMCG also seeing gains of around 0.3%. What's losing is interesting. The metal pack is seeing profit booking in today's day. Auto, after that strong surge in yesterday's session after Tesla launch in India, is seeing profit booking as well. Pharma also down in trade. Defense trading under pressure. So that's what the sectoral heat map is looking like. But let's quickly look at individual stocks in terms of Nifty 50. No major moves. It was Shriram Finance, which was the top losing stock in terms of the morning trade. Currently as well, 2.5% down taker, but that's reacting on the back of the weak CV commentary that we've heard from HDB at the con call. Eternal also seeing profit booking for a second consecutive session. Sun Pharma down in trade, JSW Steel, Tata Steel, Cipla, a few of the other names which are trading under pressure. Nestle is an interesting one. SBI on the back of the QIP announcement, expectation worth 25,000 odd crores is seeing a strong run today. Wipro will be reporting numbers tomorrow. Ahead of numbers, that stock is up around 1.5%. Infosys, Asian Paints, Adani Ports, these are a few of the other gainers. HDFC Life also posted numbers, is seeing gains of around 0.5%. So that's the overall setup that we are seeing right now. Broader markets also interesting. Last two trading sessions, Varsha, we ended nearly with gains of 1%. So there is that traction which is picking up in broader markets as compared to what's happening in terms of large caps, because large caps markets are opening absolutely flat and doing nothing at some point in time.
Exactly. But, you know, broad markets are green today. So if you see Nifty Midcap 150 is up almost 0.12%. But few of the stocks which are gaining, you have Thermax, you have Gland Pharma, Patanjali, Food, Star Health, NLC, which are gaining when it comes to mid-cap 150. On the loser side, though, you have a few of the names like Page Industries, Mankind Pharma, Bayer Crop Sciences, and L&T Finance. Well, let's see what small-cap 250 is doing. It's up almost 0.13%, not that much, but it's still in green. You have Metropolis, Cera Sanitary, Network 18, KRBL, which are on the greener side, while on the loser side, if you see, you have Just Dial, which is under pressure on the back of earnings. You have Amber Enterprises, FDC, RK Forgings, and Navin Fluorine, which are on the loser side. Some stocks which I want to highlight on the back of some news flows, though, you have Tirumalai Chemicals, which is up today. Now it's on the back of the company building 2 integrated plants in the US. You have Godavari Biorefineries as well, which is buzzing as they got patent for the cancer drug. This is the second patent that this company is getting. You have Premier Explosives on the back of new order. Even Biocon, the stock was up 1%. This is on the back of insulin aspart approval, which is a key drug for the company. But so this is what overall market is concerned. But global trade tensions and investor uncertainty continue to dominate headlines. We caught up with Vinay Jaisingh, who is the CIO and head of equity advisory at Ask Private Wealth, to understand how India is positioned. Listen to what he has to say.
Valuations are not as attractive, but India's resilience clearly is great. If you look at the incremental GDP India is adding on to the world, it's somewhere to the tune of 10 to 20% based on the world growth being 1 to 2%. Take an average number of 15% of the incremental world's GDP coming in from India. That's a very big sign. In terms of profit pool, it's just 1.5, 1.6%. And in terms of inflows, last year was negative, but average is about 1.5%. So you can see a lot of inflows come into the country. Second point, if you look at indices, most indices in emerging market have moved India up from 6-7% to as much as 18%. And at the same time, if you look at the data of Indian FIs in the shareholding pattern, that's gone down from a peak of 20 to 16, again, a 12 to 14 year low. So, this also gives you the fact that, FIs are underowned the country and the GDP is growing pretty well. One last indicator, which is very pro-India, is if I had to just look at the 10-year interest rate of India versus the rest of the world, or let's talk about US currently. 6 years ago, it was 6%, the interest rate differential between India and US for the 10-year. Today, it's as low as 1.8%. So it also tells you the risk premium for India has come down substantially.
And that's an interesting take coming in from Vinay as well. But if you look at markets right now, the trend has continued where you're somber in the first half of the trading session and the pickup happens in the second half of the trading session. And that's exactly visible in terms of the charts as well. But overall, let's quickly pull up a DB Corp. let's look at the stock and see what the counter is doing in trade on the back of earnings. The stock has seen a dip, a downtick to the tune of around 3%. Revenues have fallen by around 5%. That number is coming at around 550 odd crores. Apart from that, the EBITDA has also seen a downtick to the tune of almost 32% on a year-on-year basis. 111 odd crores is in terms of the EBITDA. Margins is a big miss, 19.8% versus a 27 upwards kind of a number. Profits have come in at around 80 crores versus a 118 crores. So across parameters, it's a downtick, and that's the reason why you're seeing this kind of a reaction that is coming in with regards to DB Corp. The stock is down to the tune of almost 2.5–3% in trade as we speak. Slight bit of a recovery from the day's lowest levels is what you're picking up, but a weak set of numbers that have been reported by the company. But moving on. HDB Financial is also in focus on the back of Q1 numbers. Stock trading under pressure, 2.5–3% kind of downtick, and this is the first earnings after listing. Harsh, numbers is something that we've all read, but what are your key takeaways that have not worked for the company? And in terms of the commentary as well with regards to forward looking, what are the key highlights that you're picking up?
Well, so it seems that the worst is over. That's likely the positive coming out of the commentary. But let's first talk about the negatives, because the stock's obviously under some pressure. One, they're seeing some pressure with regard to CV and unsecured. That pressure seems to continue, but they're saying that this is seasonality as well. So Q1 in general is a tough quarter, and therefore please take this with a pinch of salt. That's what the management says. The second piece is with regard to credit costs. 2.4% last quarter, 2.5% current quarter. They're saying that this is likely peaked now. Q2 will see maybe a marginal taper, if at all. That's what the bias in the commentary seemed like. And thereafter, you'll start to see a downtick with regard to credit costs. That is the direction that they see currently with regard to credit costs. So credit costs likely to aid ROAs. Now, ROAs have come in at 1.9%. That's the big other negative. What this will actually do is, one, it will improve margins going forward, because you've seen a repo rate cut. That should aid the margin going forward, and credit costs also should improve going forward. So both of those twin engines should aid the ROA number. So a few negatives, a few positives, but of course the street looking at the numbers more with negativity, given the fact that credit costs are elevated and it's the first set of earnings, and we've seen a steep rise in the stock price as well post-listing.
Right, Harsh. And even, while talking to a reporter during the earnings con call, the CFO Jaikumar Shah says that the company expects credit costs to improve going forward and see net interest margin expansion over coming quarters as well. To listen in.
So on the credit cost level, as I said, Q1 has been weaker and almost in line with expectations. We expect things to move in the right direction from here on and stabilize through Q2 and then improve going forward. That's our current working assumption and the piece that we're working on. That's one. On the ROA front, as I mentioned, the way to look at 1.9 is really 2.02 because of the 9,000 crores sitting there. And as credit cost starts to improve, you'll automatically see an improvement in ROA. Another important thing, note is that on the rate reduction, as Ramesh mentioned, the benefits of that haven't really come through at this point in time for us, and something that you will see in terms of NIM expansion over the coming quarters.
That's the word coming in from Jaikumar as well. In fact, Harsh is with us. Harsh, there was an important aspect on the back of the way CV business has done so far, and that is having an impact in terms of peers as well. What are you picking up, and where are you seeing maximum impact in terms of a counter effect?
Right. So clearly that CV business commentary not looking encouraging, because they said HDB Financial, as part of its commentary, suggested that the CV business is not only slowing down in terms of disbursements, you're also seeing a higher credit cost on that business. They're seeing economic slowdown and some headwind in the economy, which is likely accentuating that problem. And of course, on the back of that, you will obviously have an impact on some of the CV financiers, Shriram Finance, Chola, on, just right off the bat, seeing some bit of pressure on the back of that commentary coming through.
Okay, thank you so much, Harsh, for giving us all the details. In fact, the next thing we are going to wait from you is the breakup for SBI QIP, but we will give you some time for that one. Let me welcome in Gaurang Shah as well from Geojit. Gaurang, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. You heard about HDB first quarter post listing, a weak set of numbers. Commentary in terms of CV is weak, and that is having an impact on Shriram Finance and the Chola Mandalam as well in terms of opening trade. Though the commentary is telling you that the worst is probably behind us, how would you look at a HDB number one, and in turn on the CV side of it, Shriram and the Chola Finance?
Thank you very much, Hiral, for hosting me this show afternoon, and always great talking to you about markets. So as far as HDB financials are concerned, recent IPO, we had come out with a subscribe recommendation for the IPO of HDB Financial Services. If I have to go by that logic, since it's a recent IPO and the stock has corrected from the rally post-listing that we saw, maintain a positive stance based on the IPO note from a long-term point of view. And before I go any further, I'll just take 30 seconds to give a disclosure. Whatever fundamental long-term recommendations that I'll be giving this evening on your show, this afternoon on your show, these recommendations are a part of our research team. Our company, Geojit or I, we do not have any personal investment or any financial interest or any other kind of conflict of interest, but we give similar recommendations on similar lines to our clients. They might have their long-term investment. Now, coming on to the entire NBFC fact. First of all, Hiral, we are positive on the entire BFSI segment, which includes public sector bank, private sector banks, and strong NBFCs diversified. So, Bajaj Finance, Chola Mandalam, Shriram, L&T Finance, M&M Finance, small payment banks like AU Small Finance and Credit Access Grameen, all these names feature on the positive side as far as our research recommendations are concerned. Our thought process here is that as we go into the future, credit demand is going to go up, which will have a positive impact on the loan book. Interest rates are coming down. That's a positive. Asset quality is improving across gross debt, and provisionings are coming back onto the balance sheet. So if you have a long-term time horizon, we would recommend these names from a long-term point.
Right. Got that view, Gaurang. Also, Gaurang, HDFC Bank has announced that its board will convey on Saturday, that is July 19, to consider Q1 earnings, special interim dividend and bonus issue. Now, my question to you is, how are you, expecting, what are your expectations when it comes to their Q1 earnings? And for overall FY26 and for next 2 to 3 years also, on the banking and financial aspect, what are your picks apart from HDFC if you have?
Well, so Varsha, look, you have never gone wrong when it comes to investment into HDFC Bank. You take last 5 years, 10 years, or even before that track record. Yeah, there was a concern when the big two merged, HDFC Limited and HDFC Bank, though the street was having a song and dance about it, but then post the merger, there was a long period of consolidation and a very small range in which the stock prices of HDFC Bank moved at that point of time post-merger. Fast forward to the current level, well, current situation, close to 2000, we have a positive view on HDFC Bank. We have a buy recommendation. And as I was speaking with Hiral, we are positive on other private sector banks, Axis, ICICI, Kotak, IndusInd, Federal Bank, and IDFC First Bank. In the public sector universe, we have stuck to the basics and strong names rather than going for lower double-digit weaker names. Positive on State Bank of India, Canara Bank, Bank of India, Bank of Baroda, PNB, and Indian Bank. We believe these public sector banks are well placed for a decent growth as we go into the future.
That's interesting. In fact, you have Bank of Baroda also, which has climbed to the day's highest levels. Axis Bank will be reporting numbers tomorrow, so that's going to be a stock that will be in focus. But meanwhile, moving and shifting focus to the PSU banking space, sources tell NDTV Profit that SBI is likely to issue a 25,000 crore rupee QIP. Subhana Sheikh joins us with the details. Subhana, over to you.
The SBI's QIP, which is the biggest QIP in the country so far that we're seeing in the Indian market, is going to be priced at a 2 to 3% discount to SBI's current market price. Now, currently, shares of SBI are trading around 819 rupees. What sources are telling us that the QIP is expected to be priced at a 3% discount, which is going to be a potential discount. LIC is going to be a major investor. Apart from that, mutual funds are also going to seek their bids for this 25,000 crore QIP issue. Now, it's important to understand that the last time when SBI had come with a QIP, which was back in June 2017, they had raised 15,000 crores, and back then also it was issued at 1% discount. So the price that they had issued it was at 287.25 rupees, but obviously that was back in 2017. So the current and sources are also telling us that the issue could be launched any time from here on.
Thanks, Amara, for the details. In fact, Harsh is patiently waiting by to explain to us in terms of what are the dynamics going to be in terms of pricing and in terms of number of shares, the impact it could have on the financials and on the valuations basis his conversations with analysts. Harsh, over to you.
Well, yes, seems to be suggesting an 820 rupee price point at which this QIP will happen. Now, let's assume that it happens at that price. What it'll do to book value at the end of FY26 is lifted by a couple of percentage points. So, from 549, the book value will go to 559. It's still, SBI still trades, or rather at 820. It ought to trade at around 1.47 times price to book 1 year forward. So that's roughly on the pricing. Now let me talk a little bit about the dilution. Post money, this will be a 3% dilution for SBI, so a very small dilution. But why is this happening? It's for the CET1 ratio to see a lift. So CET1 currently at 10.8%, very, very close to the regulatory low. With this, it will go up by around 70 basis points thereabouts. So the CET1 will come to 11.5, which will allow SBI the bandwidth to grow at a time when, of course, deposit growth seems to be coming back, and so and the repo rate cut should aid advances growth as well. So in that environment, this is, of course, much necessitated. That's broadly what we have with regard to the analysis on this piece.
Thank you so much, Harsh, for getting us the details. Gaurang, how are you looking at a 25,000 crore QIP buyer SBI? Price at around 820 is what the street is looking out for. And in terms of your book value, pre-QIP around 549 and post around 559 is what we have so far. What would you advise investors to do?
So again, firstly, like I mentioned, Viral, we have a positive coverage on SBI. And this is what exactly I was referring to when you asked me a question on NBFCs. Look, 25,000 crore QIP is not a small amount. This directly reinforces our view in terms of the credit demand, which is likely to go up into the future. And likewise, I think you will have many more banking entities or NBFCs coming and hitting the street for wealth. To garner wealth in form of QIPs or any other form. So my sense and what I can understand at ground level is that there is a lot of appetite for this particular QIP from SBI. I don't think it's going to be very difficult to sail through. I think it's going to be a smooth sail. And I'm sure with the kind of amount that they are garnering via this QIP, their anticipation in terms of credit demand, which is likely to go up, is very, very strong.
Right, thank you for that, Gaurang. Well, two stocks which is in focus, one is HDFC Life and the other one is ICICI Lombard, where HDFC Life Insurance has kicked off FY26 with a robust performance, reporting a 14.5% jump in consolidated net profit. Vibha Padalkar, who is the MD and CEO of the company, talks about how the company's margin growth trajectory has been. Also, if you see, ICICI Lombard is in focus after companies reported a mixed set of numbers in Q1. We caught up with Gopal Balchandran, who is the Chief Financial Officer at the company. Do listen in what the management has to say about the company's growth roadmap for both the companies.
So I would like to say that the margins have picked up, and let me deconstruct. Last year, so first quarter of last year, margins were 25%. We, as a sector, had to recalibrate our business model with the new surrender charges, which came into effect on 1st of October last year. So the impact of surrender charges, even if I did no change to any of my inputs in my business, it would have had a 30 basis points, which means my starting point on margins was 25% less 30 basis points. So my starting point itself this year was 24.7%. Versus 24.7% margin, I have delivered 25.1% margin, which means it's a 40 basis points increase in margins, despite all the bearishness or the sluggishness that we spoke about earlier. So really the margin increase has already started, and as a sector I am of the belief that over the next 3 to 4 year period there will be enough levers for a slow but steady increase in margins while growth comes back.
The industry has kind of grown at roughly about 8.8%, which I would say is reasonable insofar as given where we are in terms of the overall scheme of things. But if you were to break down in terms of categories, most of the segments have grown almost at similar levels, particularly when you look at motor and health at an industry level. And commercial lines, if you recollect, last year did see stress in pricing. Now that's come back, which is a good news. And therefore, the expectation is pretty much similar, I think, as what we have maintained. I think the second half of the year will obviously be out of the 1/n prescription. So hence, to that extent, one should logically start seeing normalized growth coming in. If you look at the long-term averages, I would continue to say that general insurance industry should continue to exhibit growth in that range of 15 to 20% from a structurally long-term perspective. In this year, I think there are both headwinds and tailwinds, and therefore, to that extent, it will be reasonable to expect the industry to grow in a high single-digit to maybe early double-digit numbers.
Well, Gaurang, you heard both the managements, and we know that HDFC Life delivered good set of numbers, while there was a mixed set of numbers by ICICI Lombard. Just wanted to have your view on both the stocks and where your buy will be.
Well, so we have coverage on the positive side on both, Varsha. HDFC Life, our view from a pretty long period of time, especially post-COVID, was that people have woken up to the brighter side and they have started to apply wisdom while insuring themselves. Earlier, the thought process was that, you will save something on tax, that's why you get yourself insured. Post-COVID, I think everybody woke up to the bright side and realized that, no, you need to take insurance, term insurance that too, with a decent sum assured. And by that logic of decent sum assured, your outgoes in terms of premiums are going to be higher, and that's going to be translating into new premium run rate going up for the insurance companies. So we're positive. We have positive coverage on HDFC Life. On ICICI Lombard, which is a non-life general insurance company, a little bit of struggle, yes, but I think the long road looks quite positive in terms of betterment on the numbers front.
Okay, so that's with regards to where insurance players go. But apart from that, you have names like Just Dial, Geojit Financial Services, Hathway, all of them that have reported numbers. Vansh is getting us the details as well. Vansh, Just Dial trading under pressure, Geojit Financial Services, Gaurang will not be able to give a view on that one, but at least take us through all the numbers.
Yeah, so the Just Dial has reported their numbers post-market hours yesterday. Now, there has been a healthy growth in the gross service value. However, the numbers remain on the muted side because there has been a net profit has been aided by other income. Now, it's an important thing to note is that the other income is the highest in the last 8 quarters. And if we talk about the cash on the books, the cash stands at approximately 5,400 odd crores, which represents 68% of the company's market cap. And if we talk about the quarterly unique visitors, the company reported 193 million quarterly visitors in Q1 FY26. Now, if we talk about the financials, now the revenue is up 6% at 298 odd crores versus 281 crores. EBITDA is up 7% at 86 crores versus 80 crores. And the net profit is up 13% at 160 crores versus 141 crores. In terms of margins are up 30 basis points at 29% versus 28.7%. Then the other income, now this is the standing factor, the other income stands at 127 crores versus 686 crores YOY. Also, Citi has maintained buy on the counter, and they have cut their target price to 1100 from the earlier target price of 1200, and they expect a 7% CAGR in sales for FY25 to 28 estimates. And the brokerage waits for the clarity on the 5,400 crore cash which is lying on the books of the company. And they expect the user traffic growth to be critical for the pricing power going forward.
Thank you so much for getting us the details, Vansh. In fact, Hathway Cable is also another one that we are looking at. And in terms of Hathway, robust set of numbers, revenue from cable television business has seen an uptick. They've also witnessed an increase in the pay channel cost, and higher other income has aided profitability. 11% up move coming in on this one. Gaurang, 2 names, Hathway and Just Dial. Your views?
So Just Dial used to be under our coverage pretty long time back, Hiral. Unfortunately, since we don't have coverage right now on either of the stocks, I won't be able to give any specifics. But there seems to be an elevated amount of competition for Just Dial as we go into the future. No specific comments since there is no coverage.
Got it. So that's with regards to where Just Dial goes, but interesting moves coming in on the result reactors. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit with Varsha and myself.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Right now across the world, even Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Markets trade flat. Nifty trades near the 25,200 mark and Sensex above 82,600. Nifty Media continues the up move for second day. Auto and metals lose sheen.
ICICI Lombard up over 2% despite a mixed set of numbers in Q1. HDFC Life reports an inline set in Q1 expects FY26 growth estimates to be lower. HDB Financial's first quarter profit falls 2%, revenue rises 15%.
Dixon Technologies a buzz on the back of a bullish brokerage note. CLSA maintains high conviction outperform, sees growth engines revving, and they have done some partnerships as well.
India's largest state lender SBI likely to launch a 25,000 crore QIP. Sources tell NDTV Profit QIP to be at 2 to 3% discount to market price.
Welcome back. You're watching Profit Buzzers on NDTV Profit. Let's quickly take a look at what markets are doing at this hour. Interesting moves that do continue, and usually the second half of the trading session is where you see the pickup, and exactly what you're seeing on the charts as well. You have Nifty 50, which is at the day's highest levels. The PSU Bank Index is also showing some strong moves, and that contribution is coming in from SBI on the 25,000 crore QIP. 1.7% uptick in terms of the Nifty PSU Bank Index, and if you look at the private banking space, is also very interesting to watch out for in terms of today's session. If you can just have the Nifty Private Bank Index again at the day's highs, but clearly underperforming the PSU banking space. But let's quickly shift focus to few of the names which are buzzing in trade on the back of news. Jasmeet gets us details on Thirumalai Chemicals, Godavari, biorefineries, and Biocon. Over to you.
Well, right. Thank you for that, Hiral. Yes, the stocks are buzzing on the back of news. So here's all the news and the stocks to watch out for today in trade. First one is Thirumalai Chemicals. While companies USA Arms is building 2 integrated plants in the USA. While these plants will use N-bonnetate, that's a kind of gas, basically flammable, transparent, colorless gas, and it's used for the products such as special food ingredients. Now let's understand why the company is doing this. While the USA chemical market is growing, on the other hand, even the food market is growing, and the demand for snacks and beverages is growing. And USA majorly imports such goods from other countries. While this move of company of building its own in-house product, integrated product at the USA will be a strong move for the company. While the next one on my list is Godavari Bio. While the company secures Chinese patent for cancer treatment chemical, while they received the patent for a drug from Sinpa. While this drug is used to treat the cancer and cancer cells, while patent also cover the novel class for the compound, which demonstrate a strong move towards cancer treatment cells. The last one on my list is Biocon. While Biocon's Cressid as an insulin part gets US FDA approval, while this is the first interchangeable drug when we compare with Novolog. While Novolog's annual sale with this drug was roughly between 1.2 billion back in 2024, and analyst also believes that this drug will be a game changer for Biocon, while it will add on to 80 to 100 million sales for the company. So these are the stocks to watch out in trade today.
Thank you so much for that, Jasmeet. Interesting names that you've picked up so far. Gaurang, anything that comes to your radar from the 3 stocks that Jasmeet got to us? Would you recommend anything?
Well, so Biocon is something that has caught the spotlight. We have an accumulated stance, Hiral, on Biocon. But given the rally in the last couple of weeks, if you have your investments at lower levels, you can continue to hold on Biocon from a long-term point of view.
In fact, let me also get in Gaurav Sharma from Globe Capital. Gaurav, 3 charts, 3 stocks that are buzzing. Where are you seeing strength? Where are you seeing weakness?
Hi, good afternoon. So let's take up Tirumala Chemicals first. The stock is looking very upbeat. Today's move was backed by phenomenal volumes, hovering around 300 plus levels in today's trade. This is a clear breakout from the congestion range in which it was trading from past couple of weeks. So I see the stock heading further upwards towards 320, 330 zone in the coming 1 to 2 months. Apart from this, I'll also like to talk about Biocon here. The stock has reached its near-term resistance zone, which is 405, 410. If the stock manages to go past, then an extension to the recent rally would be seen, where the stock can likely test 430, 440 zones. So from a short-term perspective, a buy can be considered above 405.
So that's with regards to where Biocon goes. But moving on, Titagarh Rail, that's an interesting stock to watch out for as well, because they've inked a 126 crore deal to build a Metro Vande Bharat units. In fact, we did speak to Umesh Chaudhary as well, where he's giving his rationale in terms of the expansion that is expected to take place. And in addition to that, on the back of the fundraise, it will mean that increasing stake to the tune of almost 1% for the promoters. Let's quickly listen into what he had to say.
As it is a land which is adjoining our existing facilities, this is basically making the picture complete. And in terms of the operationalizing, we've already started work. We got the possession and we've already actually physically started work on the ground to clean up the land. This was all in rubbles, and we've taken up steps to now expand the facility, construct the testing track. So we expect that within the next 9 to 12 months at the most, we will have the facility up and running. In terms of the revenue potential, the total capacity that we are targeting to make in our Uttarpara facility, which is the existing plus the expanded facility, ultimately will go to about 1,200 cars a year. So each metro car selling at about 10 to 12 crores, 10, 11 crores, let's say, that is the potential revenue generation that can happen from the entire facility. Of course, that is subject to many things like getting orders and so on and so forth. But that will be the overall capacity that we would have created. And this will happen over the next 4 or 5 years' time.
Capacity over the next 4 to 5 years is the creation the management is looking at. Gaurang, any view in terms of Titagarh or any picks from the railway pack?
So Titagarh Rail Systems happens to be on our buy coverage. We very recently, Hiral, initiated a coverage on Titagarh, our research team. And I think the transformation that is happening in the entire Indian railways, and along with that, you have metros and monorails running across cities. As it was spoken by the management, I think the order book looks to be quite strong and more orders are likely to come through. So we have a positive coverage on Titagarh Rail System from a long-term point of view.
Right, got that view, Gaurang. Thank you so much. Well, the Tilaknagar Industries is making headlines as it competes with the Inbrew Beverages to acquire Imperial Blue, which is India's third largest whiskey brand by sales. Now the acquisition is valued at $600 to $650 million, could be one of the biggest in India's alcobev space in the last decade. Anushi joins us with more details on this.
Hi, thanks for that, Varsha. So what we are seeing is an interesting set of an update from Tilaknagar Industries, and this is based on a lot of reports that we are looking at, wherein companies looking to acquire Imperial Blue, and with this, Tilaknagar Industries and Inbrew Beverages both are competing with each other to acquire Imperial Blue, which is owned by global liquor giant Pernod Ricard, as we are looking at, and both these companies are seeking to tap the private credit market for the same that we are looking looking to raise around $500 million each to fund this acquisition that we are seeing. Do note that Imperial Blue is India's third largest whiskey brand. This is by sales that we are looking at, and as per reports, Imperial Blue is valued at $600 to $650 of millions of valuation is what we are seeing. So this would mark it as one of the biggest acquisitions as far as we see, and if this acquisition does go through, it would be one of the biggest that in the last decade or so that we are looking at. Last big acquisition was Diageo buying United Spirits for almost $2 billion in 2013. So this is the overall update that we are seeing. The stock is buzzing in trade on the basis of this news.
Thank you so much for that, Anushi. In fact, Global Spirits is also another one that is in focus on the back of a Daulat initiation. They have a target price of 1,600. That stock is also at the day's highest levels with gains of 3.5%. Gaurav, Global Spirits and Tilak Nagar Industries, are you seeing further strength after the kind of up move in today's session? Would you still be a buyer?
Yes, of course. I'll still consider buying Tilak Nagar Industries at these levels as well. I'll buy some quantity here and some above 400 mark for TI and look for targets close to 480. There is a very phenomenal up move that we have witnessed after a dull move that lasted for over 3 to 4 weeks in a row. This kind of a move came in, and on the back of such a good news, so I think this is a very positive move for the company, and the stock prices are likely to go higher in the coming 1 to 2 months.
Moving on, Dixon Tech is in focus after company forms a joint venture with Yuhai Precision to manufacture and supply components. Puneet joins us with more details on that.
Well, thank you for that. So there are two key updates in the company's backward integration play. The first one is they formed a joint venture with Zhongjing Yuhai Precision Manufacturing Company. Now, the scope of the joint venture is to manufacture as well as supply precision components which will be used in laptops, mobile phones, IoT applications, as well as automotive applications going forward. That's one and a major step in the backward integration process. Dixon will hold roughly about 74% stake in the joint venture with 26 with Zhongjing, and they will be holding the stake. Now, the second key update is also in the backward integration play that the company is doing. They've signed a binding term sheet to acquire 51% stake in Q Tech India. Now, the company is, in the manufacturing, sale and distribution of camera as well as fingerprint modules, which is used in mobile phones. So, camera modules is something that the company is already setting up and investing in, and the facility will come on stream in Q3 of FY26. So, these two key updates will help margins going forward. CLS has also maintained the outperform rating, high conviction outperform rating, target price 19,000, and about these transactions, they say that this could raise Dixon's value addition in smartphones to 45% of the components versus just 17% earlier, and hence driving the positive momentum on the stock.
Right. Thank you, Puneet, for all the details. Well, Gaurang, we all know that Dixon is a big player and has the economies of scale. One thing, your view on Dixon, and also wanted to have your view on Syrma as well, considering companies going into products which are high margin. So, two stocks. What are your views on that?
So, we like. Our research team likes the entire EMS, chip, semiconductor, and PCB sector. Dixon Technologies undoubtedly is one of the leading players, but we don't have coverage on Dixon Tech, so I won't be specific. And I think last week only there was some sell-side report, if I'm not mistaken. Correct me if I'm wrong on Dixon Tech. Now, coming to the sector, a huge support from the government because of the artificial stoppage or supply side stoppages artificially created from China a couple of years back led to its own problem to certain sectors in India. Thereby, the government decided to have a Make in India chip. We were supposed to see it last year, but I think it's going to come out by end of December 2025 is what I'm given to understand, and the statement made by the minister, Honorable Minister. One company that we have a positive coverage in this EMS sector is PG Electroplast. And my sense is that India, from being a net importer in the next couple of years, thanks to the push given by the government and the PLI scheme, should become an exporter from an importer of semiconductor and chips and PCBs.
An interesting take, an exporter from an importer, and that's the space to be in as well. But moving on, what is the talk of the town right now, and whether it's a talk of the town or not, is with regards Tesla's launch yesterday in India. In fact, the bookings have opened today. We will try getting you details in terms of what consumers are making out of it, whether they are booking it or not, and if not, why not. That is going to be key. But after the entry in the Indian markets, a lot of brokerages have come out with their reports with regards to impact on the domestic OEMs. Puneet has the details. Puneet, a quick overview of what brokerages are indicating with Tesla's new entry.
Well, thank you for that. So Citi is of a view that, at the current price point of over 60 lakh rupees, this does not pose any kind of threat to at least Mahindra and Mahindra's XCV90, which is priced over 30 lakh rupees at the higher end. So that's one of the key aspects. Amongst the rest of the brokerages, Morgan Stanley, Bernstein, as well as Macquarie, the common consensus is that these products and the price points that they're offering in will not have any impact on the current EV players amongst different competitive automakers. So for Bernstein, they've said that this will not see an immediate impact on Mahindra, but also not on Maruti as well as Tata Motors that operate EVs in India. Maruti is yet to launch the Grand Vitara EV in the market. It's expected to be in the second half of FY26, but they don't see any impact there. Currently, there's also a 70% minimum import duty that Tesla is getting hit from, and that's why the average selling price in India, as well as compared to the US, is almost double of that in India. Hence, we're not seeing that. They've also said that, for Macquarie specifically, they've reiterated M&M as a key outperform rating, and amongst all, they don't see any kind of immediate impact based on the price point, but giving it a thumbs up for entry for expanding India's auto sector.
Interesting take on this one. Gaurang, would you be a buyer of OEMs right now or a buyer of Tesla?
Well, honestly, I am not a great fan of Elon Musk or Tesla, to be very honest. So I'll give it a pass.
Okay.
Coming to your question, look, I think the lower end model is at about 60 lakhs, if I'm not mistaken, and the higher end version is at about 68 lakhs. That is provided you take the color that is offered by the company. If you want something to, as per your excitement and whims and fancy, that you have to shell out additional lakh or 2 lakh rupees for your shade that you want on your Tesla. Point number two. Point number one. Point number two, I think as far as vehicles are concerned, Hiral, Indian consumers are very, very sensitive. See, earlier the thought process was 1 liter pe kitna kilometer deti hai. But now the question has shifted from how safe the vehicle is. That's one. Second is the economics of the scale, how maintenance wise, etc. And of course the performance on road. We all know roads. I mean, India has better roads, but we all know how the roads in Mumbai cities are, especially during monsoon. And of course the price. I think there are better products available at a reasonable price, as your colleague was mentioning, Puneet, compared to what Tesla is offering. So, and I seriously don't think that it's going to have a major impact. In fact, Hiral, there are two more players. One is from China, that is BYD, Build Your Own Dreams. And the other one is from Vietnam, VinFast, which is also having a huge lineup in terms of launches in India. But I don't think these companies can have some serious challenges to names like M&M, Tata Motor or Maruti.
Interesting take, and in fact all the three did announce their entry in terms of a launch yesterday itself, and that was the key question as to how big a competition will these be for the Indian OEMs in the EV space. But moving on, real estate is buzzing in trade as well, and that's a sector that we're looking at. Anushi has the details in terms of what's happening with real estate, what's in store as per the pre-sales guidance that has come in for FY26 for the first quarter. Anushi, over to you.
Hey, it's an interesting reality check that we are doing for a couple of these realty companies in focus, and this is in line with how FY25 and how FY26 has shaped up. So in the last three periods that we are looking at, last 1 month or 6 months or 1 year period, we are looking at a downtick in terms of where the stock performance, index performance is concerned. And this is on the back of the overall FY25 outlook that we'd highlighted. So let's see what are some of these concerns that we are looking at. Firstly, the first concern being that, the FY25 was lackluster in terms of where the overall launch picture was concerned. There were approval delays which had taken place, because of which, only 87% of the companies could meet their guidance. So this is in line with the broader industry trends, also seeing a decline in the residential demand. Concerns also remain on pricing growth, especially in markets like NCR region. We did see the Knight Frank report indicating that affordability index has gone down over here, which brings focus on the demand side of picture. Other than that, the real estate upcycle, how long is this expected to sustain, is a question bit. But let's also focus on the positive triggers now, because if you are looking at FY26, all these concerns which had eluded in FY25 have clearly subsided. This is on the back of the overall launch pipeline that we are seeing for the first quarter of FY26. In fact, Jefferies is seeing about a 60% of a growth in terms of Q1 pre-sales booking just this year. 60% is the expectation that we are looking at. What is aiding is higher than expected repo rate cuts also, which is reviving the affordability and mid-income segment growth, which have been relatively muted in the last 2-3 years period. Unsold inventory market also have been remained at the lower levels of 15 to 18 months. So this will continue to support the demand levels that we are looking at. But let's see how they have so far fared in FY26. So if you're just pulling up that table, right at the top we have something like Prestige Estates seeing about a 300% of a growth, followed by Sobha, 26% of growth, and Macrotech continue to remain in line with what is happening in terms of the growth picture that is there, in line with the guidance also that they've given. Couple of big launches which took place in the first quarter includes the likes of Prestige Estates in the Puram launch, with which they made their foray in the NCR region. DLF Privana North is another one, 11,000 crore of sales booking that we have looked at. Oberoi Elysian Towers saw bookings of 970 crores. So these are a handful of big launches that we have seen so far. So let's compare this with the kind of guidance which is given for FY26, and right at the top we have DLF and Prestige Estates achieving almost 50% of their guidance just this quarter itself. So the questions would be whether there would be an upward revision in terms of where the stock price performance or where the pre-sales guidance is concerned for this. But also if you take account of the rating so far, analysts continue to remain constructive on the overall real estate space, and this is given by the kind of upside potentials that we are seeing, 14 to 24% for the likes of DLF, Sobha, Godrej Properties right at the top, while for Macrotech, Oberoi and Prestige, the analysts see about a 10 to 3% of an upside in terms of where it could go on. So this is the overall picture that we are building on.
Thank you so much for that. In fact, another exciting news is elephant from the luxury market, DLF, who is mainly in the north, is making its re-entry into the Mumbai markets. It's interesting to see how they had to pack up their bags the previous time. What is going to work for them this time, and what are the details of the project? Anushi has brought it down from RERA so far. Anushi, over to you.
Right, Hira, it's a big launch that we are looking at, and DLF is all set to base its Mumbai market re-entry with this. So they have received the RERA approval earlier for its first premium residential project, the West Side, the West Park Phase 1 project that we are looking at. Built up area of this around 57,000 square feet, and this is in partnership with Trident Realty is what we are looking at. The proposed completion being in June 2032. Now this project is being developed in multiple phases. So far we are seeing a launch of 416 flats, and this would be spread across 4 towers that we are looking at. A starting ticket price being in the range of 6.5 crore is the expectation here. But this is an interesting launch. Now this is again the first entry back in MMR region after the stint in 2005 that we had seen, wherein the company had earlier acquired 17-acre mill land plot for 700 crore in Lower Parel. But because of the global financial crisis in 2008, they eventually had to sell it to Lodha developers in 2012 for a consideration of 2,700 crores. So its entry back in the MMR market and what could be the launch pipeline forward is something very interesting to watch out for, considering the potential for this launch being around in the range of 2,000 to 2,500 crore of sales. If you look at the earlier launches in the first quarter as well, we just spoke about it. DLF Privana North recorded 11,000 crore sales, achieving almost 50% of its guidance just in this first quarter itself. Its guidance being 20 to 20,000 crore of pre-sales, and the expectation for FY26 remains 17,000 crore of overall launch pipeline. So interesting one to look out for.
Interesting one, and to be noted that the launch is slated tomorrow, so that's the reason why you will have a DLF that will be in focus today, seeing gains of around 0.6%. Gaurang, a quick view. Being in the Mumbai market, how are you looking at a DLF entry?
Well, more the merrier, isn't it, Hiral? And for Mumbai, the one classic growth or attraction is the entire redevelopment story, Hiral. Land is scarcity in Mumbai, and there are a lot of buildings of 1940, 1950, which are in a dilapidated condition. And very recently, I think Adani Group, Motilal Nagar is something that they got in terms of redevelopment. So there is a huge opportunity, and there's a lot of appetite in terms of all kind of entry-level, mid-size, high-end properties to get registered and get sold out. As a disclosure, since we are talking about DLF, we have a positive coverage on DLF.
Well, thank you, Gaurang, for that view. Gaurav, ITC and Tech Mahindra, they're gonna, report their numbers. How are the chart looking ahead of the Q1 results?
ITC is just trading close to the resistance mark of its 200 period exponential moving average, which will act as the immediate resistance. Once that is taken out, some bit of an up move is possible, although most of it will depend how the numbers come up. Otherwise, it is actually a lackluster range bound kind of a move that we have seen of late with respect to ITC. Now let's take a look at Tech Mahindra. Tech Mahindra is little upbeat on charts when we compare it with ITC. It is trying to inch higher after testing its 100 and 200 period averages. The volume support is also there. So there is some room of an up move in Tech Mahindra towards 1650 in the immediate near term. So that is the level that one can check for. And if someone is having a trading position, since it is due to come up with these numbers today, so volatility is likely. So I would suggest a stop below 1570.
Okay. Just a clarification over here, Varsha meant ITC Hotels and she spoke about ITC, though the graphics were of ITC Hotels. Gaurav was talking about ITC and then a Tech Mahindra, but completely out of time. Thank you, Gaurang. Thank you, Gaurav, so much for joining us on the show and giving those views and recommendations to all the viewers. Thank you from Varsha, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, it's a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this? जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the out
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Puneet. Well, Puneet, when it comes to the benchmark, not much of an action, but sectoral indices is the PSU Bank, which has been gaining in trade on the back of the gains that we have seen for SBI, and metals have been dragging.
Well, definitely, and I think with SBI, as you rightly mentioned, is the news flow that 25,000 crore QIP that the company might be looking to launch anytime soon, and some details that our colleague Suvarna has also put out. So that one stock is in focus. We've also seen some action early on at the start of the trading session today on stocks like Shriram Finance on the CV side, taking some cues from HDB Financial and the results. The stock was down 2.4%. It's continuing that momentum. Recovered from the day's load, but something like HDB hasn't recovered today. It's still down 3% as well. Let's quickly look at the Nifty 50 heat map first before we move on to our corporate conversation. In the show, we've seen something like SBI being the top Nifty gainer because of the news flow of QIP raising funds. Eternal is down 1.4%. On the gaining side, we're seeing Wipro ahead of earnings tomorrow, buzzing in trade almost 1.7% up, while Infosys is also up in trade today. Tech Mahindra is expected to report results today. Results largely expected to be flat, but that's also up about 1.2%. So that's on the Nifty. Let's quickly look at the mid cap and the small cap index. If it is actually beating the benchmark, a trend that actually has been going on for a while now, and today as well, while not materially, both the mid cap 150 as well as, let's quickly look at the small cap as well. If it's replicating the move, there you go, almost 0.2% of gains on both these indices. And finally, the BSE 500, a stock and actually a bunch of stocks reacting in terms of news flow. We're seeing the results helping something like a Network 18 to be the biggest gainer. Metropolis is up 6.4%. We're also seeing some positive move on a couple of financial stocks. Aadhar Housing is up, Star Health is up almost 4.2%. On the losing front, seeing some pressure on stocks like Just Dial post results. Results weren't that great for the company, and that's reflecting as well in the stock price performance, and also something like Shriram Finance as well. But that's about how the market is doing in terms of both the benchmarks and in terms of the broader market, Somit.
Well, let's welcome in our guest for the show today, Sunil Suresh, Chairman and Managing Director with Stanley Lifestyle. So firstly, to start off with, I wanted to understand, has there been any recovery when it comes to the B2B2C segment? Because there was a sharp drop that we had seen in FY25, right?
Yes, in terms of B2B, we have had slow traction from the automotive business we do, and also from various other mass furniture brands. So we have continued to see a bit of slowdown. However, I think from the B2C, we are seeing an uptick in our business.
And when do you expect some stabilization to happen here?
Well, I think we are entering Q2 with a more positive note, and we believe that there will be a good turnaround starting from Q2, and hopefully this season should give us much better results in terms of our B2B business also.
So, any growth targets that you can share for FY26 on the top line front and on the EBITDA front?
Yeah, so as far as we are concerned, I think post-listing, we have gone through a bit of what you call as plumbing changes in the system. We did not rush into kind of opening a lot of stores because the real estate availability of good destination stores was not there, and the rental demand was also very high. So, in fact, what we were supposed to open about 14 points of sale last financial year, we have done only 4. However, in Q1, we have actually opened 5 new points of sale. So we are on the, I would say, we are rolling our stores more meaningfully this year. So I think we are very clear that we are going to be an organic growing company. Our vision is to reach the 1,000 crore mark in the next 1,000 days, and that's how we are targeting and going forward. Yeah.
Hello, sir. Let me come back to you actually on what you said. A couple of things on, firstly, on guidance. 1,000 crores in 3 years, you said. What is the kind of expectations that you have for FY26 in terms of growth?
Yeah, we're organically growing at about 20-25% this year. This is what we have targeted, again, without losing sight of our profitability. So we're very measured in our growth, and that is what we have promised the market, and we want to continue playing in the premium end of the market. So that is where we are.
420 odd crores in FY25. So expectations will be to be around 550 to 600 crores for this year, while you will be maintaining 20% margin profile. Is that something that we can go with?
Something on those lines, yes.
And so you mentioned that you are looking and you've recalibrated the way you're opening stores as well. So specifically, you have a split between company owned as well as something on franchise owned as well. Is there a change in strategy of how are you going to open the new stores as well? Is it that something you're preferring to open company owned, company operated stores going forward in post the recalibration as you just mentioned?
Yes, so being a pan-India brand for more than 2 decades, we understand and we know better that today the major 6 markets have a greater potential for us, which are the A-grade metros such as Delhi, Bombay, Pune, Hyderabad, Bangalore, and Chennai. So these cities where we had the franchisees, we have acquired them, and now we are in all the 6 cities that we are now company owned. So we are actually growing in these major cities as company owned. Of course, for smaller cities and towns, we will go with the FOFO model or the franchisee model.
Right. And when it comes to the home solution business, could you give us some guidance of how the business has been performing and what are your targets for FY26?
So the luxury housing segment is just about, kind of coming to the market in terms of handovers. Over the last 5-7 years, there has been enough number of projects in the premium end of the market that were sold, and these projects are lined up to come to the market for furnishing in the due course of the next 2 to 3 years. And there has been obvious delays. Usually builders will assure about 4 to 5 years for completion of the project, but there has always been a 18 to 24 months delay in the handover of these projects across the country. So there is a lot of sold inventory which has not yet been handed over. So we are, kind of gearing up to make sure that we are present in those markets. Today, RERA gives us enough information as to where these projects are sold. So somewhere where we are underpenetrated, we are actually opening more stores in such markets, and we expect to see a good growth in the next coming quarters.
Right, sir. So, in the 4th quarter conference call, you did mention that you are looking for tie-ups or joint ventures with European brands and also looking to explore the Middle Eastern market. Any development on that front?
Yeah, there is already a lot of traction on one important development. I think we will make an announcement through the press in a couple of months, and that has already started work. We started developing the line in India now, and that should basically come through in the next couple of months. It's a European brand.
Right, sir. Well, that would be all, sir. Thank you for joining us and giving us more insights about your company. Well, that was
Thank
the
you.
management of Stanley Lifestyle. Well, now let's go across to Vaibhav Vidwani, fundamental research analyst at Bonanza Portfolio. Vaibhav, coming to you on firstly on Stanley Lifestyle. Yes, the growth had been a bit sluggish when it comes to FY25, but for FY26, the management has given a strong growth outlook. How are you looking at this counter?
Means as per the growth outlook, then also if we consider the all those prospectus, then also that stock is quite highly overvalued because stock is trading at a PE of 66. So I will say that in future, if this company will deliver robust number, then also I will say this stock is quite overvalued. So I will say we should be little cautious regarding this stock.
Got that, Vaibhav. Stanley, because of the challenges that management highlighted, stocks also reacted that way in terms of reserve. But going forward, some growth outlook that the company has given both in terms of store openings as well as what they expect in terms of performance. Let's put the spotlight on all cargo logistics. Now, all cargo Gati and all cargo tournaments across the companies, group companies are making waves on the street today. With the stock surging in trade today, investors are tuning in strong operational metrics as well as expanding trade lanes as well as rising volume. Let's get in my colleague Jasmeet to give us perspective on all of these factors. Jasmeet.
All right, thank you for that, Puneet. Yes, let me quickly give you a brief about the all cargo group. While the group is divided into three main companies, one is the logistics, then is terminal, then is the Gati. While the logistics, what does the company do is basically they have integrated logistics solutions in multiple orders that would be in LCL category. The LCL stands for less than container load category. While as for operational highlights for all cargo logistics, they have opened 2,500 direct lanes, while the LCL category of the business contributes 15% of the overall group market, while the air volume in FY25 saw a growth of 33.63 million kilo, which is up 30% from the last year. While in terms of revenue performance, the margin remains at 3%, while the FY25 revenue is at 23.5% up compared to the last year. While the next one in the list is all cargo Gati. While the Gati basically focuses on quick express delivery, the quick commerce delivery, and they are into supply chain solutions. While what the company does in operational metric wise is 99% districts in India are covered under the delivery service, while in Pan India they have 600 plus officers to make their delivery smoother. While in terms of financial performance, again the margin for this company also remains at 4% mark, while the FY25 revenue was up 2% at 1500 odd crores. While the last one on my list is all cargo terminals. While the stock was recently buzzing in trade today, the reason is the company's promoters are buying out few equities on the account of they are flowing in few funds for the company as they want to expand their business to multiple channels, and that's why the stock was buzzing in trade yesterday. While talking about what the company does exactly is the company is into business container freight and inland container freight. While the business container freight is basically the freight near the port areas and inland is basically away from the port areas, so the deal in unpacking, loading and unloading of the stock. And as per FY25 performance, this was the second year of the company being listed independently, and the company increased up to 29% in terms of expansion in Mudra district, while the company has also made investments up to 115 crores in the last year. In terms of financial performance, the FY25 revenue was up 3.5%, while the margins stand at 17% for this particular company in the overall group. When we look at the operational performance of the company, the current operating at 90% utilization. That's the reason why company wants to expand into various other locations so that they increase the utilization based on the increased demand in the market. While currently they have 70 active customers who are using their application on the portal. So this is the stock buzzing and to look up in the radar for.
Well, thanks for that, Jasmeet. Vaibhav, any of these stocks that you have any focus on? All three companies, all cargo, Gati, logistics as well as terminals. Any one that you have any preference on?
If we see all cargo logistics, I will say is also the stock which is trading at a very overvalued valuation. I will say it is trading at a PE of above 80. And in some areas, they have done a very robust performance. I will say contract logistics and air logistics. But then also means they have not delivered overall a very robust numbers. So if we as we are seeing at international level, there are crises. So if that thing get resolved, then also after that, if they will deliver robust numbers, then also I say that this stock is trading at a very expensive valuation.
Right. Well, another stock that remains in focus is Coffee Day. The stock is up 17% in the last couple of sessions, and today's buzz is largely because of the fact that a large HNI investor name has appeared in the June shareholding pattern. Who is that, and what are more details coming in for Coffee Day? Let's get in Vansh with more details.
Right, so the investor interest is the key driver that is driving the stock performance. And the renowned investor Dolly Khanna has acquired 1.55% stake in the company as of June 2025 shareholding. Now let's also understand the background of the company, as the company has been on the verge of bankruptcy. So basically, IDBI Trust had subscribed 1,000 NCDs of the company back in 2019, and in 2020, the IDBI Trustship had issued a default notice to the company for the 228 crore rupees default. And later, the IDBI approached the NCLT seeking insolvency proceedings for the company. However, the company challenged the NCLT proceedings, and NCLT initially provided interim relief to the company. Now, if we talk about the recent developments, IDBI Trustship approached the Supreme Court in Jan 2025, and the Supreme Court has directed NCLT to dispose of the appeal by 21st Feb 2025. As the NCLT was unable to pass the final order by 21st of Feb, final order by 21st of Feb 2025, the insolvency proceeds for the company has been demolished, and the stock is up 88% till date from the NCLT order. And the company has also disclosed that they have made defaults worth rupees 372 crores in the June 2025 quarter. So this is what the overall picture is shaping up for Coffee Day Enterprises.
Yes, Vaibhav, any views on Coffee Day stock? Because the run-up that we have seen in the last couple of sessions is largely because of the fact that Dolly Khanna's name has appeared in the shareholding. But fundamentally, do you see, or would you advise any investor to even invest in Coffee Day?
I will say we should not always take our decisions blindly. First of all, we should look for the business. Until now, there is no very huge update regarding the changes in the operations. Still, company have lot of debt to pay. So I will say till the things are not getting clear, what will be the way of doing business and how they are going to pay their debt in upcoming years. So we should not take our decision in hurry. We should wait for upcoming quarters and con call for the company.
Got that, Vaibhav, but Diffusion Engineers is the other stock that we're putting in focus after a recent order win. My colleague Anushi is now joining in to give us more perspective on the order as well as the company. Anushi.
Hi, thanks for that, Puneet. So, Diffusion Engineers, strong performance that we have seen in terms of where the stock upside is concerned in the last 1 month or so. It's seen about an 18% of an uptake, 6 months, 10% of gains. Well, in 1 year, it's clocked in about 71% of returns. Now, just on that note, the company is into manufacturing, welding, consumables, wear plates and wear parts, and heavy engineering machinery for core industries that we are looking at. Recently, it had been in focus on the back of a 48 crore of an order win. This was for supply of high pressure grinding rolls for cement industry. The delivery period for this being 11 months. And if we look at the overall orders in hand, that stands at 103 crores. This is as of the March data that we are seeing. But it's the outlook also that we should be focusing on, wherein the company now wants to increase its presence across newer industries and wants to widen its customer base as well. And this they want to do with a special focus on the international client base that we are looking at. Other than that, it is also building in newer solutions across sectors like Indian Railways, nuclear, mining and oil and gas as well. So Diffusion Engineers in focus on the back of these updates that we are seeing.
Well, thanks so much for that, Anushi. Vaibhav, for Diffusion Engineers, it's getting orders from newer segments that it wasn't present in before. Do you see that as one of the key positives into going into the stock?
Yes, like if we see this company have a good exposure in cement segment. So as we are observing that companies are doing expansion in this particular segment, so which will also support the revenue growth of this company, while as they are taking exposure into the other segments, so this will also support their revenue growth in upcoming years. So yes, I will say this company is also trading at a very attractive valuation. So I'm quite optimistic regarding this stock.
The next stock that is in focus is Thermalike Chemical. The stock's been gaining on the back of an update that they have given on their US operations. What is that update and what is the outlook here? Let's get in Varsha with more details.
Yeah, thank you for that. So the update is they're going to build 2 integrated plants in the US, and these plants will use N-butane from local shale gas as their only feedstock, and also products will be which are used in your special food ingredients. Now let's see what's the market opportunity and what's the strategy for the company going forward. The US chemical market, if you see, is well balanced, and there's a growing trends towards onshore supply chains now, and food ingredient markets is also showing is also growing fast in snacks and beverages. Now US is a major importer with limited domestic production, and Tirumalai and this TCI's investment is well positioned to meet this demand. Onto the project status, if I were to talk about, the 100% of plant and equipment has reached the site and most has been installed, and if you see, the targeted completion period and the startup is expected between October to December 2025, and the production and sales ramp up will be occur during calendar year 2026. Lastly, onto the outlook for next 2 to 3 years, this US facility is aimed at import substitution in North American market, and because of this, management anticipates that there will be growth in margins by FY 26 and 27. And lastly, if you see, the trade protection like anti-dumping BIS certification is expected to provide ongoing support to the company.
Right. Vaibhav, any views on this counter Tirumalai Chemicals?
So if we see, this company have not reported robust numbers from last 4 years, and means now they are taking exposure into the increasing their exposure into the value added products. So I will say in upcoming years we can expect improvement in margins or revenue, but still we should observe that how companies operating and they are improving their operational efficiency or not. So as per that, we should do our investment.
Got that, Vaibhav. So some caution there based on historical financials for Tirumalai Chemicals. But let's quickly pull up a D-Day Plastics as well and look at the 1 month chart for this. So we're seeing the intraday 4% move. Let's also look at the 1 month move for the counter, and you will see the sharp blip over the last few days. And we're putting the spotlight on this company. It's one of the leading polymer compound manufacturers in India. It's also product profile largely includes these high voltage PE-based cable compounds essentially, and other compounds in the HFFR region. Now, because of that, it does have a higher kind of exposure to the wires and cable industry, but let's also understand what it does in terms of process. It uses raw materials like polymer as well as PVC prices, which goes into the compounding process of heating, mixing, grafting and pelletizing, and hence it's also one of the key companies which is a recent listing in this year itself. In January of 2025 is what it got listed on. Since then the stock hasn't done much in terms of financial performance, but we've seen roughly the company report 2600 crores in terms of revenue. Margin profile is also decent at 11%, and it's largely split between 79% revenue coming from the domestic market and the rest from exports. Now it does have the company's mentioned that it is achieving guidance of about 5,000 odd crores by FY30 from the current 2,600 odd crores that it's done, and it's also looking to maintain these double-digit margins going forward. What's also interesting, over the last week we've seen brokerages like IDBI actually initiate coverage on the stock. They have a target price of 387 rupees per share, seeing a 23% upside, and believe that the company is poised to grow at a healthy pace, and that will be led by capacity additions in high growth segments, focus on R&D as well as optimizing capacity utilization going forward. So Vaibhav, with this context, someone like IDBI is looking at 13% growth in terms of sales over the next 2-3 years. I know it's a recent listing, but do you have any view on the stock?
If we see that stock is first of all trading at a very attractive valuation, and currently they have a capacity of 233,000 metric tons per annum, and they have a plan to add 35,000 metric tons per annum of capacity in FY26, while their utilization is of 81%, and they are expecting that in new capacity their utilization will reach to above 60% in a year. So I will say company is doing good, and company have that ability to deliver a robust numbers in upcoming years. So I'm quite optimistic regarding this stock.
Well, ITC Hotel numbers have come in. The revenues are up 15% on a YY basis. Net profit has jumped nearly 54% to 133 crore. from 87 crore last year that we had seen, while revenues are up 15% to 816 crore as against 706 crore. The stock is trading around 0.5% higher on the back of the strong growth that we have seen on a YOY basis. Vaibhav, any views on ITC hotels here or for the entire hotel industry?
If we see, means ITC hotels is a good stock, but we should always also consider the valuation part whenever we are investing. If some business is good, we should not do the blindly investment. We should also consider the valuation part. So as per the valuation part, I will say that stock is little expensive. So we should be little cautious.
Got that. And numbers largely seem to be in line. It has limited coverage in terms of ITC hotels. But EBITDA was expected to come at 241 crores. It's come in very close to that number. Profit also has come in higher than the estimates of 115 crores. So definitely a stock that will be in focus. Commentary as well as something to watch out for because of geopolitical tensions amongst others that's been happening in the country, affecting growth in terms of the bookings as well as occupancy amongst other reasons. So that'll be something to watch out for going forward as well. But with that, it's a wrap on this edition of Profit Top Trades. Vaibhav, thanks so much for joining in and give us your views on a whole host of stocks. Stay tuned to NDTV Profit. India Market Close comes up next.
Right now across the world, even Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly look at where the Nifty is at. And it's a fascinating day of trade because from the bottom, we've seen a decent bounce back. And that's the recovery that we have been waiting for. And we've got it, in fact, today. Let's quickly pull up the Nifty 50 index. We've seen this recovery continue over the last couple of trading sessions. But really, today, it was the kind of slight fall that we saw, and thereafter we've recovered fairly well for ourselves. 110 points from the day's low to the day's high, and now we're very, very close to the day's high. So around 100 points off from the day's low today. So that's the one big positive. Let's look at the heat map on the Nifty, see what's doing well, what isn't. M&Ms and some of the auto counters have been in focus, but M&M in particular showing remarkable resilience in trade today. Nearly 2.5% higher. The breadth is even Steven on the index. SBI as well, on the back of that fundraise announcement, is up another 2% thereabouts. And then outside of that, the IT pack seems to be doing fairly well for itself. Wipro, Tech Mahindra, Infi, those three are driving the IT index ahead. Nestle too within the FMCG pack. Tata Consumer is the other one within the FMCG pack doing well. ITC is up around 0.6 odd percent. Mind you, ITC Hotels will also declare numbers today. So that's the other one which we need to watch out for. What's not doing well? Okay, so ITC Hotels numbers are out. Shriram Finance is down 2.5% in trade as we speak. Some commentary coming in from HDB not working for that one. So that's largely the texture. Let's pull up what's happening in sectors, and within sectors as well. Outside of maybe media, PSU Banks is up 2% and IT is up 0.6%. No surprise where IT is concerned, no surprise where FMCG concerned as well, because we saw some of those FMCG names reflecting on the Nifty 50 index. But PSU Banks is where I'd really want to know who are the top gainers, because SBI of course is doing well, but outside of that the entire pack buzzing is definitely a positive. Nifty Bank continues to outperform. That outperformance has continued all the way through the morning and all the way through today, at least as of now. Hopefully that sustains. The metal index is one of the losers, and outside of that, the only major index which is losing is pharma. Defense, of course, is down 1/3% as well, in line with the pharma index. But broader markets, Neeraj.
Yeah, let's pull up the market breadth first to try and understand how is it looking. It's been steady throughout the trading day today, which is a good sign. You could argue from the highs, it's come off a little bit, but I don't think too many people will complain. The global picture isn't exactly constructive, right? So Asia Pacific markets have mostly fallen after the US-Indonesia trade deal, but not because of this. But while the trade deal was struck as well, the markets are down. European markets are mixed, but trade largely flat in trade. In fact, there's a warning from an auto major, and I wonder if that has a impact on some of the auto component stocks. But the Renault shares plunged nearly 17% after the French car maker lowered the guidance. So there's some weakness in European auto and European markets by and large. Our markets though, a lot of individual movers in trade, network 18, 15% higher, just that lower. But as you can see, the texture is more towards the gaining side. versus the losing side. Let's get up individual movers very quickly. So continued uptrend being seen in Waaree Renewable Technologies, up about 4% yet again, and Tilak Nagar up about 10% yet again in trade. Then the ones which are losing today, Newland Labs 5% down, JP Power 4% down, Ola Electric 1% down. All of these have had a pretty strong day the last few. So interesting kind of losses coming in. The buzzing stocks, Deccan Cement up a whole 20% now, Metropolis 7%, and Mass Financial, something that Harsh highlighted, up about 9% in trade today. So that's the other name. And last but not the least, some earnings impact being seen in Network and Hathway. Then numbers are yet to come, but presumably people will extrapolate 2 and 2 and therefore believe that even then Network's numbers could be good in trade. So that's the limited set of names which are active today.
So, okay, so all of those names, and we'll speak about some of those counters as we go through this show. But let's bring in Kush Bora for the call with regard to where he sees the index as well as the Bank Nifty. Kush, where and how are you assessing this?
Sure, first of all, very good morning, guys. Harsh, to you, aaj khush to bahut ho gaye tum. Your PSU pack has started to do well. And just yesterday, we were discussing how the private bank pack is looking interesting, but the PSU bank is where all the action has begun today, largely led by ICICI. But I'll come to that in just a bit. Just a quick word on Nifty. 25,200, we were expecting this 25,200, 25,300 range, to be maintained up until the expiry, the weekly expiry tomorrow. We're seeing that play out rather beautifully. PCR has been steady around the 0.9 mark for the Nifty. 25,200 call had a good base, but now you're also seeing an addition, a massive addition at the 25,200 put, which is a healthy sign. So I think this remains a pivot level, give or take 50, 75 points. We should perhaps see the expiry in that range on the Nifty. Texture remains bullish. Like I mentioned yesterday, you could still make a positional long on the Nifty with 24,900 and thereabouts as your stop loss on the way up. 25,500 and 25,750 remain your target. So nothing much to distort that view. For the last 2 sessions, including today, we are seeing a higher low formation, which is a very healthy sign. So yes, the positive texture on the Nifty continues. If you have a long position, from a position standpoint, continue to maintain that.
Long, if you already have longs, continue to maintain that is what Kush is saying. Kush, your top picks for this afternoon?
Sure. 2 of them. Yesterday we discussed 197, Paytm as one of our calls, and it's done rather well. 1,000 was the first target. With the kind of accumulation that I have seen yesterday, even today in the session that's gone so far, very healthy signs. I think this is one trade that you should continue to hold on to. So now the second target has been revised up from 1,025 to 1,050, and the stop loss comes in at yesterday's initiation price of 985. So Paytm continues as a long call. The other addition to this is Ajax Engineering. Very interesting moves on this one. Mild profit booking along with markets, but yesterday, today, you've seen a good rebound on this on the back of fairly decent volumes in the last 2 sessions. So 730, 755, your targets on the upside. 680 is where you place that stop loss.
Kush, not exactly. You weren't. The last we spoke, you weren't exactly positive IT. Does that still hold?
Very much. While PSU banks, yes, I did give some caution to in terms of SBI. I'm sorry, in terms of SBI not crossing that 820 mark, but today it has done, and how almost broke the door down. Volumes also up, the move steady. So this pack is doing well. Can't say the same for IT, right? I mean, hasn't really shown that kind of a spark. Even if it does, it's very difficult to rely on that kind of move. The index itself has not really taken out some of the key resistance levels. Right now, trades below the 50-day moving average. But I think that is very clear when you look at the mix. TCS, HCL Tech, even Wipro for that matter, not doing well. Among the large names, perhaps only Infosys is. Even the smaller names had come in for a round of profit booking. So yeah, I mean, you could have a bout here or there in terms of short covering in some of these names, but not a very clear trending move. PSU banks is where you could now see a fresh uptrend emerging.
And what about SBI in particular? You said broke the door down.
Absolutely. I was waiting for the 820 mark to be taken out. It has done that today. I think this move is here to stay. Also remember that it has a bit of catching up to do with HDFC and ICICI, which did have a good run. This one consolidated for the good part of the last month and a half. So I think this move could well continue. From a momentum trade perspective, 850 seems to be like a given target. But if you have a more positional view, then I think you should stay in for a move to 895, 900 levels on SBI.
Okay, and what about some of these life insurance counters, Coach? They came out with numbers, so that's on the fundamental side, and maybe we'll discuss that a bit. But what about how are they looking on technicals? And ICICI Pru and HDFC Life, how are those looking?
Very interesting. Even HDFC Life, if I have to begin with, had a very good run. Right now, you're seeing some sort of profit booking, some consolidation around the 750, 755 zone. But on the whole, I think the structure, the medium-term structure is very positive. 750, mind you, has been a medium-term support zone for HDFC Life. So if that does hold on, then don't be surprised to see a quick rebound to 785 and about 805 kind of levels. So very constructive. ICICI Pru, while the medium-term structure is bullish, it's had far more volatility and some more sell-off in the last two sessions, compared to HDFC Life. So while both remain positive, if I were to pick one of the two, I would bet my money on HDFC Life.
In fact, speaking of life insurance, HDFC Life has kicked off FY26 with a decent performance, a 14.5% uptick in net profit. Vibha Patelkar, MD and CEO of the company, talks about how the company's growth margin outlook trajectory looks like. Listen in.
So I would like to say that the margins have picked up, and let me deconstruct. Last year, so first quarter of last year, margins were 25%. We, as a sector, had to recalibrate our business model with the new surrender charges, which came into effect on 1st of October last year. So the impact of surrender charges, even if I did no change to any of my inputs in my business, it would have had a 30 basis points, which means my starting point on margins was 25% less 30 basis points. So my starting point itself this year was 24.7%. Versus 24.7% margin, I have delivered 25.1% margin, which means it's a 40 basis points increase in margins, despite all the bearishness or the sluggishness that we spoke about earlier. So really the margin increase has already started, and as a sector I am of the belief that over the next 3 to 4 year period there will be enough levers for a slow but steady increase in margins while growth comes back.
Well, that's insurance, and let's get in Gurmeet Chadda, Managing Partner and CIO of Complete Circle, on the show to talk about his thoughts on all of this and more. Gurmeet, great having you. Thanks for taking the time out. I hope all is well. And I hope your funds are doing well too. I'm sure they are. Gurmeet, before we talk about the markets at large, since we're on the topic of insurance, can I ask you, if you look at this space, do you like them? A lot of promise of growth. Somehow, the market returns haven't been really great for the last 3, 4, 5 years, whatever time period you take.
Hi Neeraj, always good to connect. We started getting underweight insurance post the taxation change which happened in the budget, previous budget, not the last one, wherein a lot of it gets sold as investment. This is the reality. I've been a banker for more than a decade, and insurance products in India are sold as investments, whether it is LIC or whether it is the private insurers, irrespective of whatever people would like to say. A bit of it was tax arbitrage, and after that above 5 lakh tax thing going, I think somewhere the banca insurance part and even the retail channel part got impacted. See, this is a sector which will give you a 15% kind of a growth as far as new business premium is concerned. Whatever the Excel sheet may say, penetration may say, I think and I think players who focus on individual protection more, term plans more, non-par products more, are likely to do better. So within the pack, HDFC, we like we only have right now non-life insurance names like Lombard. We are also looking at Niva, and we are looking at some of the other players, because that is where the growth can be 25-30%. Also, Neeraj, once this limit of Ayushman Bharat gets 10 lakh for senior citizens, you are talking of 33 crore senior citizens in India coming under a 10 lakh cover. And what it does to overall general insurance piece and healthcare and hospital and diagnostic is a far bigger story than playing this penetration, which we have been talking for last 5, 7 years. So I'm better off in capital market plays more, where I see 25, 30% growth, whether those are exchanges, depositories, mutual funds. Some of the brokerage firms are now available at 10, 15 times versus getting into life insurance. It's always a relative game.
Okay. A lot. Gurmeet, the interesting thing is, I mean, today I was watching a link on our channel. A link is effectively a researcher coming in and talking about one particular stock, right? And the stock that was being spoken about was DDEV Plastics. And then it got me thinking that India has moved on from a market which had 10 or 15 main sectors to having a sector, then a subsector, then a supplier to that subsector, and then a supplier to that supplier as well, right? And just that the number of companies available are so high. So I'm trying to understand the classic pick and shovel story, but the point being there are a lot more ancillary industries now to choose from. I'm trying to understand, when you think of, let's say, the building material stuff, right? Would you kind of look at the main building companies or real estate companies, or look at wire companies or cable companies like Polycab, etc., and stuff like that, or suppliers like DDEV Plastics or others who might be supplying to Polycab and some of the others, or copper players who eventually form the raw materials? This is such a long chain. How do you think about this, and is there a particular sector in which you like the supplier more than the actual company?
A lot of them, Neeraj, and I think this is where markets get evolved. Even if you look institutional ownership beyond top 500 stocks is now increasing thick and fast with growing AUMs with mutual funds, especially in small and mid cap categories. So one space we like, which is with this entire circular economy space, not really linked to building material, which is a recycling space. So plastic, since we spoke, we like this plastic recycling space. We were very early in Ganesha, almost entered in 3 digits. Look at this way, we consume like 5,000 crore plastic bottles. 40% of that is contributed by the beverage companies like Pepsi, Coke, etc. And we recycle hardly anything, right? And plastics takes about 200 years to decompose. In fact, there is a study which says the oceans will have more plastic than fish by 2040. So we really need to do that. And government has now come up with a regulation of using recycled, 20, 30% recycled content. And I think there is a fine to it. And industry capacity is just about 60% in terms of meeting that demand, and Ganesha is about 30-40% of that. So we like that. Then we are also looking at digital dump, which we are doing, which is the electronic waste. The way we are reusing or getting our mobiles changed, our consumer appliances changed. I think that's another area we like. We also like water as a theme. Water is one of the biggest themes in my view next 5 years. So we like Vatek, we like Iron Exchange, and some of the other names. And then the last one is zinc recycling. And we like JB Chemicals. Again, got lucky there. That's more a zinc dioxide play. But zinc also has end use in tires largely, and then specialty chemicals for now. So I think this circular economy space, where we say that, I think this is a huge, huge opportunity. Global waste management is $600 billion. India is not even 4-5% right now. We're just starting. And some of these problems, clean air, clean water, less plastics, these are genuine health problems which need to be solved.
I'll take a big shift from that, Gurmeet, and talk a little bit about lending, because you've got some of these CV financiers under pressure given HDB's commentary. What's your take, one, with regard to HDB's numbers itself? A lender where the cycle, at least the management indicated, seems to be turning. But at the same time, new listing, HDFC Bank's subsidiary, and has tailwind both cyclically, but does it have enough bandwidth in terms of valuation? And what do you make of the commentary given the kind of spillover effect it's had on a Shriram and a Chola today?
I'm extremely bullish. I think we are at the cusp of new phase of corporate lending. 300 out of 500 Nifty companies are debt free. So they have been averse to capex. I think the capex cycle is just starting. I'm some of the early proponents of it. Fingers crossed, very early, but that will happen. And if you see SBI is doing a QIP, a lot of fundraising is happening by NBFCs. And 3-6 months down the line, you will start seeing mortgage at sub 7, car loans at sub 7. And since we haven't seen it for 4 or 5 years, people have forgotten what happens when credit picks up and the secondary impact it has on consumption. My sense is, look at, for example, HDFC Bank. You're getting it at what, 110, 112 BPS, price is around 2000. There is a bonus announcement, and yet there is hardly any reaction on the stock. So somewhere down the line, the market is obsessed with picking multi-baggers, going down the value chain. Sometimes you are missing the simple, boring stories. I think financials are due for a big, big breakout. I also sense some big reforms coming, both from a FI ownership, also from voting rights being capped at 26%. I think there's an overall needed, and it's a long due. Last time we did serious banking reforms was 2003. So you will see some big reforms coming. Finance ministers talk about NBFCs, how big they can become, how the important role NBFCs will play in next 10 years. So I think there's something big happening in banking from a reform perspective. And once the interest rate cycle starts easing, I think the secondary impact it has on consumption and lending, I don't think so the market is factoring in right now.
Could be just a follow on to that. So one, there's already been a bit of a re-rating that HDFC Bank has seen, right? But and now size has started to matter. So they've done dividend. That makes sense because they likely don't need that capital at this point because there's no growth capital requirement per se, and there's enough profitability to support growth. But how should one therefore look at valuations? Because pre the merger, you were at 13 lakh crore, large runway. Post the merger, you're double the size now, 25, 26 lakh crore, merger plus a couple of years. How do you look at valuations? Now you're at 2.5 times book. That's one of the most expensive banks when you're looking at it from a global perspective. But at the same time, runway for growth, is it strong enough? Can it do 18% on this size?
I think 15%, yes. 18 would be challenging. I agree with you. I think same thing was said for Bajaj Finance also, a few months back when it was hovering at 6,000 pre-bonus and split. And good companies make a comeback. So once the cost of funds comes down, net interest margins start improving, there are treasury gains because GSEC yield is falling, and then you have a good uptick in the economy in the second half. This credit growth of additional 3-4% can give a big delta because bank balance sheets are leveraged. And I don't see even global banks doing 20% ROEs. Which global bank does a 20% ROE? Or 2% ROTA for that matter. So I think India doesn't. I mean, it's unfair to compare. And look at the largest bank in US is $3-4 trillion. Our largest bank is what, $200-300 billion. I think we will have a $1 trillion bank very soon. So I'm not saying this is a multi-bagger thing, right? But this has been underperforming Nifty despite the recent run-up for last 3-4 years. It's never done that in last 20 years. And once the interest rate environment changes, regulatory reforms happen, more participation comes. I think it will continue. So I think financials will probably be 20% CAGR for next 2-3 years.
Very interesting. Gurmeet, you've been an early investor in a clutch of defense names. I know that, right? There are now companies coming out with defense, aerospace funds. So defense is a known theme. Aerospace, both commercial and defense aerospace related component suppliers. How big could this be? And are there companies in this space that, I'm not asking you for a buy-sell recommendation, but are there companies in this space which are doing interesting business or of? Because I don't think too many in the market know of aerospace sector related firms.
So a lot of defense companies will also get into it, Neeraj, especially the private players, right? And I think one space which is not really aerospace but coming up is simulators. So globally, the ratio of physical training to simulation training is 70-30. India, on the other hand, is 90-10, with physical training being 90. Now, in a digital economy with modern warfare, you cannot have physical training. And this, I'm not talking just from a defense perspective. I'm talking from aerospace in terms of, even the aviation sector and a lot of spaces where you need simulation. So I think there are a lot of opportunities coming in that space. Also surveillance. I think the kind of borders we have, we just did a strike on Myanmar, which got unnoticed. We have what, 1,200-1,400 kilometer border there. Then you have different, unfortunately, very hostile neighbors across. So that's another opportunity which again has not been. And by surveillance, I just don't mean wiring. Surveillance is if you put modern surveillance at work, with the kind of spread India has, that's like 3-4 crores per kilometer. So that's the second opportunity. And then, there's this entire sector. It is same as where electronics was near 3-4 years back. People used to question whether Dixon is still okay. So 4 years back, the top line of Dixon has today become quarterly profit. Right. So just the growth runway, if EU does what 5% of GDP as defense, you're talking about additional $500 billion of defense spending, and not even coming to the Saudis, the Middle East, the African and the Latin nations. So I think the entire thing will get re-rated with Trump being there, unfortunately, for 3 years more.
Point taken. Gurmeet, you've spoken a little bit recycling, you've spoken a little bit about financials. Outside of these two, and defense maybe, any big theme that you're looking at from the next 3 to 5 year perspective, which you're buying today and you believe will be steady compounders for the next 3 to 5 years, where valuation is on your side, growth at the right price?
I think power equipment is one space where I think the valuations are still reasonable, and including the PSU names, including some of the private ones like Kalpataru. Look at a Tata Power also 30 times, not cheap, but not like really expensive. And then you have a lot of names there, and I think there's a huge opportunity in transformers, in rectifiers, insulators, huge opportunity. Our mix is now fossil, non-fossil, almost reaching 50%. So the issue is always transmission. Second space, I think the other space, which I think is the rural-based thing, the agrochemicals, the normal chemical names, very under-owned because, look at the numbers Relis came up. And I think once the rural economy picks up, the cycle tends to be, much longer. And I'm putting a lot of money on rural recovery coming in that place. So I think a lot of agrochemical names, especially who are thinking ahead in terms of, crop protection, seeds, fertilizers, etc. So PI is a very old favorite. We like Coromandel here. I think the group itself has demonstrated in, being ahead of the curve there. So that's another one space which I think is very under-owned and probably needs, and look at the money government is spending on, the different schemes they have, whether it's Ladli Behna, Lakpati Didi, the kind of stuff which is happening on nano urea. There's a clear focus on the hinterland, lifting people above the poverty line and focusing there. And I think whenever monsoon has been 5% above normal, the agriculture GVA goes up to 6.5. Haven't seen that for a very long time now. So there's big re-rating and big potential there for next 2-3 years.
Excellent. Thank you so much, Gurmeet, for a great conversation. Always refreshing to hear new thoughts coming through from you, and that's always the case. So thanks for that. But what we'll do is we'll slip into a very short break, ladies and gentlemen, and stay tuned to NDTV Profit. On the other side, we'll get you all of the chatter from dealing rooms as Samit walks in for Heard on the Street. Stay tuned.
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back to India Market Close. It's 2:30, that time of the show. We're going to get you what dealing rooms are recommending or talking about rather. And Sumit Sarkar, who dials up those phones in a very busy fashion through the day, through the week, joins in with a set of 3 or 4 names that must be the talk of town right now. Sumit.
Firstly, it's Veranda Learning. Dealers are indicating
Veranda Learning.
Yeah, there could be a potential fundraise is what dealers are indicating for Veranda Learning. So keep an eye out for this counter because large HNIs have been accumulating this counter in trade today on the back of this fundraise buzz that is there. For Tega Industries, again, a fundraise buzz that has been there and multiple private equity investors have shown interest in this counter. For diffusion engineers, dealers indicate that large HNIs have been accumulating this counter in trade. The stock is also up 4% in trade. For ABB, there are sell flows on large HNI desk just ahead of the ABB global numbers. Now, the global numbers will come in tomorrow morning around 9:30ish. So keep an eye out for ABB. There are sell flows in trade today. And when it comes to Shoppers Stop, there are buy flows on large HNI desk again on anticipation of strong Q1 numbers. So keep an eye out for that counter as well. It's up 5%. And another stock that we spoke about a while back, that is Deccan Cement. That stock is up 20% in trade. The buzz was of a potential stake sale happening to a larger peer. So I guess that's been around in the market and hence the stock has had an upper circuit of 20% in trade today.
That's a really sharp up move there, Sumit. So on Deccan, it's interesting. I mean, are there timelines being given about when would the deal something like this?
No timelines, right? The deal is happening is what the dealers are saying, but there are no timelines yet. But what I understand is that the price range what they had indicated earlier was around 1100 to 1200 rupees. So that currently stays. There's no change. Either it could go on the higher side, but not on the lower side is what dealers are indicating. And a couple of names have been shortlisted so far, but no timelines of when the announcement will come.
So I know I'm pushing this, but I'm just asking you, do you know the EV per ton valuations of Deccan Cement?
No, I have not calculated.
Yeah, like I said, it'll be pushing it too much, but yeah, but that's interesting. Okay, so Deccan Cement, watch out for Veranda as well, potential fundraise activity out there because of which HNIs are accumulating that stock. And
Tega Industries.
And Tega Industries, where there could be some fundraising as well, so keep an eye out for these. Thanks for that. Sumit, Kush Bora, a view on any of these stocks? Tega, Veranda, Deccan Cement is up 20%, but if the chart suggests anything.
Book profits. I mean,
In what? All three?
All three of them, or rather, you could hold with trailing stop losses, because you see the kind of spike that has come about, in all of them, and mind you, it's not today's spike only. So let me take a Veranda in as a case in point. 195 about 8-9 sessions odd ago, and now already hit 269, 270, and then cooling off from there. Tega also was on my radar, this morning, yesterday, today. The volumes are up, approaching overheated territories, and Deccan again, had hit overheated territories, some cooling off, and then today, as we already know, that it's at the 20% circuit. So you don't want to sell momentum per se, but my suggestion would be maybe book partially and then hold the rest with trailing stop losses anywhere from 3 to 5% lower, as the case may be, but definitely not fresh buying in at least these three names.
Okay, so no fresh buying in those three names at the very least. Kush, anything that any stocks that are standing out for you at this hour? Of course, we've taken your picks, but any stock recommendations very quickly?
Yeah, so LIC Housing Finance is something that stands out. We had this call today morning as a part of our advisory research, but it's already run up quite a bit, hence could not initiate it as a call now. But on the whole, the structure looks very interesting. 635 is a minor resistance. Once that is taken out, you would see stock hit 655 and higher levels also. Volumes have been gradually increasing over the last three sessions. So yeah, I think interest rate sensitives, will do well going forward. PSU banks, we've already had enough discussion on. I think some of these housing finance names also might start to show positive traction. LIC Housing stands out for us at the moment.
Very interesting. Also welcoming on board Samir Dalal, Natwarlal and Sons joining us at this point. Samir, taking a cue from where Kush left off, these housing financiers, can classify them in two buckets, right? One are those which are trading at super cheap valuations and may or may not offer anything above mid-teens growth. And then there is this other small housing financiers, affordable housing financiers as they call it, and they have shown very, very robust strength in terms of growth, but also in terms of stock price action of late. Which camp do you sit on? Do you like any of these, and any names that you have?
Yeah, so thank you for having me on the show. And to start off with, I'm also very positive on the housing finance space, and we've been for some time. LIC Housing Finance, which Kush just discussed, we also have a buy recommendations trading at about 1x book value. It's the largest housing finance play in the space. Look, at 3 lakh crores, growth is not going to be obviously the biggest, but even if they can grow at about 12 to 15%, we can expect a re-rating in valuation closer to 1.3, 1.4 times book, and you have a 15% growth. So I think there is value there, and there is an upside opportunity over the next 1 year. So our initial 1 year target is about 900, and 2 year target is close to about 1100. So we have a buy on that. Another one in the housing finance space, which we've always said on your TV channel, is a company called Samman Capital, the erstwhile India Bulls Housing Finance. Of course, the India Bulls promoters are out, and now it's private equity that run the show. They've running down their old legacy book. They are building up a new book. They're working on co-lending and sell down business models, so they can continue to grow their loan book without really needing to raise too much more capital from here. They have ample capital trading at 0.5 times book value. Their target is to get to 1 lakh crores in AUM in the next 2.5 years. I believe that is something might be a little difficult to achieve, but even if they can get close to 80, 90, I think they'll have done a phenomenal job given the fact that they're running down their old book. And I think there's value upside, so it's a valuation re-rating plus growth in the overall book. So there. And when it comes to some of these smaller housing finance companies which are doing the low income finance, which was your question as well, there always remains a bit of a risk, because you are taking high yields, but you're taking a bit more of risk on your book. So if for some reason the cycle were to turn negative, then the first round of pain would obviously come to them. Now, obviously, the biggest advantage in a housing finance company is that you don't have too many. I mean, even if you have NPAs, you have the asset as collateral. So from that angle, you're safe, but then the stock upside might get limited. So I'd rather stick with the guys who are doing more prime plus and get the upside from there, have a safer, steadier return rather than try to get a multiplier effect when you have companies trading at as cheap valuations in the space as you do.
Point taken. How do you view a Mars Financial, Samir? While we're on some of the smaller lenders, this is one stock which is on a tear today in particular. So let me take your view first. 2.4 times book, if I recall right, and does a fairly stable ROA.
Yeah, so unfortunately, Mars is one of the few companies in the housing finance that we don't cover. GIC Housing, Canfin Homes, PNB, all of these are under coverage. And we are positive on them, but I think valuations for the others are a little bit not stretched, but on the higher side with limited upside re-rating valuation, multiple possibilities. Hence, the ones that we suggested are the ones we feel have more upside.
Do you have a view on Mars? Kush, would you have a view? Yes, please. Kush, you're on mute, I believe.
Am I audible now?
Yes, very much.
Yeah, great. No, I think here too is time for a partial profit booking. The stock was in a mild uptrend, consolidating with a positive bias when the Nifty wasn't really doing too much. So relative strength was apparent. Today, on the back of this news, the stock's actually given a big breakout, but now comes at overheated territory. So yes, I wouldn't suggest a complete exit out of this one, because if you look at it at a weekly setup, then yes, there is a lot of upside left, and that could take the stock to 365, perhaps even 380 levels. But not a bad idea to start booking some profits at these levels. The breakout was imminent; it's come about, so yeah, you might want to take some money off the table. Maybe redeploy when the stock starts to see some profit booking. At the moment, ride the momentum, but keep taking profits along the way.
Okay, so that's the take coming in for a Mars Financial stock up nearly 9.5%. Okay, let's talk a little bit though. Union Minister Prahlad Joshi was addressing the media at an event in Mumbai when he said that India has crossed the 50% target clean energy before time. He also said that the world is astonished seeing this. Listen in to a slice of that.
50% for 2030, that was the target. Now we have achieved well in advance, ahead of 5 years. And further also under the leadership of Prime Minister Modi, by 2047, whatever we need to achieve, that we are going to achieve it. And 2070 net zero, towards that also we are planning and we are working out well. I am quite confident. The way in which we are going ahead, you also, I think, you feel confident about the growth and the way in which we are growing under the leadership of Prime Minister. I am quite confident, and even the reaction after announcing yesterday, many world players also expressing very happiness and surprise also. Ahead of 5 years, how India can achieve this. And that is to 243 gigawatt, 244 gigawatt. It is a small thing, not a small thing. So people and the world, some people are astonished, some people are surprised, but we are very happy and world is also very happy.
Certainly, it's a moment to cherish, and we'll be talking to some of the clean energy companies over the course of the next few days, and we'll talk to them about this particular thing. Anyways, but as India crosses the clean energy targets as well, what to expect from the industry going ahead? My colleague Varsha has some details around this. Varsha, what are you telling us?
Well, Neeraj, India is certainly making headlines on the global stage, achieving a significant milestone in its journey towards sustainable energy. Now, India achieves 50% non-fossil power capacity 5 years ahead of target. This milestone was set under India's Paris Agreement commitments. India sets global benchmark for sustainable growth. Let's see the total power capacity, which stands at around 484.8 gigawatt, out of which non-fossil fuel capacity is at around 242.8 gigawatt, and the renewables capacity is at almost 184.62 gigawatt. Let's talk about how this was achieved. So this was accelerated by various government schemes such as PM Kusum, PM Surya Ghar, Muft Bijli Yojana, Solar Park Development, and the National Wind Solar Hybrid policies, which have laid a strong foundation for this transformation. Wind energy, if you see, continues to play a vital role in meeting India's evening peak power demand. Also, India reinforces its leadership as a clean energy front runner as well. India's milestone, if you see, allow for higher goals in clean energy, and the focus areas include doubling clean electricity use per person, and BESS, that is battery energy storage system, and pumped hydro are critical for reliability and 24/7 power. Let's talk about what is the role of AI into this. AI will improve demand forecasting, maintenance and grid management, and government is also boosting energy storage system to ensure grid stability for intermittent renewables. Lastly, what is the road ahead and what's the installed capacity as of 30th June 2025? The country is moving towards target of 500 gigawatt of non-fossil capacity by 2030 and with net zero emissions by 2070.
Okay, thank you so much for that, Varsha, for giving us that perspective. Samir, coming straight to you, where within the power value chain are you seeing value at this point?
So that's the problem. I guess value is a little difficult to find. Everything else is great. What you talked about, the growth opportunity, you know, we've been very positive on the renewable energy space. We believe the growth opportunity for solar and for wind is great. But let's look at the few listed players that are there, right? So the one place where we do see value is Sterling and Wilson Solar, but they're not the solar park owners. They are more of the developers, in the sense they set up the solar park for you, right? So we believe there's an opportunity because the order inflows, like you mentioned rightfully, that, you know, if you want to by 2047 get to a particular level and by 2070 get to a particular level, you're going to need a huge amount of solar parks to be set up, wind energy parks to be set up, and they're doing all of that, right? So we think that growth opportunity is quite good. Valuations will look expensive because they don't have much profits to speak of from the last year. But as the order inflow increases and the turnover of the company goes up, from the last year, we are expecting it to be up 20% this year. And then probably another 25-30% next year, the operating leverage kicks through, and that will lead to great profitability. So if you actually project 2 years forward, the valuations may look a little reasonable. Suzlon, we believe, also is a great opportunity. But again, valuations are not cheap. Look, as they keep getting more orders and they execute more, then again, for them, the operating leverage kicks through because they're working at 50% utilization. They really need to get to 100% utilization or close to that number, anywhere close to that. If they can achieve that, then the profitable numbers will start showing in. And then the O&M side will also start kicking in. So you have companies which do the O&M, which is KPI, Green Energy Limited, which is the O&M. Not even KPI Green is a good company, but the O&M part of his business is also something that we think will get great traction going forward. But these are all slightly longer term plays. So even though we believe the next 5 years is going to be great, we would love corrections in some of these counters like Suzlon, in KPI Green also, which has run up quite a bit. But Sterling and Wilson is probably the only one where we feel valuations are a little bit okay if you look at it on a forward basis. And that is the one space we buy. But yes, we are very positive. And then, of course, you can also look at companies like Tata Power, Adani Energies, who are going to be the owners of these facilities. Because once the capacity gets on, so in the initial phase, they're all going to be in the capex. So they'll put in a lot of capital. But once they get into the phase of generating the power and start selling it, then the operating margins are phenomenal. And then they can start paying down their debt. And once the debt leverage gets comfortable, I think then you will see us. So I would wait for those guys a little longer than I would wait for the others, which I just mentioned first.
Okay, that kind of show where we also get in some worldview or global perspective, and we have Jim O'Neill joining us, ex-commercial secretary to UK Treasury. Welcome, Jim. Good morning from where you're at. Give us perspective on all that's happening when it comes to European auto. What are you seeing in terms of trends? And I speak this only from a perspective that Renault has given this guidance that they're seeing a bit of a slowdown. What does that mean for the economy as a whole? You have a great perspective, a good pulse on that. So give us that perspective.
So I have absolutely no idea about what's going on in the Euro auto sector, to be honest.
Okay, sure. I just wanted your take on what that means from a European perspective, but I get your point. Okay.
I think there are so many cross currents going on everywhere, and maybe those Renault numbers reflect a modest part of the negative things that have been influencing consumers. But I would argue that the most important thing, which is being picked up by some leading economic indicators, particularly for Germany, is there is some belief that the shift in German defense and fiscal policy will actually help to improve the economic performance, obviously in Germany itself, but because of Germany's importance to other European countries, maybe elsewhere. And it is very interesting to me because I linked to my old life back in my Goldman days when I played a role helping develop a global proprietary leading indicator. I still look at a number of those statistics which are published either weekly or monthly, and most of them are heading gently downwards. But the one exception is the IFO Institute survey of business expectations in Germany. And so at some point, if that's for real, you will start to see that in the performance of some real-time companies, as well as spending numbers in different parts of Europe, I would guess.
Right, Jim. Jim, if I were to take a couple of steps back and maybe zoom out from April to now, everything that's happened with regard to tariffs, how realistic is this? Implementing tariffs without really having a knock-on effect on global as well as US inflation. How realistic is that in your opinion?
Well, first of all, you asked me that question the day after the latest US CPI numbers have unsettled the US bond market. And if you delve into the details, I read an analysis of it just 45 minutes ago. There are the first signs that the tariffs have started to come through import prices into consumer prices. And so I suspect we're about to enter a new phase of how the markets are behaving, because of course, as we go through each day between now and August the 1st, the US is seemingly going to announce deals like the one it claims it's agreed with Indonesia overnight, or it's going to have higher tariffs with countries that it can't reach a deal. The markets, as you imply, have effectively assumed there's going to be no inflation pass-through. The US raises revenues, which the Trump administration is almost boasting about from tariffs, and there won't be negative consequences. But that is very unrealistic. And I think the CPI numbers we've seen yesterday give you the first hint that there is some pass-through. And obviously, if this is the new mood, it's only 24 hours, but that means the higher the tariff announced, the more people will start to worry about that aspect of it, which itself could have consequences for stocks.
Jim, there was some thoughts that Europe can't give too many concessions any which ways because Europe doesn't have anything to give when US talks about or Trump talks about what they are doing. So the question though is this, that if this were to reach any kind of a stalemate position, if you will, does it have a material impact on global growth for the second half of the calendar? And can markets, let's say for example India or select markets which are more inward oriented, shine because of their ability to grow despite global growth pressures?
That's the $1 trillion or the 40 trillion rupee question. I don't know is the honest answer because it's so complex, but I think you've got to look at three interrelated parts. The first of which is what's really going on in inflation. We've also had in the UK this morning coincidentally, a higher than expected inflation print. And it's important to not ignore that in both the US and the UK, so-called core inflation in the very latest month is running quite a bit ahead of target. And so if that persists, you will see bond markets starting to worry again about inflation. So that would not be good for global financial conditions. And obviously for those markets that are most overbought, or especially ones that are involving a lot of leverage, it would probably be a negative. The second thing, which is also bond related, and I'm surprised it's not getting more attention, there continues to be quite a significant deterioration going on in the performance of Japanese bonds. And Japanese investors, of course, have been one of the largest accumulators of foreign assets for a long, long time. And at some point, if Japanese bond yields keep rising, that would have its own negative consequences for elsewhere. The third thing is whether the other issues that are affecting these, including tariffs, but also directly fears of inflation, start to affect real economic numbers. And I think in that regard, it will be extremely interesting to see the monthly purchasing managers when we get to the start of August for the month of July, because that will give us a flavour as to whether this is really starting to affect the way people spend and companies behave. So if I sort of put all of that together and going right to your question, I think there is something to be said for defensive markets which have some ability to reflect what's going on in their own economies separately from all these global influences, could do better. And obviously India stands out, certainly in so-called emerging markets, as a very big, if not the biggest example of that. However, if we get into a situation where there is a whole new sustained rise in global bond yields, it will be very hard for anywhere, including Indian markets, to resist the consequences of that. So there's a lot to play for, and of course, not only have we got those PMIs to look forward to, but it will coincide with the August supposed deadline for the Trump tariffs.
Well noted. We'll leave it at that, but thank you for these answers. They really help, and much appreciate your time.
Okay, good luck to everybody. Take care.
Thank you, you too. That's, well, an important voice, Jim O'Neill. But like we said, the European markets are very, very quiet right now. Let's take a break. On the other side, we get you top BTST ideas and a lot more. Stay tuned.
Brought to you by Canara Bank. Together we can.
Sammaan Capital Limited announces a public issue of secure redeemable NCDs, offering coupon rate of 9% per annum for NCD holders in category 3 and 4 for 24 months in Series 1. Tranche 4 issue is open for subscription. To subscribe, log on to www.sammaancapital.com. For issue structure, risk factors and more details, please refer to the Tranche 4 prospectus available on the websites of SEBI, stock exchanges, company and the lead managers.
रास्ता है वही शहर, बदले हैं नजारे या नजर।
चाचा, इतना सारा पानी, ट्यूबवेल, बिजली तो आती जाती है। ये सब वो अपना सूरज है ना,
सब उसका कमाल है।
तू कब आया अभी लाइट से?
अरे वाह ताई, पहचान गई? शहर जाके आँख का ऑपरेशन करा लिया क्या?
शहर जाए मेरी जूती। नहीं, यहीं अपने गांव में ही करवा लिया। वो जो सूरज है ना अपना, वो सब कर रहा है।
Right now across the world, even in Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and arms.
Q4 FY25 numbers, of course. Now let's look at what this means in terms of FY26 book value. The QIP, the book value is at 549 rupees a piece. Now that inches up by 2% odd to 559 rupees a piece. This gets you a price to book value of around 1.47 times the current market price. That's the price to book value based on the post money book value. They've also approved raising for around 20,000 crore via bonds in FY26. This obviously signals growth, positive momentum for both State Bank of India and the banking system as a whole. State Bank of India gearing up for growth at a time when we've seen the repo being lowered and deposit growth coming back. So both of those likely to be levers. Let's quickly go across. Kush, give us first a technical view on a State Bank of India. Give us levels to look out for. I know you're positive because you spoke about that, but give us levels to look out for on the immediate short term.
So yes, after crossing that 820 mark, and looks like that we'll be closing on SBI above that mark. The trend, the positive trend resumes on the upside. You're looking at 860, 865 once that is taken out, and 895 to 900 kind of level as well on the SBI. Very much on the cards. I think that spurt which was due will come about. This will take the PSU bank back also higher. So if you want some more names in the PSU bank, then I prefer Canara Bank and PNB. So yeah, all three are something that you can keep on your radar.
Okay. Well, the other set of stocks, and since you're talking about financials and non-lending financials as well, look at Edelweiss. There's been a sharp jump up there in the stock. Just watch out for that one. Now, I wonder if some of these capital market plays, which have got multiple other businesses within them, might become good plays. Samir, any thoughts here? I mean, it could be an Edelweiss, it could be a JM Fin, it could be Motilal Oswal, but multiple financial capital market plays having a variety of businesses under them.
Yeah, so the ones that have a variety of them and that cater to more of the insurance or the mutual fund management business, I think there is value. Where the heavy dependence is on brokerage, and when you say capital market, when you talk about some of these BSE, MCX and all of these, there I have a bit of a worry because right now the kind of volumes that you're getting on the exchange are tremendous. And you always go through cycles. These are cyclical businesses. When you have a bear market, the volumes will decline, and then the operation, the turnover from that vertical will start declining. Now the point is whether you should look at some of these companies which have already run up quite a bit. I think GM's seen quite a bit of a run up. So has Motilal Oswal. Edelweiss, I don't have coverage on, but they do have a fund management and fund management business, but they sold off some of the other businesses that they, the wealth management and all, which has now become Nuvama. But something like that, Nuvama or Anand Rathi, which do wealth management 361, those look like interesting plays, because what you're going to see is more of wealth management picking up as an industry, and this is a steady stream of revenue. So even when the cycles are down, there is still money that you're managing, and that money is earning you a fixed revenue kind of a stream of income. And similar is with the mutual fund business. So companies like HDFC, AMC, or a Nippon Life Asset, those are more of the plays that I think one should focus on from a longer term perspective. Let me put it across one way. All of them valuations are very, very expensive, right? Be it an HDFC, AMC, be it a Nippon, be it Anand Rathi, be it a 361, they're all trading above 50 times earnings, which is something which I don't think is sustainable. I believe there is growth, but I think corrections would be the right time to buy into these long-term sustainable businesses. Stocks like BSE, MCX, which require the turnover, companies like Angel, which requires the constant churning from clients. Those might see a bit of a decline when the bear market happens, maybe in the next 2 years, and that time you'll get a much better opportunity buying them much lower.
Okay, gentlemen, we'll leave it at that. Both of you, thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
But some of these stocks have done well today. Edel, like I said, is really ramping up the charts now at the highest point of the day, and a surge through the trading day today for Edelweiss. So keep an eye out for that. The Nifty Bank is doing well, and keep an eye out for that one too. But what is kind of iffy today, relative to the past few days, is Amber Enterprises, and that's the one that is a part of our bull and bear segment, bull versus the bear segment, because it has slipped and is drawing mixed reactions. Puneet joins us to tell us what's working and what's not for Amber. Puneet.
Well, thanks so much for that. So it's definitely been a stock that's rewarded investors a lot, 66% returns in the last 1 year. But when you look at the key update recently that the company's put out, they're looking to raise roughly 2,500 crores via permissible securities. This can be via equity as well as debt instruments, but the signs of an equity investment and raising funds via that has been the galore, because we mentioned that 5 out of 6 EMS companies have raised equity fundraising over the last 6 months, and these include the likes of Syrma, PG, Electroplast, Centum, amongst others. So we could see Amber also joining the funding bandwagon via equity, and hence we've seen that reaction to stock over the past months as well, since the news has been out there. So we're seeing the positive reaction. On the other hand, recently the Q1 earnings could be slightly under pressure, and that's largely because of the weak consumer demand for air conditioner, which is Amber's mainstay business. So we have seen that kind of weakness in some of the quarterly updates that have come in, as well as comments from management like Blue Star to NDTV Profit. So that could be one of the key impacts impacting the stock in Q1 based on results, but something to track going forward. On the other hand, the second bull and bear case is the demand for the company's new vertical PCB, which is printed circuit board. Now, the management had said that it's a business of 32,000 crores in India, and only 9% is locally manufactured, which gives Amber one of the biggest growth verticals in a new business that's still not taken off in India yet to be manufactured globally. So we could see one of the biggest winners here in Amber Enterprises. But the low margin consumer PCBA share is still with Amber, around 30 to 40% of that. So they will have to look to reduce that, go into the high margin PCBA, which they've already started investing in. So that'll be a key update to watch out for. But still, at the start and the onset, the PCBA might drag the overall margins. When you look at the third bull and bear case, and that's regarding the electronic business of the company, it could be the next growth driver. The company is investing 4,000 crores in this business, and the key aspect is that the margins of the electronic business is much higher compared to the traditional AC business that Amber is in. So we could see a brand new vertical being actually created, a company within a company itself, and hence could see Amber as one of the biggest beneficiaries of the electronics business going forward. But brokerages like JP Morgan have seen limited growth from the company's mainstay business in consumer electronics, and that's AC specifically. They see that the shift from assembling electronics and ACs to manufacturing components from them could see a jump, and could see limited growth is what JP Morgan's views is. Finally, in terms of valuations, 46 times price to earnings for FY27 is not cheap by any means, but the kind of growth trajectory it's offering in all three of its verticals of electronics, consumer business, as well as railways now, which has a torrid time over the last 2 years, could see one of the key aspects, but valuations don't leave too much room is what brokerages are mentioning, and there is no kind of cushion in case of any error. So definitely the bull and bear case for Amber stands on a lot of positives that the company has done over the past year or so. The fundraise will be one of the key ones to watch out for, and we are expecting that in this quarterly result, as is the AGM on 12th of August, could see some updates. Then if it's an equity one, it'll be the first since the company's IPO back in 2018.
Thank you so much for that, Puneet, for all of that perspective with regard to an Amber. The stock has done 66% in the last 12 months. Pankaj Pandey joining us, ICICI Direct. Also, Shivangi Sarda joining us, MOFSL, to talk to us and discuss more. Pankaj, 66% return, 12 months, stock trading at above 100 times trailing 12 months. EMS, a very interesting play, extremely solid growth. How do you rationalize this? Only by the growth? And are there any top picks in your bucket of EMS stocks?
Yeah, hi, good afternoon. Thanks for having me. I think EMS as a space overall looks quite attractive to us. Absolutely no doubt that most of these stocks are trading at rich multiples, but it is also a fact that the entire segment is expected to grow about 25-27% odd, and some of these companies are expected to sort of grow even better than that. And the companies what we are liking is Dixon, where we have a target of about 20,000. The other one is Syrma. I think Syrma relatively I will prefer more because it's a far more diversified play. Plus, I think they are also looking at export as a key segment. So it's a play on industrial, healthcare, and automotive. So from that perspective, I think overall this space looks good to us. And within that, Dixon and Syrma is what we prefer.
Okay. Shivangi, great having you. I want to take a few quick updates from you, Shivangi, because last week when you joined, you gave us some splendid calls. You were long on Laurus and it hit your targets quite admirably. So first, an update. What do you do with a Laurus or a Divi's or some of the others, or particularly Laurus, doesn't matter?
So I believe I remember that you had also asked me that the Laurus stop loss that I had given is quite narrow. But yes, of course, the stock structure was quite positive, and we've seen that open interest addition has been consistent in the last 3 weeks. And we are seeing that even after the breakout, there is quite a lot of follow-up buying over here, which is quite positive. Stock is comfortably holding above 800 marks. So till the time it holds above these levels, we could trail the stop losses ahead, and we could look for a next target of 850 odd levels. But of course, 800 would now become a support for this one, and we could continue holding this one. But of course, fresh buying at these levels will not really favor a good risk reward.
Okay. The other one that Chandan spoke to us about in the morning, and because he's your colleague, I'm asking you, Shivangi, is Biocon. He was very constructive there. The stock hasn't quite moved. Is it a good time to buy right now, or would you, because it's not shown a reaction, you rather move on to other stocks?
Yes, of course. Biocon, coming from the pharma space, we've seen a lot of action in the last 3 weeks. But again, this stock had rallied well in today's session. Roundabout tried to cross 400 marks, but failed to hold above the same. So near about, if it manages to cross 400, we could see actually momentum driving and continuing this stock for another 10 to 15 points move. But of course, upside, there is a little bit of call writers which are coming in. So we are seeing some bit of consolidative phase over here at this one.
Okay. Shivangi, a call on the indices if you're trading them, and your stock ideas for the afternoon.
So talking about the indices, we've seen that Nifty 50 has witnessed a comeback of the bulls from the last 2 trading sessions, and clearly the bears have underpowered. And we have seen that it's comfortably trading above 25,150 marks for most part of the day today, and which indicates that there is a very strong buying interest, even though the follow-up action is slightly missing. But the bulls are very active at the support levels, so which indicates buy on decline is to continue over here with a support of 25 25,000 levels, which is a psychological zone as well. And for the next up move towards 25,500 and 25,650. But overall, strength is quite visible here. Talking about Bank Nifty, of course, PSU space have been driving this entire index. And, we've seen that even though the heavyweights have taken a backward, but from the last 4 weeks, Bank Nifty has been consolidating at the higher zones very comfortably with IVs cooling off, which indicates that, there is a comfort here even at these levels. So Bank Nifty could also be a buy on decline candidate with a support of 56,850 zones and the next target towards 57,750 levels. Individual stock calls, of course, first up is from a PSU banking space, which is RBL Bank. We've seen this one has been absolutely resilient from the last, 6 months, consistently making higher highs, higher lows formation. Even on the weekly basis, we've seen it respecting an upward sloping channel. And on the daily basis, from the last 2 trading sessions, the volumes have been remarkably high, even though price action was not seen yesterday, but today there is a price confirmation as well with RSI showing positive divergence. So this one is definitely a good technical and derivative pick with a target of 280 levels and a stop near 265 zones. The next stock would be CDSL. This entire space, in fact, has been reviving, and CDSL has taken a good support near 1660 zones from the last few sessions. And in fact, this one has been a very strong one from the last 4 months. Again, after the corrective phase in the earlier weeks of July, we've seen that the stock is again witnessing a good rebound. Even in the recent pullback phase, there was a lack of conviction among the bears. Or we could say that selling was exhausting as the volumes were quite narrow during the fall. So risk reward wise, this negation is holding well for this stock, and we are recommending a buy on this one with a target of 1800 and a stop of 1700 zones.
Okay, thanks for that, Shivangi. Pankaj, autos are in flavor. I mean, two-wheelers are doing what they are doing with the Hero annual report, etc. But Tesla has brought the buzz in terms of news flow out here. Are you a buyer into any of the auto names currently ahead of the numbers, or are you preferring auto components? And which ones?
So Neeraj, overall, when we sort of look at auto, I think you have Select Pack, which has been sort of doing well in terms of monthly numbers, the likes of say M&M, both in the SUV segment as well as in the tractor segment. Similarly, you have TVS, which is doing in the two-wheeler segment, and Eicher again doing in the premium two-wheeler segment. So I think these are some of the companies which we like. And overall, our sense was that the growth will become broad-based, but I think despite the tax benefits, we are yet to sort of see. Probably we'll have to wait it out till the festive season for numbers to sort of improve. So we are very selective on the auto as a pack. Probably Tata Motors from a valuation perspective looks attractive, while you still have challenges, especially on the JLR front. It is unlikely that they are going to cross 4 lakh kind of volumes. But yes, valuation-wise, it is attractive. Within the auto ancillary names, I think Uno Minda is our topic for quite a period of time, largely because this is one company which has been growing above industry for a considerable period of time. So we like this company particularly for the growth it delivers compared to the industry. So that is the company which we like in the auto ancillary space.
All right, so that's on the auto Ank side of things, but we'll continue to speak about auto. Global EV giant Tesla is reportedly in early talks with Bajaj Alliance and ICICI Lombard for potential car insurance tie-ups in India. While discussions remain preliminary and non-exclusive, sources say that ACCO has emerged as Tesla's preferred insurer. My colleague Agni brings us the exclusive details. Agni.
Tesla might have entered India, but the bigger question that people are asking are who will be the insurance provider for the company. Sources tell us that Bajaj Alliance and ICICI Lombard are hot in the race to get into tie-ups with Tesla for insurance in their India vehicles. Now, Bajaj Alliance and ICICI Lombard are in early discussions with Tesla at this point, and no terms have been finalized yet. Sources tell us that the firms are pitching for non-exclusive tie-ups with Tesla, and Tesla sources are also telling us that the decision will ultimately completely depend on the insurance department working out of the company's Hong Kong or Singapore offices. Now remember, to get a license in India, to get an insurance service provider in India, Tesla needs to get a motor insurance service provider license from the IRDAI. That will take another few months is what the sources are telling us, and only then will they be able to do a proper tie-up with an insurance provider. We have reached out to Bajaj Alliance and ICICI Lombard for their comments on the story, and this is a developing point, so do stay tuned as we bring you more updates.
Okay, and we'll keep bringing you more updates. Not sure where some of those insurers are going. Let's pull up a Go Digit. Let's see how some of those names are doing. A Star Health seems to be doing surprisingly well. Shivangi, wonder if you have a view with regard to a Star Health 5% higher?
Of course, this stock has shown a lot of momentum today, but we've seen that this has been quite a lot of this has seen quite a lot of volatility in the past. Even intraday swings are quite wild in this one. Of course, we've given up a little bit of the gains in today's session, and we would wait and watch for the next session's opening for it, to sustain, because we've already seen a good rise unexpectedly in this stock because this stock tends to, consolidate more than rise. So we'll, wait and watch for this one.
Okay. Do you have a view on some of the general insurers, Pankaj? Lombard came out with numbers. You also have a decent move on Star Health today. Of course, 5% it was up at the day's high, but it's cooled off substantially from that point.
So structurally, our sense is that it's very difficult to sort of sell insurance without the tax incentives. So we have a clear bias towards asset management companies. I think whether you look at SIP flows or the kind of flows what you're getting in core categories, and whether a large cap does well, mid cap does well, or small cap does well, I think AMCs are far more better business from a portfolio perspective. Key preference again is with HDFC, AMC and Nippon. I think most of their funds are also sort of doing relatively quite well. So I think these two names come up from the overall non-lending space.
Taken. Okay, so that's the way to probably play it. Pankaj, quick, okay, let me first take the BTST call. Shivangi, give us your BTST call for the day.
BTST, I have identified RBL Bank itself because of the open interest activity and surge that we're seeing in the last hour. Also, PSU banking space have had a good tailwind in this one, and it's beautifully respecting its exponential moving averages as well. So this one would be an radar for 280 targets and a stop loss of 265.
Okay, so that's the take coming in on the BTST call for the day. Let's talk a bit of consumption. Dolat Capital has initiated buy on Global Spirits with a target price of 1,600 rupees a piece. Well, that's a solid upside. Samit's here with more with regard to that report. Samit.
Well, yes, Global Spirits, where Dolat Capital has initiated coverage, seems to be a big brokering note for today, given the fact that it's a buy rating and the target price stands at around 1,600 rupees, which suggests a return potential of nearly 55% from the current levels. Now, the brokerage is saying that the transformation of Global Spirits is underway, and going forward, not only growth, but they could also see a P re-rating, which is most likely to happen when it comes to Global Spirits. Now, the brokerage is saying that the manufacturing business is set to grow nearly 5 times. That will be the EBITDA growth over the next 3 years, and they believe that the strong cash flow from this segment, that is the manufacturing segment, should accelerate growth in other segments, which is the Indian-made Indian liquor segment and Indian-made foreign liquor segment of Global Spirits. Now, it also says that the country liquor or the Indian-made Indian liquor segment is a cash cow and a growth machine for Global Spirits, and they are seeing this segment as a strong growth, given the fact that the UP, Bihar and West Bengal will drive significant volume upside for Global Spirits going forward. They also say that the manufacturing and the Indian-made Indian liquor segment shall also provide downside protection to investors going forward. Now, when it comes to the Indian-made foreign liquor segment, they are seeing a structural growth story here and a PE re-rating lever coming in from this segment. They believe that this segment is well positioned and they are expecting this business to generate around 500 crore of EBITDA over the next 4 to 5 years. And they also say that as growth unfolds in the Indian-made foreign liquor segment, the multiples will also get re-rated for Global Spirits. Now they say that Global Spirits, after seeing a supernormal profit from FY20 to FY22, has seen a severe earnings decline over FY22 to FY25, but this headwind is expected to reverse for Global Spirits going forward, and they're expecting the company's EBITDA to grow at a CAGR of nearly 37% over FY25 to FY28, while the EPS CAGR expected is nearly 101% from Global Spirits over the same time frame.
Okay, thank you for that, Somit. Pankaj, do you have a view?
So not on this one, but in the liquor space, we like Allied Blenders. I think this company has done very well in the last 1 year. They've been able to increase their margins by about 500 bips. And largely because of the fact that they are looking to sort of up the prestige and above category. I think it's about 40 odd % as of now. And going forward, the next 2 years, they are looking to sort of take it to about 50 odd %, say by FY28. And which is why while the top line growth could be could be low double digits, but the bottom line growth could be far more attractive. We are expecting about 30% kind of a growth. So I think Allied Blenders is something which we like. Again, on the premiumization wave, which is what most of the liquor stocks are heading towards.
Okay, so that's with regard to a couple of those counters. ITC Hotels posted numbers as well. Anushi here with that take with regard to ITC's numbers.
Hi Harsh, so what we are seeing is basically in line sort of numbers, which is better than what the street had anticipated for, to be honest. Now revenues and margins we are looking at is in line with what the expectations were. Even the consumption cost and other expenses were lower as compared to the last quarter, which aided to the margin profile with the margin uptick that we are looking at, and higher other income also playing into the factor of better net profit growth that we are seeing. In fact, quickly walking through these numbers, a 16% of a revenue growth that we saw at 816 crore, while EBITDA was up over 19%, and this is with margins expanding to 30% as compared to 29.2%. So basically in line sort of margins as well. Net profit 54% of a growth that we looked at, again aided by higher other income here. If we saw consumption cost as a percentage of revenue, that stood at 10%, while other expenses stood at 37% as a percentage of revenue. The company also approved capex of 328 crore in the first quarter, and this is for construction of a hotel that we are seeing in Andhra Pradesh. Earlier the brokerage notes that they had come out, they expected a strong revenue growth to continue, and this is with better margins, which is something that we did see play out in this quarter as well. More emphasis would be on details would be awaited for the room rates, which are expected to clock in about 10 to 11% of growth as per Jeffries, and even the occupancy levels is something that we should be watching out for, considering that there were geopolitical developments which took place in the quarter overall, which might have some impact on those occupancy levels. Other than that, the wedding dates were also comparatively lower, so that was also another focus area. So this is the overall picture that we're seeing for ITC Hotels.
Right, ITC Hotels, of course, numbers out, stock perked up 4% post those numbers. Strong set of numbers, you can see the kind of spike on that stock. But Tech Mahindra is the other one in focus on the back of numbers. Jasmeet is here. What can we expect from the numbers, Jasmeet?
Right, the street is waiting for the results coming this evening. While let's understand what to expect from the results. Here's a preview for Tech Mahindra. Firstly, the revenue guidance we look at. The revenue is expected to rise by 0.2%. On the other hand, EBIT is expected to rise by 7%. The interesting thing to watch out will be the margin guidance, given that management wanted to reach to a margin guidance of 15% by FY27, while back in FY25, the margin guidance were at 9.6%. So the commentary on that was something interesting to watch out for. While on the other hand, the brokerages are expecting the deal wins to be in the range of 600 to 800 million. So that's something to keep an eye on. When you look at the key highlights of the company and what to expect from the results, while the Nuvama says company could face a seasonally weaker quarter, while on the other hand, BofA expects the deal win to maintain the current span, while the high-tech vertical and seasonality in the communication department could see pressure as per Jeffries. Now, the stock still remains a top pick by Motilal Oswal and HSBC. Now, what to watch out on the management commentary would be, firstly, trends in the banking and healthcare sector going forward. Secondly, the update on margin expansion program. And lastly, the client spending behavior in the communication chain. So this is a thing to watch out for going forward for the results.
Okay, so that's with regard to Tech Mahindra, what to expect. But Pankaj, do you like ITC Hotels and do you like the numbers that have come off it?
Oh yes, I think given the fact that May was supposed to be impacted because of geopolitical issues, I think that means that the April and June month numbers have been good. So overall, the company has come out with a better set of numbers. I'm yet to sort of break that number into ARR and other occupancy numbers. But for the next 2 years, we are expecting about 15% kind of a top line growth for a company like this, and about 28, 29 odd percent kind of a growth in the bottom line. So ITC hotel is half of the size of say Indian hotels, and our sense is that it has still some room to sort of catch up compared to Indian hotels. So relatively, we prefer ITC hotels more as of now compared to Indian hotels.
Okay, Shivangi, last quick question with regard to a TechM. Do you have a view?
Talking about the IT space, if I look at TechM, this one has witnessed a good short covering move in today's session, but it is still trading below its key exponential moving average. So, on this one, I would wait for it to cross 1620 levels for the next momentum to begin. And because it is still making lower top, lower bottom on the weekly basis, which might suggest that pressure is intact at the higher levels.
Okay, wait and watch with regard to our TechM. Completely out of time, unfortunately, both of you. Thank you so much, Shivangi and Pankaj, for joining us this afternoon. We'll let you go on that note. Let's look at where the Nifty is settling in at in the last minute or so of trade for this Wednesday afternoon. We're absolutely flat. 25K just about holding, if I can call it, or maybe losing it 25,200, just about holding. Let's look at the intraday chart on the Nifty as well, because the recovery from the low is what was impressive. We've come off the highs of the day for sure by around 50 odd points. We've traded in a 130 point band through the day. Let's look at the heat map on the Nifty 50 as well. And within that, IT is one pocket which stands out. SBI is the other one. M&M doing well as well. But outside of that, IT and a little bit of FMCG is what we are seeing. The breadth has worsened as the day has gone by, or rather over the last hour or so. And what we're seeing at the bottom, Shriram Finance, Eternal, Sun Pharma are just some of the names. So Pharma, a couple of those Pharma names, Cipla, Sun, under some bit of pressure is what we're seeing. Let's look at it sectorally, and likely we'll see a similar texture. At the very top is the PSU Banking Index, 1.7% higher. IT2 around 0.6. Realty was up around 0.5%. Auto also seeing some bit of tailwind. M&M was the top gainer, 0.5% higher on the Nifty Auto Index as well. The Pharma Index is down around 0.4 odd percent. Metals down half, and the Defense Index is the top loser in terms of sectoral indices. Let's look at the breadth and let's see how that has shaped up and if it has worsened. It hasn't actually, not materially at least, around 3:2 in favor of the advances in trade today. Let's look at the mid-cap and small-cap indices, and within that pack, flat on the Nifty mid-cap. We've seen a bit of a fall in the last few minutes of trade on the mid-cap index. Small-cap also, but relatively better off, around 0.1% higher. So largely in line with the Nifty is at least the mid-cap. The small-cap, slight bit of outperformance we've seen on this. The top gainers, top losers, let's quickly pull them up. The BSE 500. There you go, Network 18, but Mass Financial 9% higher, Patanjali 6% higher. So a couple of those stocks really doing well. Shoppers Stop also within that consumption pack up 6%. Sammaan Capital up 4.5%. Among the losers, Just Dial on the back of numbers, nearly 5% lower. Amber, we did a bull versus bear perspective on that one. ICICI Pru on the back of numbers. PB Fintech down 2.5% and Aptus Value 2.5%. Aadhar, on the other hand, within that housing finance space, was up 5% in trade. Let's look at what to watch out for, and there will be plenty of earnings, mind you, as we start to move more and more closer to peak earnings. But those are some of the macro factors to look out for. Those are some corporate adjustments, dividend adjustments on your screen. Nothing material out there, but those are the numbers. Wipro, Axis Bank, 361 WAM, CEAT, Clean Science, HDFC AMC, Heritage Foods, Indian Hotels, and Geo Financial, LTI Mindtree, Newgen Software are just some of the names. Nuvoco Vistas, Polycab will be the other big one. Route Mobile, Shoppers Stop. And Shoppers Stop has seen a buzz in trade today as well. Suntech Realty, South Indian Bank are the other one. SNW as well. Tata Communications, and closing it up with a Waaree Renewable. Mind you, these numbers are for tomorrow in trade. So keep that in perspective. These are not numbers that are going to come out today, and likely on open tomorrow there'll be another set of numbers which will react. But of course, Some of these numbers will come in market tomorrow or post market tomorrow. So just something to keep in mind. Completely out of time on India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. Market Express will take the action forward.
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So the Lal Street saw a choppy session of trade as investors digested a series of global cues. Nifty ends the day above 25,200 level. Sensex gains 50 points. Most sectors ended in the green. PSU banks and IT were the top gainers. On the flip side, defense and metal were on the back foot. DB Corp's Q1 of FY26 results reflect a tough quarter for the media giant. Consolidated revenue fell 5.16% year-on-year to 559.4 crore rupees, down from 589 crore rupees, driven by a decline in the printing business, while the radio segment stayed flat. So EBITDA dropped 32.79% to 110.5 crore rupees, with margins contracting 812 basis points to 19.75%. Now net profit also slid 31.4% to 80.8 crore rupees. nearly 81 crore rupees from 117.8 crore rupees. Now the stock is down 2% today, signaling investor caution. DLF is back in Mumbai's real estate scene with the West Park Phase 1, a premium residential project in partnership with Trident Realty, approved by RERA. So spanning 57,510 square feet, it launches 416 flats across 4 towers with a starting ticket size of 6.5 crore rupees, targeting completion by June 2032. So Kotak estimates sales of 2,000 to 2,500 crore rupees after exiting Mumbai in 2012 by selling a lower parallel plot to Lodha for 2,700 crore rupees. So DLF's return follows its Q1 of FY26 success with 11,000 crore rupees from DLF Privana North. Godavari Biorefineries was buzzing away in trade after the company secured a groundbreaking patent from the China National Intellectual Property Administration for 5-hydroxy-1 and 4-naphthalene-dione, a novel compound for cancer treatment. So this patent covers a new class of compounds showing strong inhibitory effects on the cancer cells. Now the breakthrough strengthens Godavari's position in innovative biopharma solutions, marking a significant step in the global cancer research. Biocon is also making waves with US FDA approval for Kirsty, its insulin aspart, the first interchangeable biosimilar for Novolog. Now, with Novolog's 2024 sales hitting $1.2 billion, Kirsty taps into a massive market, especially amid Novolog shortages as Novo Nordisk shifts focus. Now, analysts also project Kirsty's annual sales at $80 to $100 million, positioning Biocon to capture significant demand in the diabetes treatment space. JTEKT India is set to raise up to 250 crore rupees through a rights issue of fully paid up equity shares as approved by its board on July 15th of 2025. Now the funds will fuel the construction of infrastructure for a new production facility, capex for equipment and machinery at its Dharuhera, Haryana plant, and repayment of borrowing. So as India's largest steering systems manufacturer serving giants like Maruti Suzuki, JTEKT aims to bolster its manufacturing capabilities and financial strength. Spandana Spurti Financial is set to raise 400 crore rupees through a rights issue of partly paid up equity shares approved by its board on July 15th. Now, the board will meet again on July 18th to finalize the key details, including issue price, entitlement ratio, and record date as part of a broader 750 crore rupees of FY26 equity plan. So despite the recent challenges, including a Q4 FY25 net loss of 434 crore rupees, this microfinance leader aims to strengthen its capital base to fuel rural lending growth. CLSA maintains high conviction outperform on Dixon Tech with a 19,000 target price. The brokerage firm believes that the recent acquisitions and joint ventures will lift the value addition to 45 to 55%, up from 15 to 17%. Now, these moves expand margins by 150 to 200 basis points and unlock new revenue streams. Even if domestic market share stabilizes, Dixon continues to deliver robust bottom line growth. HDB Financial faces a tough Q1 with more negatives than positives. Asset quality weakens as NPAs and credit costs rise, dragging down profitability. So provisions remain elevated. However, the worst seems to be behind. Margins begin expanding and operational focus remains on stabilizing return on assets. The Q2 is expected to be a turning point as seasonal softness fades and growth momentum builds. Yield improvement and cost management offer glimmers of recovery. ICICI Lombard delivers a profit beat helped by strong investment income. Though growth remains tepid, rising commissions and a higher combined ratio reflect underwriting pressure driven by loss ratios. Health segment also shows improvement led by group business. ICICI proves Q1 sees value of new business and AP broadly in line with the estimates. Margins show a slight positive tilt with management commentary holding key importance for the outlook. Morgan Stanley maintains an equal weight rating on ICICI Lombard with a target price of 1,855 rupees. So the company's PAT beat estimates driven by higher investment income from the capital gains. While MS appreciates the profitable growth focus, it also sees limited upside at 36 times FY26 end of the PE due to weak top-line growth. So competitive intensity remains high and uncertainty around motor target price rates hikes continue to cloud the outlook. Tesla launches the Model Y in India, price between 5.99 to 6.79 million, that is close to 62 lakh rupees. Now, Citi sees limited impact on Mahindra XEV9e demand, citing distinct product positioning and non-overlapping customer segments. So, however, if import duties drop or local manufacturing begins, Citi warns that competition could intensify for the Indian OEMs. Morgan Stanley sees limited impact from Tesla's Model Y launch on domestic OEMs with prices above 5 million. Now, Tesla targets a niche, just 1% of India's car market. Domestic players have no exposure to this premium segment, and EV ASPs remain below 3 million. So, given Tesla's high pricing and gradual ramp up, Morgan Stanley expects minimal disruption to the Indian automakers. Daulat Capital initiates a buy rating on Global Spirits with a target price of 1,600 rupees, implying a promising upside of 55% from the current levels. So the firm highlights that a significant transformation is underway, driven by potential 5 times EBITDA growth in the manufacturing segment. Global Spirits country liquor segment is also both a cash cow and a growth engine, while branded Indian-made foreign liquor, particularly premium and above categories, represent a strong structural growth and price to earnings re-rating lever. So this combination is expected to fuel robust growth and valuation expansion for the company. Geojit Financials reports muted numbers for Q1 of FY26 with a 15.5% decline in the revenue to 153 crore rupees, primarily due to a slowdown in wealth management. However, revenue from other services shows a moderate uptick. Despite the top-line challenges, EBITDA improved significantly by 38.6% to 36.64 crore rupees, with margins expanding by 900 basis points to 24%. Net profit also declined sharply by 37.4% to 28.67 crore rupees, reflecting pressures on overall profitability. So the results highlight a mixed quarter for Geojit as the company navigates headwinds in its core wealth management business. Just Dial reports a strong Q1 with healthy growth across key metrics. Gross services value rises 6.2% to 298 crore rupees, while EBITDA grows 7.2% to 86.4 crore rupees. Now, net profit jumps 13% to 160 crore rupees, significantly aided by other income, which hits its highest level in the last 8 quarters at 127 crore rupees, which is up from 86.8 crore rupees. So margins improved by 30 basis points to 29%. The company boasts robust cash reserves of 5,400 crore rupees, representing 68% of its market capitalization. So Just Dial continues to attract a large audience, recording 193.2 million unique visitors in the Q1 of FY26. Overall, the quarter marks a significant profit increase for the company. Citi maintains a buy rating on Just Dial, but cuts its target price to 1,100 rupees. The brokerage expects a sale CAGR of 7% between FY25 to FY27. So Citi highlights that the market is awaiting clarity on the company's plan to utilize its 5,400 crore cash reserves. Just Dial achieves a strong 12 to 15% growth in the unique visitors during the second half of FY25. Now, moving forward, Citi emphasizes that continued user traffic growth will be critical for the company's pricing power and future performance. Tech Mahindra's Q1 of FY26 results are in focus as analysts project a 42% year-on-year surge in the net profit to 1,189 crore rupees, with revenue inching up 0.2% sequentially to 13,411 crore rupees. EBIT is also expected to rise 7.17% to 1,476 crore rupees, boosting margins by 51 basis points to 11.01%, driven by Project Fortius efficiency. So despite the seasonal weakness in the Comviva and high-tech segments, deal wins are set to shine, with Citi and Jefferies estimating a TCV of $600 to $800 million. State Bank of India is set to launch a 25,000 crore qualified institutional placement, or the QIP, likely as soon as this week. So the shares are expected to be offered at a 2 to 3% discount to current market prices, which stand around 819 rupees. Now, this will be SBI's first major equity raise since 2017. And aims to strengthen its capital base, targeting a common equity tier 1 ratio of 12% by March 2027. So Life Insurance Corporation of India is expected to be a major investor, potentially bidding over 5,000 crore rupees alongside strong domestic mutual fund participation. Now, this capital raise will support SBI's regulatory capital requirements and future loan growth, while reducing the government's ownership stake in the lender. So the QIP is set to become the largest share sale via this route in India. Coffee Day Enterprises is in focus, with its stock surging 17% in just 2 days. So a move driven primarily by renewed investor interest. The buzz is fueled by renowned inventor Dolly Khanna acquiring a 1.55% stake in the company as of June 2025, signaling confidence in the coffee day despite its fraught financial history. So IDBI had subscribed to 1,000 non-convertible debentures in 2019. And by 2020, IDBI trusteeship issued a default notice to Coffee Day for 228 crore rupees. Since that pivotal NCLT ruling, the stock has gained a remarkable 88%. So however risks remain, the company recently disclosed defaults on the payments and interest amounting to 372 crore rupees, while investor optimism is palpable and the legal clouds seem to be clearing. Coffee Day's financial challenges and the resolution of its defaults will be decisive for its future trajectory. Diffusion Engineer secures a significant domestic order worth 48 crore rupees for supplying high-pressure grinding rolls to the cement industry. The order will be executed over the next 11 months, providing a steady revenue stream through this period. So the contract highlights company's expertise in the manufacturing critical heavy engineering machinery and its expanding footprint in key industrial sectors. So as of March 2025, Diffusion Engineers hold orders in hand totaling 203.2 crore rupees. State-run telecom firm MTNL has defaulted on 8,585 crore rupees in the principal and interest payments owed to 7 public sector banks. The company disclosed to stock exchanges Union Bank of India and the Indian Overseas Bank have the biggest exposure, followed by Bank of India, SBI, PNB, UCO and Punjab Sind Bank. So MTNL's total debt now stands at 34,484 crore rupees, including bonds and government loans. So the mounting default deepens concerns about the viability of MTNL and puts further pressure on the PSU banks. Maharashtra has signed green energy deals worth 31,955 crore rupees with 4 companies to build 6,450 megawatt of pumped storage hydro projects across the state. The agreements announced by Chief Minister Devendra Fadnavis aim to boost grid stability, create 15,000 jobs and support the state's clean energy goals. So projects will come up in the districts like Shambhajinagar, Chikaldara, Kolhapur and Ratnagiri, with companies like Greenco, Adani Hydro, Ritwik and Waterfront involved. So these storage projects act like giant batteries, storing energy and releasing it when needed. Andhra Pradesh is stepping up efforts to become a top tourist destination, setting an ambitious target of attracting 25,000 crore rupees in the tourism investments. So State Tourism Minister said that the government is working to add 50,000 hotel rooms with a focus on beach tourism, temple circuits and heritage sites like the Gandi Kota and Surya Lanka. So the state is also speeding up project reports under central schemes like the Prasad and Swadesh Darshan to tap into the national funding. According to media reports, Google has signed a $3 billion 20-year deal with Brookfield Asset Management to power its US data centers with clean hydropower. The agreement begins with 670 megawatts from 2 upgraded Pennsylvania plants and could scale up to 3 gigawatts as new capacity is added. Now, this is the largest corporate hydropower deal ever and supports Google's push for carbon-free energy and rapid AI and data center expansion. India has hit a historic green milestone, achieving 50% of its power capacity from non-fossil fuels 5 years ahead of its 2030 Paris Agreement target, with 242.8 gigawatt of clean energy out of 484.8 gigawatt total capacity driven by solar, wind, hydro and nuclear. India's renewable output surged in 2025, while coal generation dipped nearly 3%. So Union Minister Prahlad Joshi hailed this as a proud moment, crediting PM Modi's leadership. India now eyes 500 gigawatt of non-fossil capacity by 2030, solidifying its global clean energy lead. A Prada team visited Kolhapur, Maharashtra to engage with artisans crafting Kolhapuri chappals after backlash over the cultural appropriation. Now, the Italian fashion house faced criticism for showcasing sandals resembling the GI-tagged footwear in its Spring or Summer 2026 Milan show without crediting their Indian origins. Priced at 1.2 lakh rupees, the sandals sparked outrage for ignoring the craft's heritage. The team, including footwear division experts, studied traditional methods and discussed the collaboration. A second visit is planned for August. Prada aims to launch a Made in India Kolhapuri-inspired collection, fostering ethical partnerships with local artisans. Ola and Uber drivers across Maharashtra went on strike, converging in Mumbai to demand fairer fares and other key reforms. Thousands gathered at Azad Maidan for the protest, which also included the gig workers from food delivery apps. Now, reports indicate that the striking drivers in the Mumbai metropolitan region allegedly stopped cabs and autos mid-journey, forcing passengers out and disrupting the services. So the protesters have 5 main demands. They want rationalized fares that match the meter cab rates, a strict ban on the bike taxis, a cap on the new cab and auto permits, and the activation of a welfare board for drivers, along with the implementation of the Maharashtra Gig Workers Act. Air India will partially resume international flights starting August 1 after grounding several routes following the tragic crash of flight AI-171 on June 12th. So the airline is bringing back select long-haul services, including the Ahmedabad-London Heathrow route, which will operate thrice a week. Flights to Paris, Milan and New York will also gradually restart in a phased manner through September. Now, a full restoration of international operations is expected by October 1. The Karnataka government has issued a draft notification to cap movie ticket prices at 200 rupees, including entertainment tax. Now, across all theatres. So, from single-screen cinemas to premium multiplexes, the move aims to make cinema more affordable across the state. Authorities have opened a 15-day public consultation inviting objections and suggestions before finalizing the amendment. US President Donald Trump adds that India is working along the same line, suggesting similar access could be secured. Trump emphasizes that the US previously had no entry into these markets, but says that his tariff strategy is now opening doors for American businesses. US President Donald Trump says pharmaceutical tariffs are likely by August 1, starting low and ramping up over time. This marks a shift from his earlier timeline of 12 to 18 months. Trump aims to push drug makers to reshore production, warning that tariffs could eventually reach 200%. Well, with that, viewers, it's a wrap on Market Express. But please stay tuned as Sanjana Chauhan takes up Profit 360 on the other side of the break.
Right now across the world, even Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What?
Benchmarks end almost flat with a slight upward bias. Most indices finish in the green, led by the PSU Bank Index as the top sectoral gainer. Small and mid-cap indices advance for the third consecutive session. The race to insure Tesla cars in India is intensifying, with multiple insurers competing for partnerships, while Bajaj Alliance and ICICI Lombard have reportedly shown interest in tying up with Tesla. SBI is in the spotlight for major fundraising initiatives. According to sources, the State Bank of India is set to launch a 25,000 crore qualified institutional placement. Separately, SBI's board has approved raising up to 20,000 crore via bonds to further bolster its capital base. Commuters hit by Ola and Uber drivers strike in Mumbai as they demand fair regulation and protest against the high commission rates charged by cab aggregators. PVR Inox closes 1% lower after Karnataka's proposal to put up a 200 rupee cap on movie tickets across theatres, including multiplexes, and on all language films. It's an NDTV Profit impact. NSE puts out a circular against unregistered advisory entity named Close Friends Traders after we reported that the firm claimed intraday margins up to 500x and zero brokerage. The Prada team meets with the artisans of Kolhapuri Chappal following the global controversy to explore a collaboration with them. Bombay High Court dismisses the PIL against Prada. Good evening. You're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's get right into it and take a look at how the markets fared today. The markets ended flat with a positive bias after rebounding from early losses. Most indices barring metal, defense, pharma and finance closed higher. PSU Bank Index was the top gainer, followed by Nifty Media. But for more on this, let me quickly go across to my colleague Harsh for a quick wrap of the day's market action.
Well, the Nifty closed as flat as it can get. 25,200 is where we've closed at, and it was a bit of a choppy day of sorts. We fell a bit at the start of trade, and thereafter we bounced back, went towards 25,250. And thereafter fell another 50 points and closed at around the 25,200 mark. So that's how it played out. Around 130 points is the band in which the Nifty traded in. In terms of stock price action, auto did well, and you had an M&M at the which stood out in trade, one of the top gainers on the Nifty. The IT index was the other one, with a decent set of stocks sitting in the green. So that one did well as well. And then SBI led some of the PSU banking counters higher. And the PSU banking index, in fact, was the best performing sectoral index in trade today. So on a day like this, PSU banks really standing out. And SBI, on the back of that 25,000 crore QIP that it's set to close, is what has driven the PSU banks higher. So that was the larger texture. The breadth, meanwhile, within the Nifty 50 remained unfavorable, in fact, and we just had about 20 gainers for 30 losers on the Nifty 50. So that's how at least it played out on the top 50 counters. Now let me take it to the broader markets, and the advanced decline was decent. The breadth was decent, 3:2 in favor of the advances, but nothing too convincing per se. The Nifty mid cap was absolutely flat. The Nifty small cap just a 1/5% higher. So that's the way the moves were. In terms of losers as well, metals was one pocket, just a wee bit. Pharma was the other one where there was just a little bit of lack of conviction in trade today, but those were two pockets which closed in the red nonetheless. Nothing major per se, but still closed in the red. In terms of BSE 500 top gainers, top losers, some consumption names, a Shopper Stop stood out, a Patanjali stood out. We did see some of the auto names stand out as well, but not within that BSE 500 basket. Some names, some lenders, and Avas was sitting in the red, nearly 2.5% lower. And then you had an Aadhar, which was 5% up. Amara Financial was up nearly 10% in trade. So those were some of the names as well, which did well in trade.
Global trade tensions and investor uncertainty continue to dominate headlines. We caught up with Vinay Jaisingh, CIO and Head of Equity Advisory at Ask Private Wealth to understand how India is positioned. Let's listen in to what he had to say.
Valuations are not as attractive, but India's resilience clearly is great. If you look at the incremental GDP India is adding on to the world, it's somewhere to the tune of 10 to 20% based on the world growth being 1 to 2%. Take an average number of 15% of the incremental world's GDP coming in from India. That's a very big sign. In terms of profit pool, it's just 1.5, 1.6%. And in terms of inflows, last year was negative, but average is about 1.5%. So you can see a lot of inflows come into the country. Second point, if you look at indices, most indices in emerging market have moved India up from 6-7% to as much as 18%. And at the same time, if you look at the data of Indian FIs in the shareholding pattern, that's gone down from a peak of 20 to 16, again, a 12 to 14-year low. So, this also gives you the fact that, FIs are underowned the country, and the GDP is growing pretty well. One last indicator, which is very pro-India, is if I had to just look at the 10-year interest rate of India versus the rest of the world, or let's talk about US currently. 6 years ago, it was 6%, the interest rate differential between India and US for the 10-year. Today, it's as low as 1.8%. So it also tells you the risk premium for India has come down substantially.
And now on to an NDTV Profit research special. For years, the large cap IT giants have dominated the market, but there is a definite shift underway. My colleague Sajith has been digging into the numbers, and his analysis shows that mid-cap IT stocks are winning the race. Are mid-cap IT stocks overtaking large cap stocks? Let's find out. My colleague Sajith here with all the details.
You know, the IT sector is going through a rough patch, and if you look at the large companies, the two of them have already come out and spoken about a slow order intake, and that's also getting reflected in the revenue market share of these large companies. So we looked at the top 20 companies by market cap of listed companies and the kind of revenue growth they have done from FY22 to FY25, and we found that there is a shift in revenue market share from the large caps to the mid caps and the small caps there. So if you look at the companies in FY22, large caps accounted for 91.2% of the revenue share, and that has come down to 89.5. So 170 bips fall in the revenue market share for them. Mid caps, on the other hand, have gone up from 5.7 to 6.8, which is 122 basis points jump. Small cap from 2.9 to 3.4, and micro cap gaining just 10 bips more market share. But where is this shift happening? If you look at the top 20 companies, the revenue overall has grown by nearly 33% from FY22 to FY25. But the laggards for some of the companies, for the large companies, is basically coming from the Wipro and the Tech Mahindra, because they have been underperforming the large caps and the sector for the last couple of years, and that's what is leading to the fall in revenue market share. At the same time, the share is shifting because it's been pulled up by companies like Persistent and Coforge, and we've seen that in the valuation and the price jump in these two stocks, and that's how it is going. From a revenue point of view, as I said, the total revenue of this cohort, went up by nearly 33%. But look at the revenue growth for the large cap is 30.3%. So it's underperforming the overall, 20 stocks revenue pool which is there. Mid caps, the revenue jump is 59.6%, small caps 51.9%, and micro caps, which includes companies like New Web and all, is 121%. So clearly there is a shift in the revenue market cap, and that's what we're hearing from the some of the companies as well, because what we are seeing there is that a lot of new clients are going for companies which are agile and nimble, and where the client can control the companies. Large companies are not able to control the large companies, and that's where there is a shift in orders flowing from large caps to small caps, especially with respect to small discretionary spends and other stuff. So the revenue gain which is coming in is for the mid caps and the small caps.
And a day after the Mumbai showroom opened in Mumbai, there is a race between insurers, with sources telling us that Tesla, the global EV giant, is reportedly in early talks with Bajaj Alliance and ICICI Lombard for potential car insurance tie-ups in India. My colleague Agni brings us all of the details on this. Agni, over to you.
Tesla might have entered India, but the bigger question that people are asking are who will be the insurance provider for the company. Sources tell us that Bajaj Alliance and ICICI Lombard are hot in the race to get into tie-ups with Tesla for insurance in their India vehicles. Now, Bajaj Alliance and ICICI Lombard are in early discussions with Tesla at this point, and no terms have been finalized yet. Sources tell us that the firms are pitching for non-exclusive tie-ups with Tesla, and Tesla sources are also telling us that the decision will ultimately depend on the insurance department working out of the company's Hong Kong or Singapore offices. Now remember, to get a license in India, to get an insurance service provider in India, Tesla needs to get a motor insurance service provider license from the IRDAI. That will take another few months is what the sources are telling us, and only then will they be able to do a proper tie-up with an insurance provider. We have reached out to Bajaj Alliance and ICICI Lombard for their comments on the story, and this is a developing point, so do stay tuned as we bring you more updates.
Right, Agni, thanks so much for that update. Meanwhile, significant fundraising moves are underway at SBI. The bank is poised to launch a massive 25,000 crore rupee qualified institutional placement, also known as QIP, in its first equity fundraising since 2017. This pricing is expected at 2 to 3% discount to the current market rate. For a comprehensive breakdown on these developments, here's my colleague Shabana with all of the details. Shabana, take us through the latest.
Sure. So yes, SBI is likely to issue its mega 25,000 crore QIP at a 2 to 3% discount to the current market price. The current today's shares of SBI had closed at 830 rupees on NSE, and the QIP is likely to be issued to be priced at near market levels. Now, what we are hearing is that the QIP could be launched any moment from here on. And this is important obviously because back when it had raised funds through its QIP in 2017, they had raised 15,000 crores, and the issue price was at a discount of 1% to the then current market price. And on the other hand, apart from equity fundraising, they're also raising funds through debt. The board met today and they approved raising up to 20,000 crores through debt as well, through tier 1 and tier 2 bonds in FY26. This is important because last year itself they had raised 20,000 crores through such bonds, and they had also raised about 30,000 crores through infrastructure bonds. So all of this would help SBI in terms of strengthening their balance sheets, meet regulatory environments, requirements, and also boost its equity tier 1 capital, which is what they're targeting.
Right, Shabana, thank you so much for that update. We'll continue tracking that story and bring you all of the details. Meanwhile, Tech Mahindra results are out with its Q1 FY26 results. And for the breakdown of the data, let me quickly go across to my colleague Puneet standing by. Puneet, take us through what we can expect and more importantly, the earnings that we're seeing at the moment.
Well, thanks so much for that. So results largely seem in line for Tech Mahindra. We were expecting it, because the expectation was just about a percentage fall in terms of revenue at 13,351 crores. That number has come in bang in line with estimates. If you look at the EBIT number as well, that's also come bang in line with the estimates of 1,477 crores. Because there is a slight increase in terms of revenue, the overall margin has come in at 11.1% and 11.01% as well. But we are being joined by Sandeep Agarwal of Sovilio. Sandeep, a very good afternoon to you and thanks so much for joining in. Just in terms of the first numbers of revenue, EBIT as well as profitability, numbers seem largely in line. What do you make of it?
No, good evening. Thanks for having me on the show. So, this is a really only company which has at least given numbers which are broadly in line, and there is no big negative surprise as of now based on the headline numbers we are seeing. So, and this is on expected line because this is a turnaround story, and there are few verticals which have been languishing for 4-5 years now, and there is a leadership change. So, obviously this number should be seen positively. I think within the large cap, this is the only company which has given decent number, and there is a turnaround possibility, and also some base effect impact of some of the large verticals not doing well for 4-5 years, and there is some spend there. So I think this number should be seen broadly in line to slightly positive, I would say.
And Sandeep, the deal wins number is something that we have tracked for all IT companies at 809 million. It's coming at the higher and the upper range essentially of 600 to 800 million in terms of deal wins. It's been another quarter, because even the last time in the quarter 4 we saw that kind of positive upbeat from the company beating the guidance, and we saw in terms of deal wins the positive reaction. So at $809 million in terms of deal wins, it looks like a number that's very strong. Would you agree with the same?
Yeah, so see, not only deal wins, even the actual numbers of revenue are good. And there is a clear turnaround. The management has also been indirectly hinting towards that in the interactions. So yes, overall I would, as I said, that these numbers are broadly in line to slightly positive. As of now, there will be some more details on the con call. So if that con call is also in line with the deal wins and there is a positive commentary, I think the stock can hold on. So this is the only name in the large cap where there is a possibility of some good turnaround and good delta.
Got that, Sandeep. And Sandeep, one question that's been popping up across beyond the results of Tech Mahindra has been the FY27 guidance on EBIT of 15%. Now, currently it's trading at 9.7% EBIT margins in FY25, and there has been some question coming on that, but it's been over the last 5 quarters a consistent increase in EBIT margins from the 9% range to 11% now. Do you feel confident of that target of management of 15%? Of course, we'll be waiting for more comments in each and every quarter going into 15%. But currently, what is your view specifically with the management target of 15% EBIT margins? And do you think that the company is already on track to get to that target of 15%?
Yeah, so I will say 15% is a modest target to achieve. But only thing now, what is happening is that again the kind of disruption which we are seeing due to the new technology. The problem will be that growth could again be tapering down for the whole sector and all the companies. And in that case, if let's say the management decides to have little more growth at a little compromised margin, then that 15% will look tough, because there is still 4-5% ground to be gained, which is a very tough ask. So that is my limited submission. So maybe 15% margin would be achieved, but the growth may fall down to 2-3%, 4% only. So that is something which management will take a call, and we will know more on the earnings call. But earlier it was easier. Now with the new technology disruption, I think it will not be so easy to achieve 15%. But
got that, Sandeep. Sandeep, thanks so much for joining us, giving us perspective on that. And Sandeep did highlight a few important points on deal wins as well as on something like the FY27 guidance. We'll be waiting for the management call today at 5:45 to get some more perspective. But Sanjana, numbers largely seem in line. The deal wins also at 809 million and at the upper end of that range. So largely seems in line, but we also had the press conference scheduled at 4:15 today, so let's go across to that and get some perspective from the management.
This year in Chennai has already hosted over 60 client visits. It is becoming a true showcase of our manufacturing capability, innovative mindset, and our distinctively experienced staff. Our BFSI vertical reported a year-on-year growth of 4.7% and continues to be one of our fastest growing verticals. The marquee Fortune 500 and Global 2000 customers in financial services and insurance have engaged with us, enabled by a key differentiation in asset and wealth management, payment, and core capabilities in platforms like Guidewire and Temenos. We remain confident about our long-term potential in this vertical across all of our geographies. Our high-tech vertical declined by 3.3% year-on-year on a reported basis. This decline was driven by an ongoing restructuring in the semiconductor industry, including steep budget cuts and workforce rationalization at a key client. While these headwinds are playing out, we are strengthening our capabilities in silicon design, embedded systems, and digital product engineering. Our client engagement remains strong and anticipates a gradual recovery in the second half of this year. On a year-on-year basis, Americas declined by 5.9%, Europe grew by 11.7%, and the rest of the world increased by 2.9%, with both regions aided by favorable currency tailwinds. In our client metrics, I'm happy to report that we have added 2 clients in the $50 million plus bucket over the last year. This clearly demonstrates our ability to scale engagements and deepen relationships within key accounts. On large deals, the TCV for the quarter stood at 809 million, representing a 44% increase year-on-year on an LTM basis. Our centralized solutions team and our contract management group have yielded positive results, particularly in securing multi-tower high-value deals. Additionally, large deals over 25 million now make up a significantly higher proportion of the total large deal TCV. The deals are broad-based across comms, high-tech, BFSI, and other verticals. A few of our key wins include: firstly, selected as a growth partner by one of the USA's leading consumer wireless operators for its customer operations transformation. The designation as a growth partner unlocks the door to all future opportunities as per the client's new sourcing strategy. We've been engaged by a leading global high-tech company to help them deliver truly immersive user experience powered by their LLM platform. TechM will ensure an enriched experience for more than 2 billion users while ensuring the platform remains safe and secure. We've been chosen as a primary partner for a leading UK-based telco for a multi-service line deal to deliver and manage applications across their fixed and mobile networks. The scope includes delivering services across application services, network services, next-gen services, engineering, and digital enterprise applications. We've been engaged by a railroad customer in the US for the development and support of a portfolio of applications across multiple corporate functions of the company and across multiple technologies including SAP, Salesforce, and data and analytics. TechM has been selected by a leading global fashion apparel brand for a multi-year strategic engagement to provide digital and data transformation and support services. The scope includes SAP Fashion, Cloud, Data and AI, and Digital Commerce capabilities with a dedicated Global Capability Center or GCC to drive innovation, cost efficiency, and business agility. Overall, for our financial progress, we are beginning to see early results of the structural changes and strategic choices we have made. Our deals win momentum remains strong, and we expect this to start reflecting in our growth in the next quarter. In sum, our margin trajectory is steadily strengthening, and we are confident in our ability to build revenue momentum. Now I'll talk a little bit about talent and leadership, and this has been one of our key differentiators of our transformation journey is the formidable team that we have built up. Let me highlight some important developments on the talent front. Amol Phadke has joined us as Chief Transformation Officer and will be helping us on our progress with our go-to-market initiatives. He brings over 25 years of experience in technology and business leadership in areas like AI, cloud software, networks, and IT in firms like Google, Telenor, and BT. Will be especially useful given his deep expertise in comms. Additionally, we have seen the internal elevation of leaders into key roles, including the head of communications portfolio, head of our telecom portfolio for the Americas, and the head of our India, Middle East, and Africa business. These appointments underscore our strong internal talent bench, and they reflect our ongoing commitment to building a high-performance organization. We continue to focus on leadership development, succession planning, and creating a culture of accountability. Our people remain at the heart of our transformation story. During the quarter, we launched TechM Zenith, our flagship leadership development program in partnership with the reputed business school INSEAD. Our AI-delivered right strategy, which we unveiled last quarter, has been resonating really well with our clients. Our value lies in helping clients transition from proof of concept to production, from the sandbox to production systems. This strategy is being executed on 4 foundational pillars: transformation delivered, productivity delivered, innovation delivered, and assurance delivered. These pillars are also contributing meaningfully to our AI deal wins. We now have a portfolio of 200 plus enterprise-grade AI agents across industry segments, several of them already in use at scale with our clients. Our agentic AI offerings also include a hybrid human and agent workforce. TechM's AI consulting practice enables clients to validate ROI and to prioritize AI use cases in a systematic and efficient manner as they evaluate their AI roadmap. Tech Mahindra is well positioned to support clients effectively, enabled by a more experienced workforce that serves really as a strong enabler and key differentiator for this offering. Our 77,000 employees across the company have been trained in AI and Gen AI, including a critical mass with advanced training and certifications. From an innovation and ecosystem perspective, we hosted our first ever Innovation Day, Innoverse 2025, during the quarter in London. This is, in Bangalore. This is an internal platform to showcase and strengthen our innovation culture. It brought together teams to solve real-world challenges with speed, scale, and creativity, and really reaffirms that innovation is a core component of the TechM DNA. We organized TechM Synergy 25, our partner appreciation event this month. This was in London at the legendary Arsenal Stadium, and it was great to connect with over 125 plus partners and clients. This year's theme, Winning Together with AI, captured our shared ambition and showcased our AI-driven leadership. It also laid the groundwork for collaborative frameworks that will shape the future of our partnerships. We also strengthened our ecosystem partnerships this quarter through a few key alliances. Let me highlight a few notable partnerships for this quarter. A partnership with Nuix, a global leader in AI-powered investigative analytics and intelligence software to provide innovative, scalable solutions for cyber and fraud detection. An elevated partnership with ServiceNow to deliver next-gen broadband solutions tailored for CSPs, offering a comprehensive vertical solution stack. The launch of a new managed service offering for Cisco, Multi-Cloud Defense, a component of Cisco's hybrid mesh firewall. The new offering provides enterprises a robust cloud security solution. On the awards front, we are proud to share that we have been included as a constituent of the FTSE for Good Index Series for the 9th consecutive year. Our performance was rigorously evaluated in a few key areas, including corporate governance, health and safety, anti-corruption, and climate change. This independent assessment is a testament to our leadership in implementing robust governance practices and upholding high ESG standards. We were recognized as one of the best organizations to work for and one of the most innovative organizations by ET Now. I think altogether they underscore the investments we have made in culture, innovation, corporate governance, and capability building. In June of this year, I completed my first 2 years with Tech Mahindra, and I deeply value the warmth, energy, and the openness that define our culture. And this has really made my journey so far very meaningful. We look to retain the essence of this culture while driving continuous improvement across the organization. Many of the improvements we're driving may seem small in isolation, in systems, in processes, in ways of working, in driving focus and operating discipline. But as you know, as the theory of marginal gains teaches us, consistent progress across multiple fronts can generate transformational outcomes, as you've seen so far. We are beginning to see this play out, and we are confident that this momentum will compound meaningfully in the quarters ahead. With that, I now hand over to Rohit, who will take you through our financial performance in more detail. Over to you, Rohit.
Good morning, good evening, everyone, and thank you for joining us. First of all, introduction to KPR. Let me start by walking you through the company's financials for the first quarter of FY26, covering the period June. We ended the quarter with revenue of $1,564 million compared to
Right, these are as the Q1 earnings for Tech Mahindra have come in a mixed performance with the margin steady. Revenue standing at 13,351 crore, just below NDTV Profit's estimate of 13,411 crore. The EBIT also coming in at 1,477 crore, in line with expectations. EBIT margin was slightly better at 11.1%.
1.4% and a YOY decline of 1%. From an INR perspective, the revenue stood at 13,351 crores compared to 13,384 crores in the previous quarter, a decline of 0.2% on sequential basis on account of INR appreciation against US dollar, and a 2.7% growth on a YOY basis. Our EBIT dollars grew by 30% in USD and 34% in INR on a YOY basis. EBIT margin was at 11.1% versus 10.5% last quarter. Headwinds from a margin perspective during the quarter included seasonality of our Comviva business, higher visa costs that we see in this quarter, and lower utilization based on revenue headwinds. These were offsets by savings from Project Fortius, operational levers such as favorable offshore mix, the G&A optimization, including continuous progress made on integration of portfolio entities and other levers contributing to cost efficiencies. Our effective tax rate for the quarter is at 30%. As you may recall, the previous quarter we had one-time tax refunds which normalized this quarter. We expect the tax rate to be levelized at 27% for the year. Our profit after tax PAT for the quarter was at $133 million, a year-on-year increase of 30%. In INR terms, the PAT was at 1,141 crores and a PAT margin of 8.5%, an expansion of 200 basis points on a YOY basis. Our return on capital employed stood at 23.8% for the quarter, reflecting a sequential improvement of 120 basis points. On a YOY basis, the ROC improved by 600 basis points, driving enhanced profitability and disciplined capital allocation. We remain focused on sustaining capital efficiency as we work towards our stated F27 target. We generated 86 million of free cash flow during the quarter, which is lower, reflecting the usual seasonality that we see in the first quarter of the financial year. This was also impacted by a 7-day increase in DSO, primarily due to timing-related collection delays and further affected by cross-currency movements. We expect this to normalize in the coming quarter and remain focused on improving our working capital efficiency, which we've delivered quarter on quarter consistently for the last 3 years. As of June 30th, our hedge book stood at 1.64 billion compared to 1.96 billion in the previous quarter. We've adopted a more prudent approach, particularly in respect to entering long-term hedges, reflecting the current volatility in the global currency environment. Based on the hedge accounting, the mark-to-market loss for the quarter was 9.3 million, out of which 3.9 million loss was taken to P&L and the 5.4 million went to reserves. Our total deal wins for the quarter stood at 809 million, reflecting a growth of 44% on LTM basis. As Mohit highlighted earlier, we continue to improve our deal win ratio, which is a testimony and a trust the clients are placing in us in terms of our value proposition. More importantly, these wins are broad-based across multiple verticals. We made a good progress over the past few quarters as a part of our margin improvement program. This is driven by a resolute operational strategy, focus on profitable growth and disciplined execution. As we shared during the last quarterly update, we remain on track to achieve margin improvement in line with our stated goal of F27. With this, I now hand it back to Abhilasha for next segment.
Thank you, Mohit and Rohit. We will now conclude the stream for those of you who have joined us on social media. Thank you everyone for joining us. We will now open the conference for a quick Q&A session for media friends who've joined us virtually as well as present here. We'll be taking questions alternately, so those of you who have joined us virtually, please post your questions in the chat box. We can take the first question here. If you can just state your name and the name of the publication, someone will come on and hand over the mic.
Hi, this is Aishwarya from NDTV Profit. So first question is based on the US market. Management has guided for 15% for FY27. Currently, the margin stands at about 9.6% as per FY25. What does the road ahead look like for Tech Mahindra?
I'm happy to tell you that we hit 11.1 this quarter. So steady progress, as Rohit mentioned, for 7 quarters running, and we remain confident that we will very much meet the 15% benchmark that we have set for ourselves for FY27. While we did see a slowdown in certain parts of the US business, specifically on a year-on-year basis, the auto business, or some slowdown in the high-tech, we did see growth in other parts, right? We saw growth in our Europe portfolio, we saw growth, continued growth in our Asia Pacific and Japan businesses. We remain confident about the long-term goals that we have set for us. Not also long-term now, it's 18 more months to go.
All right. Hi, Mohit, this is Sumita from ET Now. I have a couple of questions. When you say that, the macro environment remains uncertain, but when you talk about the deals, will you be able to, or will the company be able to sustain the momentum?
We certainly think so. Look, I think over the past few quarters, we have been reporting steady and increasing deal wins. We do see a robust pipeline. We do see the fact that we are able to convert these deals. But as we've always shared, our focus is very much on doing profitable deals rather than doing deals for the sake of reporting. But for now, at least for the next couple of quarters, we do see a consistently strong pipeline, and we continue to remain confident about our ability to close them out.
Just one more question on trends in client addition, especially in the $100 million, $50 million client buckets. Do you anticipate a sustained momentum?
Well, look, I think, like we said, we have added 2 $50 million clients over the past year. Again, I think on the whole, and we've done this analysis obviously on an ongoing basis, our largest clients are growing much faster than the company average, and so we remain confident about our focus on our largest clients and our opportunities to grow them.
That's right, a mixed quarter for Tech Mahindra, while margins hold steady and EBIT have in fact met expectations. Let's take a quick break right now, but more on the other side of this very short break on Profit 360.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, it's a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. DLF is making a high-profile comeback to the Mumbai market with the launch of its premium residential project, the West Park Phase 1 in Andheri West, in partnership with Trident Realty. This marks DLF's first large-scale residential development in Mumbai over a decade, signaling its renewed focus on the city's luxury segment. Anushi brings in more details on this.
Stock in focus in the real estate space would remain DLF, and this is on the back of its big project launch in Mumbai, marking its re-entry into the region again after almost a decade. Now DLF is set to launch the West Park Phase 1 project tomorrow is what we are looking at the timeline, and this is with a build-up area of 57,000 square feet. The company in partnership with Trident Realty for the same, and this project is to be expected to be completed by June 2032. Now this project is being developed in multiple phases, which includes 416 flats across 4 towers in the current phase that we are looking at, starting ticket size being in the range of 6.5 crore. Now this marks an interesting debut in its MMR region again, since its earlier history as well. The company had acquired a 17-acre mill land plot for 700 crore in Lower Parel in 2005, but because of the global financial crisis and other factors, it had to eventually sell this land parcel to Lodha developers in 2012 for a consideration of 2,700 crore. Now with this, the company did also point out the overall picture in terms of where the pre-sales and the launch pipeline could be looking like. If you look at the DLF Privana North, it recorded around 11,000 crore sales. With this Mumbai launch, it expects over 2,000 to 2,500 crore of sales. So with this, we are seeing a strong guideline in terms of where the pre-sales number were. FY25, the number was 21,000 crore. This is the expectation that is there for this FY26 as well, 20 to 22,000 crore. So whether there would be an upward revision in the guidance is something that we should be watching out for. As far as where the launch pipeline is concerned, 17,000 crore is the number that we are looking at, which includes the likes of DLF Privana North, Mumbai as well as Goa as well. So this is the overall picture that we are building in for DLF. It's an interesting day we should be watching out for, considering its entry back in the Mumbai market.
Moving on, Indira IVF is making another attempt at its IPO, having confidentially refiled its draft prospectus with the SEBI after previous withdrawal earlier this year. NDTV Profit had earlier reported that the withdrawal came after SEBI flagged concerns on founder Ajay Murtia. My colleague Agni joins us with more details on this.
Right, so Indira IVF has confidentially refiled for its IPO yesterday. Now remember, this is 4 months after the company originally withdrew its IPO plans, which was again filed through the confidential route. Now the company had told us in an email response back then that they had withdrawn the IPO due to market conditions, and there was no clarity as to when the IPO will be reattempted again. But NDTV Profit had brought to you that the IPO was probably withdrawn after the SEBI scrutinized a release of a Bollywood movie based on the founder Ajay Murtia, the biopic which was called Sanam Teri, the biopic, and remember, the biopic had been produced by Ajay Murtia's sons, and SEBI was of the opinion that a biopic promoting the founder and the company at a time when the company's financials and company's business structure was not disclosed to the public was too much of a coincidence. With the heat of the SEBI on the back of the company about an ill-timed movie on the founder, the company finally decided to withdraw its IPO 4 months ago. This was again brought to us by sources, and today we see the next step of it going forward at a time when the primary market is buzzing with activity. Remember, the company was originally looking to raise around 3,500 crore through the IPO, and we don't know yet how much of that will be materializing in this second attempt, but as procedure, once the confidential papers are approved, the company has to file an updated DRHP publicly. So do stay tuned, as and when that happens, we will bring you more updates.
Right, Agni, thank you so much for that update. We'll continue tracking the journey of Indira IVF as they're eyeing another IPO. Now, moving on, a full-page ad in a Hindi daily has sparked a market watchdog alert. NSE has cautioned investors against a Delhi-based unregistered advisory firm that's been running unauthorized stock market services for 16 years. I'm sorry. The firm claimed wild intraday margins of up to 500x, zero brokerage and astonishing returns, all without SEBI registration.
boards of the country, National Stock Exchange has come out with a circular saying and cautioning the investors against, getting lured by schemes such as the ones shown in a Hindi daily newspaper sometimes back. Now, this release came after NDTV Profit ran a story about several falsified claims made by unregistered entity called Trading Dost in a Hindi daily. Now, we must understand that NDTV Profit also had a telephonic conversations with the representative of this particular unregistered firm, and we got to know that this is something that is operating from Delhi, specifically the Shahadra region. We were also told by those representatives that they have been running the operation since the last 16 years, and this is not something that they are only doing. It is something that is being done by thousands of entities both in India as well as globally. Now, we must understand that it is after this particular report that NDTV Profit came out with, talking about how many years this has been going on for, and that several other players are also into it, and looking at the audacious nature of the front page ad that was run in a Hindi newspaper, the National Stock Exchange, the leading boards of the country, also came out with a circular yesterday night talking about how investors must protect themselves by not engaging with such schemes. So let's see how further developments on such cases roll out, because as we exclusively reported some time back, several YouTube channels, Telegram channels and other social media platforms are used to lure investors into such schemes, and it is something that the SEBI as a regulator is also investigating and is also concerned about because of the enormous volume of such instances. So let's see how the regulatory crackdown on these things continue and how many of more such stories we can look at, because clearly volume is the issue.
Right, Charu, thank you so much for that update. We'll continue tracking this story and bring you a detail. Don't forget to catch the story at 7 o'clock later this evening with all of the updates. Moving on, in a significant development following the global controversy over Prada's Kolhapuri-inspired sandals, a high-level team from the luxury fashion house has arrived in Kolhapur, Maharashtra today to initiate groundwork for a potential collaboration with local artisans. The visiting group, comprising Prada's core technical team, is currently in the city to evaluate the traditional production process of Kolhapuri chappals. Prada designers are expected to spend the evening meeting with artisans, cooperative heads and stakeholders to understand the intricacies of the craft. The team departs tomorrow morning. Let's listen in from Lalit Gandhi from Maharashtra Chamber of Commerce and a Kolhapuri chappal artisan.
कोल्हापुरी चप्पल की जो उनके रैंप वॉक के बाद कंट्रोवर्सी तैयार हुई, उसके बाद में महाराष्ट्र चैम्बर ऑफ कॉमर्स ने प्राड़ा से संपर्क किया था कि ये कोल्हापुरी कला है, ये भारत की कला है, इसको उन्होंने एक्नॉलेज करना चाहिए। उन्होंने लिखित स्वरूप में इसे मान्य किया, एक्नॉलेज किया, और उसके पश्चात ये कोल्हापुरी चप्पल कोल्हापुर के कारागिरों से सीधे प्राड़ा खरीदी करे, जिसका फ़ायदा यहाँ के कारागिरों को। ऐसी भूमिका चैम्बर ने उनके साथ हुई वीडियो मीटिंग में रखी थी। प्राड़ा ने हमारी विनंती स्वीकार करके आज प्राड़ा की ग्लोबल जो टेक्निकल टीम है वो कोल्हापुर में आई है। उनके ग्लोबल डिज़ाइन हेड है फुटवेयर डिवीजन के, उनके ग्लोबल टेक्निकल हेड है, जितने भी उनके टेक्निकल डिपार्टमेंट के ग्लोबल चीफ है वो सारे आज कोल्हापुर में मान्य किया, एक्नॉलेज किया, और उसके पश्चात करके आज प्राड़ा की ग्लोबल जो टेक्निकल टीम है वो कोल्हापुर में आई है। उनके ग्लोबल डिज़ाइन हेड है फुटवेयर डिवीजन के, उनके ग्लोबल टेक्निकल हेड है, जितने भी उनके टेक्निकल डिपार्टमेंट के ग्लोबल चीफ है वो सारे आज कोल्हापुर में 6 लोग यहाँ आए हैं। और ये पहली बार ऐसा हुआ है कि प्राड़ा जैसा ग्लोबल ब्रांड ने कोल्हापुर जैसे छोटे शहर में आके ये चप्पल बनाने वाले कारागिरों से सीधा संवाद करने का प्रयास किया है। ये उनके चप्पल बनाने की प्रक्रिया का मुआयना कर रहे हैं, उनके प्राड़ा के टेक्नोलॉजिकल जो रिक्वायरमेंट्स है उस हिसाब से ये चप्पल कैसे बन सकती है इसके बारे में वो यहाँ के कारागिरों के साथ संवाद कर रहे हैं।
हमारे कोल्हापुरी चप्पल कैसी बनती है वो भी हमने दिखाया। हमारे जो कुशल कारागिरी है उन्होंने सब दिखाया कि चप्पल हम कैसे बनाते हैं, कैसे सिलाई करते हैं, और उसका पहतावा कैसे है, उसका सोल कैसा है, उसका अंगूठा कैसा है, और उनके चप्पल में जो पहनी हुई थी वो हमारी कोल्हापुरी है, वो हमने उनको बताया। और उनको हमने हमारी VIP डिज़ाइन भी दिखाई, जिसको हम कार टू कारपेट बोलते हैं, जो कि कार में और कारपेट पे पहनी जाती है, एकदम लाइट वेट आती है, फोल्डेबल रहती है, और पॉकेट में भी हम रख सकते हैं। तो उनके पैर में पहनाने के बाद उनको वो अच्छी लगी और उन्होंने वो एक चप्पल खरीदी भी। और हमारी यही अपेक्षा है कि जब भी आगे काम चलेगा तो प्राड़ा हमारे कोल्हापुर से वो चप्पलें खरीदे और उनके प्राड़ा शोरूम पे वो सेल करें और कोल्हापुर का नाम हमारे जग भर में जाए।
And there's another update coming in. The Bombay High Court has dismissed a public interest litigation or a PIL against Italian fashion house Prada for its alleged unauthorized use of these Kolhapuri chappals. My colleague Charu, who has been tracking the case very closely, now joining me live with all of the details. Charu, we understand that the bench questioned the locus and statutory right of the advocates who had filed the PIL, but take us through the background and give us the context of this entire case.
So, look, we have to understand that under the trademark law, we have different kinds of trademarks given to different kind of commodities, services or products. For example, there are marks given to certain businesses, those are called trademarks. Then we have symbols, those are also trademarks. But if something is grown or produced or made in a particular geographical location, which has other, geographical connotations also for that particular place, usually a geographical indication tag, that is a GI tag, is given to that product. For example, we can consider champagne, being a geographical indication tag product, because if it is produced anywhere else in the world, it will not be considered a champagne. Similarly, we can also consider scotch that is produced in Scotland. If it is produced anywhere else, it is going to be, called by some other name. Similarly, Kolhapuri chappals are an integral part of the Indian society and have been, famously produced or made in our country in a particular region. And considering the fact that they were produced or, hyped about, made and crafted in India, in the Maharashtrian parts of the country specifically, the petitioners went up to the Bombay High Court, trying to save the GI tag in a way. Now, what happened here is that the Bombay High Court's order is not out yet. The High Court has dismissed the PIL questioning the locus, but the reasons for dismissal are going to be, coming out in a detailed order soon. So, we'll know what are the specific reasons. As far as locus is concerned, locus is having the right or having the nexus to go about a certain case if you are the party who can file such a case. So these are some legal questions. These do not necessarily define whether it can get a GI tag or not, or whether it can be protected or not, but these are procedural things that the court has to deal with.
Right, Charu, thank you so much for that very comprehensive yet simple explanation of that case. Unfortunately, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Right now across the world, even Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you answers to all of your personal finance queries, and today I'd like to talk to you about returns. If you're using an application to invest, then you've probably seen the returns that your portfolio has generated in either green or red. Of course, if it's red, it's losses, but then hopefully you're experiencing a sizable amount of gains. But that's described in green, and you see something called XIRR. And for those of you that are wondering what this is, it's not a simple calculation of your return. It's actually the Excel formula that talks about internal rate of return. Now, I don't want to scare you away, but I will tell you that we're going to talk about the internal rate of return, we're going to talk about rolling returns, and we're going to talk about point-to-point returns so that you can make sense of your portfolio. And also, when you study the various schemes that are out there for you to invest in, you can understand the best parameters to look at to decide before you invest in any of them. Joining me to talk about all of this is Prableen Bajpai, who's the founder of FinFix Research and Analytics. Prableen, thanks so much for taking the time and for agreeing to do this. It's going to be educational for all of us, I'm sure. So let's first start talking about, if you don't mind, let's talk about internal rate of return, because I think a lot of people look at it and they don't necessarily understand what it means. Can you explain what it is?
Sure. So Alex, there are definitely different parameters which we use for calculating the returns for mutual funds. And I think choosing the right parameter is very important because so that we omit all kinds of bias which is there while taking our investment decisions. So internal rate of return or the extended internal rate of return is basically a formula which takes into account periodic transactions as well. So majority of the other returns, which we'll subsequently discuss, give us a point-to-point sort of a return or gauge the returns on the basis of where do you start and then where do you stop, and they do not cover the journey. So it's really important that we use a parameter which covers the journey, because there will be different transactions. For example, an SIP going into your account every month, there may be a periodic withdrawal. So this XIRR takes into account all of those transactions and then gives us the compounded return overall for the return journey. So it is one of the best methods to calculate or to gauge your investments, especially SIPs, because they are not having the same, every SIP will have a different lifespan. For example, over a 10-year period, if you're doing an SIP, some SIPs will have a lifespan of 3 years, some will have a lifespan of 9 years. So it calculates each and every point, the compounded return, and then gives us the consolidated picture for all of those transactions. It can also include lump sums which were added during your investment journey, as well as will take into account any redemptions which were done. So it's a holistic picture. And I think one of the good measures while choosing which fund you want to invest into, but of course not the sole parameter.
So just to, and just to elucidate this point, and I'm sure you have live examples, I want to throw out a hypothetical example at this point, right? So because you had the broader market indices, and here I'm talking about the mid cap 150 and the small cap 250, which in the start of the year fell by 20%, and then they recovered by 20%. So if you had a lump sum investment that you made in January of this year, then chances are that that has not grown by very much. It must be more or less where it was at the start of the year. If, however, you had an SIP, then your XIRR in that situation, or your internal rate of return, would be different, because you have installments that are coming every month, and you capture both the downside as well as the upside. Is that the right way to look at it?
Actually, Alex, honestly here, because we are looking at compounded returns for
so
all these different time periods.
More than a year.
Yes. And in fact, Alex, even after a year, sometimes it's not a, it can give us slightly higher or inflated numbers, basically. So I would say after 1.5, 2 years is when the XIRR starts to look more stabilized. And I think that is when investors should be focusing on it, not less than 1 year period.
Okay, so then let me change the hypothetical, right? So assume that you had a lump sum investment that you put at the start of 2023, and we're now in 2025, mid 2025. And then you didn't do anything to that, but then midway through you started an SIP, you pulled some money out. It takes into account all of those transactions that you've done and gives you a blended amount. So in a situation, your original investment must have given you 10%, but in between, with the markets going up and down, you could actually have gotten a 12 or 13% XIRR as well. Is that fair?
Absolutely, absolutely, Alex. So basically, it's the compounded return for every transaction that we are making. So it will take into account the timing and the amount of cash flows which are added or redeemed. It will reflect the actual returns experienced by the investor. That is the most important thing. When you're calculating your XIRR, and it is your own investment, for example, you have an investment, let's say in a flexi-cap fund, and you've held it for a 5-year period. Your returns will look different from any other person's 5-year returns for the same scheme, because his investment period may be different from yours, right? It can be starting from 18, let's say, till 23. For me, it may be starting from 2020 to 25. So XIRR is an amazing tool for knowing your own returns and, making that comparison within your own portfolio, how your different schemes are doing, rather than comparing exactly different schemes. Of course, different schemes will also, over a same time period, give you an estimate how the returns look. But it's an excellent tool for gauging your own investment journey.
And funnily enough, Prableen, and people have studied this as well, the difference between having an SIP on the 5th of the month versus the 25th of the month, does that throw up a difference in the XIRR at all. And there's not a dramatic difference, let's point that out. But you've identified a few schemes to talk about, and can you tell us about them?
Yes. So, there are 4 different measures, Alex, which we'll be discussing. So, in terms of XIRR, if you're looking at, and let's pick the 5-year returns. So, I've taken 4 flexi-cap funds, HDFC, Motilal, Parag Parikh, and SBI. So, on a 5-year basis, the scheme which tops is HDFC flexi-cap with about 24.98% returns, and the lowest is 14.83 by SBI. So, of course, within the same category, it is giving us an estimate on how the 5-year SIP returns look. 10-year returns are slightly different. HDFC becomes number 2. Parag Parikh goes to number 1, which was number 3 on a 5-year basis. And Motilal Oswal Flexi Cap comes at number 3. But like we'll be talking about point to point, that is where, in the short time period, for example, a scheme like Motilal actually tops the chart. So that is why, gauging and analyzing all these different returns becomes really, really crucial.
About point to point next, because this is what a lot of people look at to analyze whether or not a scheme should be invested in. And what you've just pointed out, the winners in the recent past become front and center. People tend to say gravitate towards that.
Yes. The recency bias and absolute returns are our favorite, Alex. So to explain, the point-to-point or absolute returns is, I think, what most of us love to see, especially when it comes to real estate. For example, I probably, like a 50 lakh apartment becoming a 1 crore apartment, you're like, oh, wow, it's 100% return. And you totally miss out on the time period. Whether it took 5 years or 50 years for that return to be generated, that is totally missing from point to point or absolute returns. So it's a great tool for gauging the investment, but for a period less than 1 year. Because 1 year, we are not looking at compounding. So if you want to see what is the recent performance, how did the scheme perform during a certain dip, or how has been the recovery during a short period of time, Alex, this is the go-to instrument. Then absolute returns is definitely great. But if you're trying to see your returns over a longish time period, then absolute returns is a big no. So if we are looking at the formula here, it's like the ending period value minus the beginning period value and divided by the beginning period value, the basic formula what we studied during school. And for a scheme, for example, HDFC FlexiCap, if we just look at the absolute returns over the last 5 years, then the NAV actually went up from 570 to 2171. So it's like a 280% absolute return. And that is why we don't look at absolute returns over 5-year period. This is over a 5-year period journey. But if you're looking at the 6-month period, for example, HDFC 6-month returns are 11.83. Motilal here becomes 14.17. So it becomes the topper in terms of absolute returns in a shortish time period, 6 months. Parag Parikh is only at 7.58, which was leading in terms of XIRR, and SBI now becomes number 3 with 7.79% returns. So it ignores any sort of fluctuation which happened during this time period. So no interim, importance given to what volatility happened, what sort of interruptions happened, doesn't account for cash flow in and out, and doesn't take into account the time factor.
Yeah, absolutely. You said it. And those winners and losers on a yearly basis will change quite dramatically based on the kind of tilt that a fund manager has towards one particular theme, and that is quite evident when you look at a patchwork over a period of time, Prableen. So the point is well made. Let's also talk about compounded annual growth rate, and that simply gives you a sense of how a scheme is done on an annual basis over a period of time, right?
Yeah, absolutely, Alex, you said it. And, just to go back to my example of real estate, I said that a 50 lakh apartment becomes 1 CR, it's like 100% absolute return. But Alex, because the time element was missing from absolute returns, let's just, add and introduce time here. So if I made the same returns over a 6-year period, then my CAGR becomes 12.25%. But if I made the same 100% absolute returns over a 10-year period, then my CAGR only becomes 7.18%. And that is the kind of difference time can actually make. And that is why we give so much importance to time, because returns is one thing. In what kind of a time period those returns were generated is equally important. So it's sort of an annual return that you get an estimate of that, okay, maybe over a 5 or 10 year period, this is the roughly annual returns which are made by CAGR. So it is taking into account the time element for sure. But again, the beginning and the end date remains very important. Something which is totally taken care of by the XIRR, what we had discussed earlier. So in this, again, beginning and ending becomes important. But it still gives us a standardization, a basic formula to estimate and compare different investments. And I think one thing which must be mentioned, that for most of the fact sheets and returns, Alex, that we see for mutual funds, if it is like 1 year, 3 year, 5 year returns, then CAGR is what is put there, the annualized returns. And when it is lesser than 1 year, then we are given the absolute returns. So it's a good method, but again, it is not taking into account the journey, the investment journey, if there are additions and deletions of investments during that time period. And just to give an estimate on the returns, for example, over a 5 year period, HDFC has given us 30.56% returns. SBI has given us 20.96. Over a 10-year period, when we are again, because here the returns are again dependent on the beginning and the ending period, HDFC becomes 16.74, SBI